द नेशन।
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Good news for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you.
Hello and welcome. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri. With me is Mahima Shajani, and over the next hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that is flashing on the top of your screen. There is a WhatsApp number. You can also call us, speak to us directly, and give us your stock-related queries on the number that's also flashing. So that's the landline number. But it's going to be a very interesting session today because we've seen for the markets yesterday that the last hour bought some buying back territory. If that story is continued, let's quickly take a quick check of the markets before we take all your stock related queries. The Nifty 50 yesterday was hovering around the 25,300 mark and crossed that because of the last bit, but we're back at that level now, up almost 15 points. So very neck and neck as we start Ask Profit, and we'll keep monitoring that over the next hour or so what happens with the index. When you look at the heat map for the Nifty 50, That's the other key one. Overall, at the start of the trading session, not too many wild moves for the Nifty 50. We saw this is of course the sectoral index, but let's quickly first look at the Nifty 50 heat map for the stocks. The 50 stocks for the Nifty. DRL is up almost 2.6%, so is Hindalco, Asian Paints as well as Tata Steel. That's the top 4 to 5 gainers for the Nifty 50. On the downside though, Eternal, yesterday was when the stock was in focus because of its results as well as the resignation of Dipinder Goyal. Post the initial 6% uptick, we've seen selling and that has continued today as well. Indigo, SBI Life, Power Grid are some of the other counters that are down as well. The sectoral heat map now for the Nifty will give you that perspective across sector, what's happening. We've seen largely that the metal index has continued to be an area of strength for the markets, and today as well it's continuing to do so. I'm sure we're going to get some queries on Hindustan Zinc, copper as well. Barring that, the healthcare, the MNC, the Nifty Auto also giving some gains, while the realty is continuing its downward momentum as well. But Mahima, overall in the broader markets, is it similar to the benchmarks where it's just a very lateral moves of about 15 to 20 points today?
Yeah, absolutely. I think the mid-cap 150 is still holding in the green as we speak, just up about 0.1%. But the small-cap 250 again in red. After 2 days of seeing those gaining streaks, it's back in the red today. And not doing much, just 20 points down from where it started. But with regards to where some of these specific names are concerned, let's try to pull up the BSE 500 before we start taking in your queries. You have counters like Tanla Platforms, which is up 11.7% on the back of its earnings. Home First Finance again on the back of its earnings, up 6% as well. Something like a DCM Shriram up 5.9%. Hindustan Zinc on the back of approving raising of funds, up almost 6%. Followed by something like a Bandhan Bank, Nalco, as well as Ashok Leyland seeing gains of 4% each. But on the flip side, you have counters like Minda Corp, Poonawalla FinCorp, as well as Suntech Realty, Kena Construction, Kajaria Ceramics, and Mastech, all seeing downtick of about 2 to 4% each. So that's with regards to where the broader end of spectrum is concerned. Quickly, if we can try to pull up the advanced decline ratio as well, because that will give us a picture as to how the overall market sentiment is looking like. It's been wavering throughout the trading session so far. Right now, you have around 1,000 odd advances versus around 1,300 odd declines on the broader end of spectrum. But with that, let's also welcome in our guest for the day, Sameer Dalal of Natralal and Sons Stockbrokers, and Ajit Mishra, SVP Research at Religare Broking, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll take up the first question, which is from Prabhu, who's writing us from Bengaluru. He's got Tata Power, 433 shares at an average buying price of 412. He's already sitting on a loss of 28,000 is what he's saying. He wants to know if he can hold or accumulate more, or maybe book his loss at the current levels. Sameer, what would you recommend?
Yeah, so I continue to believe that this is a stock to accumulate. We believe that the power sector is going to grow. Tata Power is there in the thermal power, plus they've got a good foray into the renewable energy. That's the solar panels. They set up the solar rooftops. They're doing a lot of work in that space, and we believe the generating capacity for them will continue to increase. Their solar business will continue to grow. So there is upside. Right now, the markets are going through a bit of consolidation, and this stock has been no different. But if you look at it, it's fallen far less than a lot of the other stocks. And even given the fall that you've had right now, I think this is a good time to keep adding on. So my advice would be add on to this a little bit more.
Got the view, Sameer, but let's go across and answer our first caller for today. It's coming in from Hyderabad, and Dheeraj has a stock query for us. Dheeraj, very good morning. Welcome to Ask Profit. What's your query? Hi Dheeraj, am I audible to you? Well, we seem to have lost him, but let me take his stock query because it's on Olectra Green Tech. He's bought it at 1,026, holding 50 shares. He's not mentioned his time frame, but Ajit, good morning and welcome to the show. Anything on Olectra Green Tech? It's been a volatile counter, an expensive one as well on the price to earning multiple. On the charts, Olectra Green Tech, what would you recommend?
Yeah, good morning, Puneet. Good morning, Mahima. So what we are seeing that after this attempt of recovery from roughly around 1,000 to 1,600 mark, we have almost surrendered the entire gain in the recent month. And again, we are back to this major support area. Since he's bought it at closer to the current levels, my recommendation is to reduce the position and wait and see whether the stock manages to hold this 980 area decisively or form some base for any sign of reversal. So as of now, indications are in the favor of further decline. The prudent approach is to exit at current levels and wait for sign of reversal.
Okay, all right. So that's the view coming in on Electra Green Tech. But moving on to the next question, which is from Lalita, who's writing us from Bengaluru, asking whether this is the right time to enter into something like a Kalyan Jewelers. If we can try to quickly pull up the charts. In the past 2 days, we've seen a free fall in this particular counter. Today, some gains are being seen, just up by about 1%. But Ajit, with regards to where the technical stand, do you think buying on the dips should be the right strategy right now?
In fact, it's a very sharp decline, Mahima. This week, we have lost roughly around 20%. We are retesting, in fact, and we have breached the long-term averages on the weekly chart. So it's definitely not a good sign. Volumes are high, on the higher side. It's been almost like, kind of 1 year long consolidation, which has ended with a breakdown. So I doubt that it's going to stop, around the current levels. So maybe we can see the stock drifting towards 325, 330 area in the coming weeks. So my recommendation is to avoid any fresh position. In case if you have any existing position also, 370 should be the stop, and use any recovery to reduce your position.
Got the view, Ajit. And Ajit, you're definitely loving the yellow color as well. It's popping on the screen today. But let me go across and take the next query as well. Ajit, I hope you're continuing to maintain that trend, because then we'll get some more color, more pizzazz on Ask Profit. I know we already have Mahima, but we'll continue to do that as we speak. But the next query that we're getting is on Aarti Industries, and this one is a long-term question. Is what Dinesh from Coimbatore is asking this question. He's holding at 486. Currently holding almost 1,000 odd shares, and is sitting on a loss of almost 1.3 lakh rupees. So the question, Sameer, to you now, any view that you can offer Dinesh on Aarti Industries? Should he continue to hold, and if not, what would you recommend?
Yeah, again, continue to hold. I wouldn't suggest an add yet at the moment, even for averaging, for the simple reason that the chemicals sector entirely is going through a lot of pain globally. Yes, we believe that, eventually the chemical prices will start moving up. The dumping that's been happening from China will start reducing. But we're still not seeing early signs of that. What we've been reading and what we've been hearing from various places is that pricing power still does not remain with these chemical companies. Yes, they're increasing the capacity, so that capacity increase will definitely help them from the fact that the volume drive will get some operating leverage through. But I think it's a wait for a time being, till the sector starts seeing a turnaround, and still we think that prices now could sustain and sustainably move up. This sector is not doing too well, across the board. But if you're a contra investor and are willing to wait for a 3-year period, one can add on. But for the short term, for the next 1 year, our expectations are very muted on the chemical spec sector and Aarti Industries as well.
Right, okay, so that's the view coming in on Aarti Industries. We've got our next question from Satyan, who's a regular viewer and is asking about HG Infra. He's been holding this since the past 2 years and sitting on a loss of around 30% He wants to know if he can hold on this particular counter or should switch to something like an ITD cementation. And he's saying that this also he had bought at about 100 odd levels. Sameer, I'll stick with you for this one. What should be his strategy right now with regards to HG Infra? Should he shift to ITD cementation? Should he hold? Or would you recommend a third counter that he should go to completely?
Okay, so HG Infra, we don't have coverage on, so for me to comment on that is difficult, but I can tell you that, the infra space is something that should be held on to, for the simple reason that the government spends that are going to come through the budget are going to be quite good, because at the end of the day, government needs to ensure that the economy keeps ticking along at a faster pace. All of these companies will get orders and will grow, but I don't have a view on HG Infra. The ones that we like in the infra space are L&T, NCC at this point of time.
Got the view, Sameer. And the next question actually that we're getting is on Swiggy. Now, our viewer, Shrikant from Hyderabad actually is sending us this question, and holding shares at 328. So seems to be that he's bought in this particular downtick, asking if he can continue to hold this particular counter. Ajit, this fairish recent listing, but this has broken through some levels in this week, right? We've been talking about it at 390, 395, which is the IPO price. What would you recommend on this, on the charts for this one?
So Puneet, in fact, few months, in the past, we were seeing that the stock was attempting recovery. We were thinking about, and there were talks around it will close the gap that, we are seeing the valuation gap between Eternal and Swiggy. But it failed, to hold to those levels. And again, we are back to the record low zone. So since you bought it at very closer to the current price, and the stock is underperforming, if we compare it with the Eternal also, my suggestion is to exit at current levels and wait for any sign of decisive reversal again. Because in case if it fails to hold the previous swing lows, the record low zone, maybe we are heading for much lower levels, maybe around 270 to 50 zone also.
Okay, so that's the view coming in on Swiggy. And Puneet and I were just discussing, Samir, that if you are on the show and if you don't get a question on Solar and Wilson, then I think the Friday will not be fruitful enough. So we've got one. We're getting one question from Velvan, who's writing us from Oman. He's got 50 shares of Sterling and Wilson at an average price of 488. He wants to know if he can go ahead and hold this for the next 5 odd years. Should he average out at the current levels is his question. Samir, what would you recommend?
Yes, I think, you're right. Every week we get the same question and my view doesn't change. Yes, one should average on. I have a very strong buy recommendation on the stock. We believe that over the next 2 to 3 years, I wouldn't be surprised to see, I'm sticking my neck out and saying this, I wouldn't be surprised to see this stock in 3 years in a 4-digit number. So you can imagine the kind of bullishness I have on the stock.
Samir, I think this is the first time you're telling us that you could see 4 digits on Sterling and Wilson, and it's definitely a counter that's not well tracked as well in terms of analyst coverage. So your confidence coming in on this one, is it largely on execution or the pedigree of its promoter? Where is it coming from?
The fact remains that India is going to see a huge amount of capex in renewable energy. Sterling and Wilson is it's owned by Reliance Industries, and Reliance has a huge outlay for setting up green power. Now, Reliance, the beauty of it is that they make their solar panels in-house. So they will tell Solar and Wilson, which is their in-house company, on an arm's length basis, there will be some sort of structure which will be put in place to set up these huge plants for them. So we're talking of 5 to 10 gigawatts capacity over the next 5 years, for 5 years continually. So we're talking of 5 to 10 per year for the next 5 years. If even they are able to do 50 to 60% of that, you're looking at the turnover doubling from where it is. Right now, they're doing an 8,000 crore turnover. Next year's target would be about 12,000 crores. And if we look at it, and if the Reliance orders what we plan, I think are going to come through, we could see them doing a 20,000 crore turnover with very limited increase in operating costs, because theirs is a model where they use outsourced labor. They don't need too many people in-house. So the operating leverage is so strong that suddenly the profitability will increase. The ROEs will look fantastic. Growth numbers will look fantastic. And then people will be wondering why the stock is trading at such a cheap valuation. So, I'm happy to share my report and stuff with you guys, but these are the basic factors we think that will drive the stock price over the next years. It will take time because the Reliance order will come through maybe in the next quarter. But once it does, then you will see the traction and the turnaround in the company. So you have to just wait for it. Adani's already placed an order. Adani has an open order with them in the sense that more projects will also come their way. So for them, order is not a problem. It's just a question of getting the operating leverage to play out, which I think will start in FY27.
Okay, so that's comprehensive answer coming in with regards to where all of these names are concerned. But moving on to the next question, Ganpati from Chennai is asking this. He needs a view on Crompton Greaves Consumer. He's got around 2,000 odd shares at the levels of 300 rupees, and he's sitting on a loss of over 1.4 lakhs. Ajit, do you think the charts will recover anytime soon? Past 6 months, it's fallen over 32%.
That's true, Mahima. In fact, still there is no sign of recovery. In fact, in this week, we are seeing a fresh decline below the previous and very critical support zone around this 245, 247 area. So this indicates more pain ahead, maybe closer to around 220, 210. We might find support, but the overall tone looks bearish to me. So no point, sticking with the counter which is underperforming otherwise also, while the market, and in fact, we have multiple themes like, PSU banks, metal, which are still holding strong. So you can consider exiting at current levels and switching to the PSU's name like SBI, Bank of Baroda, or from the metal counters like Tata Steel and Steel.
Got of you, Ajit. But the next caller coming in from Telangana, and Kalyani has a stock query for us. Kalyani, thank you for patiently waiting by. Very good morning. What's your query?
Good morning to you all. I'm a regular follower of this program. I need the opinion of Mr. Samir Dalal on Dixon Technologies.
Okay.
I bought 10 shares 2 days back.
Okay.
At 10,600. Can I buy some more of these shares for long term?
Okay. Got it, Kalyani. And Kalyani, do you have, firstly, thank you so much for being a regular viewer. Appreciate your questions and you calling in as well. Do you have any other EMS players in your portfolio, or is it just Dixon Tech right now?
I didn't catch you.
No, my question largely is, do you have any other EMS company like Keynes Tech or Amber or Sirma, or is it just Dixon Tech? Okay, no other. Got it.
I have the regular tech.
Only Dixon Tech. Got it.
Wipro, Infosys. This is the first one I'm purchasing.
Okay, got it. Samir, on Dixon Tech, and we have been speaking about the EMS players quite a bit. We put out, a coverage on Dixon Tech that there are some expectations of guidance cut for FY26 because of the smartphone mobile volume bumps as well. Are you also of that opinion that there could be some cuts in guidance and that could have a further impact on stock, or the correction seems to be much more severe because it's gone from 60 times price to earnings to 40 now? Any view?
Yeah, so you rightfully put it that the stock has seen a very, very large correction, and a lot of this negativity that was priced around the Motorola order is put in the price, if you ask me. I'm not denying the fact that yes, if growth slows down, why should a company trade at 40 times and 60 times or whatever it is trading at back in the day? But what you got to look at is it a one-off? Is sales going to come back eventually? Yes, I believe it will. Is the EMS division, the Make in India, Atmanirbhar Bharat theme going to play out? Is more manufacturing of washing machines, fridges, TVs, laptops, mobile phones, which Dixon Technology caters to across the board, right? So they are one that does everything across the board. Plus, they are backward integrating. So they are going to be making the screens now slowly in India. So that will help them ensure that they get the product, plus they get better pricing and the profitability will increase. So we believe over the next 2 years, margins will improve. So after this correction now we are starting to see positivity from an investor point of view. If I buy today, I could make money. So yes, I say continue to keep holding. You've just bought it at this price. So if it corrects a little more, yes, please do add on. But just given the fact that it's 50 rupees below your price doesn't mean you need to add on right away. Look, the stock is going to go through a period of consolidation after such a large fall. It's not going to be a V-shaped recovery, especially because there is no immediate trigger to pull the stock up. But there are two kinds of investing, and I wanted to bring this point out. There are two kinds of investing you can do. One is momentum investing, meaning buy when the stocks are rising, which is what the technical analysts do. When you see momentum, you play along. But that is a trader's column. The investor actually plays a contra bet. So you buy when everyone else is worried and selling. And if the fundamentals of a company are good, if the cash flows are good, and if the growth prospects are very good, you will make serious money only being a contra investor and buying when the stocks are down. So I believe this is a good time to start accumulating Dixon Technologies.
All right, okay. Good time to accumulate Dixon Technologies, the view coming in from Samir. So that's with regards to where Dixon stands, but we have our next caller. Manav is calling us from Gurugram. Manav, hi, very good morning to you. I believe you have a question on DLF.
Yeah, hi, good morning to everyone. So today I have a query on DLF. So I have been holding on to 50 odd shares for the past 14-15 months at an average price of 720. and I have intention to, hold it for a little longer, like maybe more than 3 years or so. So just the results were out yesterday, but didn't got a chance to, look into in detail. So my request would be for Mr. Samir would be like if he can give us a point of view on DLF considering the yesterday's results.
Sure.
And would it be a good idea to accumulate more, and at what price would be the right price to add on?
Okay, sure. Manav, got your question and it's valid. Samir, I mean, just a first look of DLF gave us the view that overall pre-sales guidance was missed by, a large margin by the company, and probably that's why the street is not very happy. But just to understand, and I'll just combine this query with Aniket, who's also a regular viewer. He's asking whether this is the right time to enter into something like a DLF, or would you prefer Lodha developers over DLF? So I want you to give a combined view on both of these.
Okay, so first of all, let's talk about DLF since the question is directly linked to that. So yes, pre-sales were bad. Even I, Manav, unfortunately haven't gone through the results in great detail, but let's talk about the longer term story of DLF, right? Look at the land bank that they have in Gurgaon. Look at the development opportunity that they have in Gurgaon. I think that is phenomenal. Plus, their entire rental book continues to do well, which adds a lot of might to the like of DLF. So for me, the correction is a very strong one and a good buying opportunity. It's actually the correction in the real estate space has happened across the board. And the reason is people are expecting that there will be a slowdown in sales going forward. But at the moment, we're not seeing it. So DLF has given a clarification that I did read that they did stop some of the sales at one particular project or two particular projects because of certain changes in technical aspects of the development, which they say we will make back in the current Q4. So if they make that back, then I think the stock will rebound. So hold on. Now coming to whether you should look at Lodha. So Lodha is doing a lot of projects in Bombay. Doing extremely well. All of that stock is corrected nicely, looking interesting. But for me, if I want to make a play of a real estate play at the moment, I would do it in Equinox, which is Embassy Developers. It used to be Equinox. Embassy Developers now, it's called EMBDL. The stock price is about 60. The stock has taken a massive hit because there was one outstanding of the erstwhile India Bulls, where they had to pay 300 crores as a backstop for a particular power project, which of course is in court, but the claim has come on Embassy. Now, Embassy basically is a 10,000 crore book value company. So even if they have to pay this 300 crores, it's not going to change the dynamics for this company that much. But the projects that they're doing, which is in Bangalore, which are in Bombay, will lead to huge amount of growth in profitability. Going forward, the pre-sales are happening very nicely. And for me, this is a stock that could go back to its 120 odd levels in the next year once the clarity comes. So that would be my top pick in the real estate space.
Got it. Well, fair point, Samir, and has seen a massive correction on Embassy as well. But Samir, as well as Ajit and our viewers, it's time for a first round of the rapid fire in this edition of Ask Profit. Request you both to keep your answers on buy, sell and hold. Take as many queries in the next 2 minutes. The first one is coming in on Titan. Our viewers bought at 4,220. Should he continue to hold, Ajit?
Hold.
Okay, Bank of India is the next one. The quantity that the viewers bought is 650 and 111 is the buying price. Ajit, hold, sell or buy?
Book partial profit.
Thangamayal is the other one. Our viewer actually, Muralidharan, has bought at 3803. Ajit, should he continue to hold or buy more at this rate?
Hold.
JSW Infra is the next one. Sai Karthik from Dallas wants to know if this is a good time to add more considering a short-term perspective. Ajit, your view?
Wait for a dip towards 245.
Crompton is the other one. A short-term view is what Siva is asking. He's bought at 254 though, Ajit. Should he continue to hold?
Reduce.
Okay, Engineers India is the next one. Murli from Bengaluru wants to know if he can add more, reduce. Next 1 year targets is what he's looking at. Samir, your view?
Sorry, which was the stock?
Engineers India.
I would say sell.
Tata Motors Commercial Vehicle, Samir, our viewer Sanjay has actually bought it at 228, possibly because of the demerger. Should he continue to hold?
Yeah, I continue to hold. If you can, buy some Tata Motor PV also.
Okay, Transrail Lighting is the next question. Rajiv from Delhi wants to know if he can continue to hold this for the next 6 odd months or maybe buy more at the current levels. Ajit, your view?
Hold.
The next one that's coming in is on Gland Pharma. It's a stock we haven't discussed too much, Ajit. Our viewer has bought it at 1688, holding 32 shares. He's asking a 6-month target.
Hold with stop at 1640 and 1840, 1850 target zone.
Okay, the next is on BLS International. Jaya from Bengaluru wants to know if she can continue to hold this counter from a long-term perspective. She's bought at an average price of 324. Sameer, your view?
Hold on, buy some more.
Got it. Well, viewers, that's the end of the first edition of Rapid Fire, this edition of Ask Profit. Stay tuned, a lot more stock queries on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Welcome back to Ask Profit right here on NDTV Profit. The next question, and let's keep calling us viewers. We'll take all your stock related queries today. This one's coming in on Samman Capital. Now, Shankar actually is writing us from Dubai. He's holding 350 shares at 165. Asking what he could do, if he could, it's a good idea to buy more right now. Counters trading at 141. We have Samir, but let me also welcome in Rajesh Bhosle, the equity technical and derivative analyst at Angel One. Rajesh, very good morning. Welcome to the show. Your view on Samman Capital, is it a good time to buy more for Shankar?
So if he gets a dip around 133 to 130 levels, so that is a very strong support zone. During the September month, we saw sharp rally from this level. So as of now, the stock is on a strong support. But if he gets around 133, 130, that would be perfect.
Okay, all right. So that's we coming in on Samman Capital. The next question that we have is from Arni Agnihotri, who's writing us from Pune, asking about IGI. She's bought 1,500 odd shares at the levels of 319. Wants to know as to what the short-term charts are looking like. Rajesh, a very good morning to you. I'll stick with you for this one as well. IGI, what are the charts indicating?
So I'm not tracking this counter much, but overall the trend seems to be negative, continuously moving in a lower top, lower bottom formation. The next support would be around 280 levels. So if we can hold with a stop loss of 280, but on any bounce towards 330 to 340 levels, that should be taken as an exit opportunity, because we are seeing that any bounce towards 89 EMA is getting sold into. So as of now, long-term support is around 285 to 290 zone, and on a bounce exit around 330 levels.
All right, so that's we coming in on IGI. We've got our next caller. Kiran is calling us from Hyderabad. Kiran, hi. A very good morning to you. I believe you have a question on JSW Energy.
Yes, ma'am. Good morning, ma'am. My query is regarding JSW Energy. I'm holding 250 shares at 505 rupees, ma'am. I would like to know the short-term view. Today they are posting their results, so what sort of target could I expect in the next 2 to 3 months, ma'am?
Okay, Kiran, got your question. Rajesh, yesterday a caller, or I think a viewer did ask a question around the fact that, should you be buying before earnings? Is that the right strategy to do when you're trading? That is my first question to you. And secondly, with regards to the setup, with regards to where JSW Energy is concerned.
Before result, we need to see how the kind of price movement is. If prices are in a positive momentum, one can expect some positive news to happen. Similarly, if we see for the JSW Energy, yesterday there was a bullish formation of morning star around the previous swing lows. So as of now, if he's holding, can hold down, but keep a stop loss. There can be volatility amidst the result. 465, 460 seems to be the strong support, but on a bounce back, 510 to 520 seems to be stiff resistance, where the last week's low is there. So as of now, hold, but somewhere around 510, 520, we need to recheck the charts.
Good of you, Rajesh. But the next query that we're getting, it's an interesting one from Somik from Kolkata. And his question is that he's already holding 3 companies in the automobile space, M&M, Tata Motors, both PV and CV. So he's asking if it's a good time to add a two-wheeler name. And he's asking Samir if it's a good time to add Hero MotoCorp specifically. If not, any other alternate in the two-wheeler space that you would recommend is his question. So he wants to make his own personal automobile fund in that sense. What would you recommend?
Yeah, so Hero MotoCorp is a good option. I mean, if you look at it across the board, look, there are 5 companies which are large in size, which are trading. Bajaj Auto, TVS, Eicher, Hero Moto, and then now the recent sized one is Ather. Of course, Ola is also there, but Ola is going through its fair share of problems. So, you can maybe make a small investment in Ola just as a contra kind of thing. If which we believe will play out, which the turnaround happens, I think Ola is something that will do well. But Hero Moto is on valuation basis the most attractive from all of the other two-wheeler companies. Plus, they have a large stake of investment in Ather. So if you count that in as well, then the valuation becomes even a little better. So ideally, I would say 4,800 to 5,000 would be the right price to buy Hero Moto from a longer term perspective. But one can start accumulating given the fact it's come off from 6,000 odd levels to about 5,400.
Okay, all right. So that's the view coming in on Hero MotoCorp. The next question that we have is on Canara Bank. Surya Prakash from Visakhapatnam is holding 528 odd shares at the levels of 1110. He wants to know if he can continue to hold this for the next 2 odd years or not. Samir, would you recommend that?
There's no problem. Hold on, Canara Bank. It's doing very well in the PSU basket. It's probably after SBI has had the best performance. So hold on. I think the stock still has more upside to it, maybe closer to 180, 200 over the next 2 years.
All right. So just a correction. His buying price is 110, not 1110. Would you still recommend that, right?
Oh, absolutely. I mean, I knew it's 110. It couldn't have been 1,110 because I don't think the prices ever reached that.
Exactly, yeah. Okay, all right. So that's the view coming in on Canara Bank. The next question that we have is from Umesh, who's writing us from Thane, asking about Orion Pro Solutions. He's bought at the levels of 1449. Wants to know if he can hold or book loss at the current levels. Rajesh, what would you recommend on the charts?
So I would suggest him to exit on bounce because overall the chart structure remains negative, continuously moving in a lower top, lower bottom, and markets are a bit in weak sentiments. So as of now, exit on any bounce somewhere around 1100 levels.
Got the view, Rajesh. But another caller coming in from Mumbai itself, and Ramesh has a stock query for us. Ramesh, very good morning. Welcome to Ask Profit. What's your query?
Yeah, I'm holding 5,000 shares of Sagility. At 52.50, I purchased it. I want view for 1 year.
For 1 year, okay. And any other related IT name, Ramesh, in your portfolio, or is it largely Sagility right now?
No, I'm holding Mazgaon Dock also.
Okay, Mazgaon Dock, so non-IT, got it. Samir, for the next 1 year, Sagility, should he continue to hold?
I don't have coverage on this, so I request you to ask Rajesh.
Rajesh, on the charts, because it's done very well for its investors since the IPO price. Any forward momentum that continuing from here?
Yeah, so can hold on to it. Immediate resistance is at around 54 levels. That has acted as a stiff supply zone for the last couple of time. But once 54 is crossed, we can expect next traction towards 60 levels. For now, he can hold with a stop loss below 48 levels.
Okay, all right. So that's we coming on Sagility India. The next question that we have is from Umesh Gupta, who's writing us from Vadodara, asking about Azad Engineering. He's got around 300 odd shares at an average price of 1720. He says that he's suffering a huge loss, that is around 96,000 rupees, and wants to know if he can book loss, exit. What should be the move that this stock is expected in the next 6 months? Rajesh, what are the charts indicating?
So if we see prices have broken below its July swing low of around 1500, and with that there is a bearish breakdown. So possibly the stock can slip further towards 1300 levels where there was a bullish gap left. So as of now, in the near term, we expect the stock to slip toward 1300. So better he needs to exit.
Got the view. Rajesh, but another question that's coming in on Bank of Baroda now. Our viewer actually, Anil Bhalla, actually holds at 307 rupees per share. He's also a regular viewer, so thanks so much for sending in your query, Anil. He's asking, a short-term view till the budget, largely, Rajesh. So it's a very short-term view on BOB. What would you recommend? He's holding 10,000 shares at 307.
So very short-term view, but technically, if we see since last 2-3 weeks, the prices are in a consolidation mode. Overall, we have a positive approach on the PSU bank, so hold on to it. 297 is the key support, and once prices break above 310, which has been resistance recently, once that is crossed, possibly 320 can be expected. So very short-term view, consider this level in the near term.
Okay, viewers, time to slip into a very, very short break, but we'll be right back answering all your questions on the other side, so do stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Good news for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call on the number that's flashing on your screen up there, or you can also write your queries to us on WhatsApp. But we've got our next caller. Sheshadri is calling us from Hyderabad. Sheshadri, hi, a very good morning to you. I believe you have a question on Laurus Labs.
Yes. Hi, good morning. Currently, I'm holding 60 shares on Laurus Labs for 1,044.
Okay.
Is it good time to add more or shift to Gland Pharma?
Okay.
Or any other pharma side?
Okay. And this is from a short-term perspective or a long-term perspective?
Yeah. At least 3 to 6 months. I can hold 1 year also.
1 year. Okay. All right. Got your question. I'll take this up with Samir. Then Samir, Laurus Labs, would you prefer, or would you prefer something like a Glandmark Pharma, especially when Laurus Lab is expected to post its earnings today?
Well, so 3 to 6 months is a short term from a fundamental point of view. But what I can say is, look, the valuations for Laurus have moved up quite a bit. The company is being able to turn around and grow its profitability, but it's trading, if I'm not mistaken, at close to about 75 times trailing. And on projected basis, I think it's closer to about 66 or 65, which is quite expensive. So if you're expecting any major run up in the very short term, I highly doubt it. Longer term, yes, growth prospects are there, but you're going to get meager returns given the fact that you're paying such high valuations. So for me, at this point, it would, for a short term, 6 months would be a sell. From a longer term, I would like to look at it at closer to 800.
Got that view, Samir. But the next one is also a very interesting question, and this is from S Strategy actually, from Kolkata. He's holding 500 shares of Northern Arc at 220. And he's bought it a year back. Samir, do you have any coverage on the stock firstly?
No, we don't, unfortunately.
Okay, no worries. Rajesh, on the charts though, last 1 year has actually been quite strong, 37% uptake. But since IPO price 263, it's hovering around that level still. He's asking for a longish view. So if you can, on the charts, recommend something for Northern Arc.
Yeah, so if you see overall the chart structure, last 6 months has been in a consolidation phase, but in the past 1 month there is some traction from the lower levels, and in fact in the last 3 session prices have seen good traction, confirming a inverse head and shoulder pattern. So bias remains positive. On the lower side, if we see 260 seems to be a strong support base, and we expect the stock to move towards its recent highs of 290. Once 290 is crossed, we can expect a positional target of somewhere around 320. So as of now, hold on to it. 260 seems to be a strong support base.
Okay, the next question that we have is from Sunil, who's writing us from Mumbai, asking about Shakti pumps and wants to know the best level to buy that, and then short-term target and stop loss that you can expect from this counter. Rajesh, your view?
Yeah, so we did see strong traction during the December month where prices rallied from the levels of 550 to 790. Now prices are retracing, and the retracement level somewhere around 600 seems to be a strong buying zone. So 600 levels would be the levels to watch, and on the high side, 780 to 800 would be immediate resistance level.
Got the view. But the next one is coming in on Grow. Now, our viewer actually, Parth Jadhav, was actually holding 300 shares at 184. So he's currently sitting at a small loss. He's asking if he should, hold on or sell out currently. Now, Samir, I'm not sure if you have coverage, but in the capital market brokerage team, any top picks if not Grow?
So for me, Grow at the moment is a complete avoid. I would sell it for the simple reason we've been stating for a while that all of these companies, and 80% of Grow's revenue comes from transaction services, right? Anything that has to do with transactional volume, we think you are at a peak at this point of time. It's going to be very difficult in the next 6 months to 1 year to grow the volume significantly. For me, the right place to invest in the capital market still remains the entire mutual fund space. I think, look, if we assume a 12% just growth in equities over a longer term period, even if the funds, these mutual funds don't get additional money, but they're able to grow that 12%, their profitability will grow at a faster pace because you are charging your revenue stream on the money that you manage. So automatically the operating leverage play out. But you're also going to see growth in the space. So I'm not denying the fact it will be cyclical, where if the markets fall, you may see some redemptions. But from the next 5-year view, I think these stocks could all have 25 to 35, 40% CAGR returns. I'm talking. So our top pick in the space remains Nippon, followed by Aditya Birla, and then HDFC. We love ICICI and we love Canara, but we find valuations a little bit on the higher side for those two. So for me, this is the space. If you capital markets, if you want to make money, this is the space. Stay invested for the next 3 to 5 years will be fantastic.
Okay, all right. So that's view coming in on a lot of these names. But the next question that we have is from Nikhat, who's writing us from Bengaluru and asking whether this is the right time to enter into something like a JK Cement from a short-term perspective. Rajesh, your view?
So cement packs have been in a big burst since last few weeks, and JK Cement, if you see, there's some strong base around 5,300 levels. So as of now, wait, but if it comes around 5,300, that would be ideal level. And on the high side, 6,000 has been the immediate resistance. Once 6,000 is crossed, we are expecting strong move. But as of now, wait for a dip towards 5,300 to enter this stock.
Got the view, Rajesh. The next caller actually is coming from Mumbai again. Nishad has a stock query for us. Nishad, good morning and welcome to Ask Profit. What's your query?
Yeah, I want to know about Jyoti Labs. I'm holding 20 shares at 414. I'm currently at a loss. Should I average it out or should I just hold it?
And Nishad, did you enter this counter with a long-term view or a short-term view?
Yeah, long-term.
Long-term view, got it. Samir, on Jyoti Labs, he's bought it at 414 is Nishad, but currently trading at 250. Any view that you can offer?
I think, look, valuations for Jyoti Labs are quite decent, if you ask me. Yes, the FMCG space is going through a bit of a tough spot at this point of time. They are a smaller player, more niche, but their growth opportunity obviously remains a lot stronger because they are more of a regional. As they become more of a pan-India player in a larger way, we think there is opportunity. 20 times earnings for an FMCG company is always good, given the fact that the others are trading at 45, 50, 55 times. I think this is one counter you could probably hold on to for a little longer and see how things go. We think there is upside to this stock.
Okay. All right. We've got our next caller. Mohammed is calling us from Bengaluru. Mohammed, hi. A very good morning. I believe you have a question on Schneider.
Hi, good morning to you all. I have 600 stocks, shares at 641.16. I need fundamental and technical view on this.
Okay.
And what?
All right. Okay. Got your question. I'll take this up with Rajesh. Rajesh, what's the view like on Schneider?
So last year during the May month, there was a sharp rally from the levels of around 560, and then the prices moved towards the 1000 level. Yesterday as well, the prices took support around those levels. There was a bullish pattern known as bullish kicking. So as long the recent lows of around 570 is held, we expect there can be a move. Possibly 720, 740 can be expected. So 570 would be crucial going ahead, and 720, 740 would be the immediate next 6 months target.
Well, viewers, it's time for a second round of the rapid fire in this edition of Ask Profit. Rajesh, as well as Samir, you know the drill. Keep your answers on buy, sell, hold so we can take as many as possible. The first one's coming in from Vanita Bala from Kuwait, who's a regular viewer. Her question is on entry into either Apollo or Narayana Rudralaya. What would you recommend, Samir?
Apollo Hospitals for me is the best bet in the hospitality hospital space, not hospital space.
Okay, the next question is on Anant Raj. Can the person continue to hold at the current levels? Rajesh, your view?
As of now, hold stop loss would be around 500 and exit on a 590 levels.
Aegis Logistics, Rajesh, our viewer Sriram is holding 30 shares at 212. Any quick view?
Exit on a bounce towards 680.
Okay, Sandur Manganese and Ore, Raja from Chennai wants to know if he can continue to hold this counter, maybe add more at the current levels. Rajesh, your view?
Not tracking this counter.
CG Power, Rajesh, another one. Prakash is asking a 3-month view on the stock.
Hold on to it, exit towards 630 levels.
Okay, Bajaj Housing Finance is the next one. Devi Prasad from Bengaluru wants to know if you can continue to hold the counter or not. Samir, your view?
I guess you can hold on, but if you want, there are better opportunities in the housing finance space.
And what would that be, Samir?
Samman Capital is one of my top picks in this space.
Got it. Ashok Leyland is the other one, and it's been on a tear, this particular stock. Kunal is asking if it's the right time to enter. Samir, would you recommend after a run-up?
No, not after this run-up. I say wait for corrections to buy more.
Okay, so Suzlon is the next one. Samprit, his buying average price is 68, and he wants to know if he can continue to hold the counter or not. Rajesh, your view?
Add some more around 42 levels.
Nalco is the other one. Rajesh, you actually bought it at 189. It's a counter that has been in focus. Your view?
I mean, book somewhere around 400 levels.
Okay, Godrej Properties is the next one. Devanath wants to know if he can continue to hold, add or exit. Samir, your view?
I think add-on at this point has fallen a lot.
Apollo Microsystem is the other one. Samir, not sure if you track it, but Rajkumar is asking this question. He's holding 750 shares at 300.
I do track it. His stock has corrected. Defense is going to do well. So I wouldn't add on right away. Maybe closer to 189, 190 I would add on. But yeah, it long term still remains positive.
Tata Chemicals is the next one. Jayakumar's average buying price is 752 and holding 100 odd shares. Should I hold or book profit is the question. Rajesh, your view?
Hold on, exit around 800 levels.
Geofinance is the other one. Gautam is asking we should, sell his position in Geofinance and switch to SBI. Rajesh, would you recommend that trade?
I would suggest hold on to Geofinance. The stock is approaching strong support levels.
Okay, the next one is on Ashok Leyland. Shiva wants to know as to what should be the target price that he should be eyeing for the next 6 odd months. Rajesh, your view?
So already a stretch up move is there, but the stock can move towards the 210 levels.
The next one is GAIL with a 2-year view. Samir, would you recommend buying right now?
If he's holding, buy closer to 150.
Got that view, Samir. But Samir as well as Rajesh, that was the end of the second round of the rapid fire, as well as the time that we had on this edition of Ask Profit. Appreciate your time here and helping us solve the 54 queries that we were able to in this 1 hour. But viewers, thanks so much for watching. If there's any stock query that is left, which I could see quite a bit, do tune in. We'll solve all those stock related queries that you sent to us today at 2 p.m. So see you then.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Shaky footage, guys. Apologies for that in advance.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers. It's about direction. It's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
Hello and welcome. You are watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put the spotlight on one company that you need to have on your radar today. Before we move on and do all of that, it's important to look at which company are we talking about. It's a very, very hot sector, a very, very hot space right now, and that is the EMS sector as a whole. We're talking about EPAC Durable, a key company in the consumer discretionary space. They are key manufacturers AC, but before we do all of that, a little bit of history about the company. It was incorporated back in 2003, began as a contract manufacturer essentially of consumer durables, which includes AC amongst other key products. Now, when you look at what the company has focused on, has largely been the room air conditioner space, and even post-listing, it was a meaningful part of the company's revenue and margins as well in that aspect. But post that, in 2012, they later transformed into an original design manufacturer. It essentially means that they designed the product for other companies in the AC space like Voltas and Blue Star, and designed the product as well, which is a high margin business. Now, this was of course founded by the Singhania and the Bothra brothers, and we will be speaking to Ajay D.D. Singhania in just a bit. But important to look at, what are the other clients that they focus to. So all the room air conditioner clients like Voltas, Haier, Philips, amongst others, Godrej, Daikin, Havels are all the company's clients, and these are just some of them. When you look at the key products though, over the last few years, they have diversified away from air conditioners into large domestic appliances as well as small domestic appliances. The large domestic appliances do include products like washing machines, while small domestic appliances have water purifiers, air coolers, amongst other key products. This has been a key diversifier for the company, and that's very well visible in terms of revenue. Now, it's been a tough year for the company, largely led by a longer period of winter, shorter summer, a bigger monsoon. So AC sales do get impacted, and that's reflected in the 36% downtick that we've seen in the AC revenues. But because of the diversification in appliances as well as the other key segments like components, that has helped the company in somewhat way to reduce the losses. So while the AC segment is down 36% in terms of revenue, the total revenue is down only 15%, led by the high growth for the appliances as well as the component space. And that has been the one key differentiator. Although though, the key problem is that there have been a key concern on the financials of the company because of this aspect. Over the last few years, AC concentration has been key, but that has impacted the company's margins at this point of time. So when you look at the rating parameters, with the funds which we'll be focusing on and diving deep into what's impacted the business, is going to be key, because the company's share price is down 49% in this particular time frame, and we'll focus on a lot of that. But income statement, balance sheet, cash flow, return ratios, if you're a regular viewer, you know a bit about this. Shareholding, street cred, valuation, and finally, what do analysts actually make out of EPAC Durable? When you look at the first key parameter, that's income statement. Now, between the 3-year CAGR, if you see, the performance has been quite strong. 33% growth that we've seen just in terms of revenue. The EBITDA margins have also been substantially scaling to 7 to 8%. While FY25 did have a blip, it has been a good year overall on a 33 to 48% growth in terms of a CAGR growth, that is, in terms of revenue and profit. So why the neutral rating? In the last few quarters, it's been a difficult performance for the company, and margins as well as net profit has been impacted. Just for this specific quarter, Quarter 3 saw 427 crores in terms of revenue, but profits were impacted, and that's been one of the key concerns for EPAC Durable. We have been talking about the impact in terms of margins. but it's also important to look at the balance sheet as well. Now, we've been looking at the long-term borrowing as well as the other key aspect that has increased, and that's visible here. So while the equity portion and the reserves have actually increased going into H1 of FY26 as well, we saw stagnation of this number post FY25. But you look at the borrowing number, that increased and almost doubled from 62 crores to 122 crores at the end of FY25, and the H1 number is just for H1, so that's 33 crores. So there has been an increase in borrowings, and that's because of the increase in working capital. Lower AC sales, it means that the inventory is higher and a lot of money gets locked into that. Hence, the company had to borrow quite a bit to include and transfer into that particular period, while the cash bank level has been quite stable at 44 crores, but from the FY24 level, it has seen a quiet dip as well. And hence, we've given this a thumbs down, and largely on the back of lowering the company's inventory as well as borrowing number is something to talk about. When you look at the third key metric, and that is cash flow, we have been talking about working capital as well as the impact of the business in terms of the cash flow from operations as well. So when you look at the cash flow from operations, it has increased to a highest level of about 257 crores in FY25. There you see the dip to 31 crores in FY26. And this is, of course, in FY25, this was H1 of FY26, we saw the dip. Also, the operating profit, the operating cash flow to PAT is the other key metric. After a humongous increase, that has again come down to 56%, while the net cash flow has also been largely stable. So there are multiple key factors happening here. While some metrics are a positive, the cash flow from operations being impacted is clearly a big negative, but we've given the company a little bit of benefit of the doubt, given it a neutral rating for cash flow as well. The fourth metric though, that's return ratios. Now, for a company the size and scale of EPAC Durable, there has been a pressure on the return ratios, and the story largely was as the company gets bigger, the return ratios will improve. While FY22 was a year, we've seen reduction of the return on capital employed over the last few years. With the company's advent into larger appliances as well, the return ratios are expected to improve, but that has yet to materialize. So while it has improved from FY24 to FY25 level, we will have to wait for a couple of years at least to look at a meaningful increase because of these initiatives. So hence, we've given this a neutral rating as well. The other key part is shareholding. It's been largely stable, one where the company has shown immense promise in not selling out at any point. So we've seen some selling between March 24 and 2025, but largely a little bit only at 47.18, company has been managed to keep it. What's also interesting is the increase in shareholding of retail as well as public investors. It's gone from 32% all the way up to 45% and shows the company's interest amongst retail investors. As the share price has corrected, that's also one of the key factors that retail investors do sometimes buy the dip, but it's important to keep track of the metric. While domestic investors have steadily reduced their shareholding, hence while we have given this a thumbs up rating largely on the back of promoter holding, there is a lot to look at in the changes between public as well as the foreign institutional investors and also the domestic institutional investors as well. When you look at the street cred, that's the other key part. It has been a disappointing picture for investors for EPAC Durable over the last few periods. When you look at the number over the last 1, 3 and 5 months, specifically the stock is down 14% in the last 1 month. It has been under pressure, largely led by what's happening in the particular space as well. But even in the 6-month period, the stock is down 34%, almost down 50% on a year-to-date basis. So that's just in the last 15 to 20 days of January 2026, and down 49% in the last 1 year. So investors have borne the brunt for EPAC Durable as they've held on to this particular counter. 5-year performance has to have some caveat that the company listed in February of 2024 since then has given decent returns, but given the large what has happened in the last 6 months, we've given this a thumbs down for now. When you look at the final few metrics as we wrap up into looking at this aspect has been valuations. Now, because the stock price correction, FY27, the next year of financial year 2027, looks quite appealing in that sense at 30 times price to earnings for an EMS company that too. While price to earnings is also visible of that, the EPS is expected to be impacted in FY26. Now, last year the company in FY25 did about 5.6 rupees in terms of EPS. Consensus estimates are down to just 3.4 rupees, and hence the higher price to earning metric in FY26 compared to FY22, where hopefully the growth comes back. But because of the share price correction, analysts have, while reduced their target prices, continued to maintain their buy ratings, and that's visible in the calls as well. So they are seeing a return potential of almost 33% as we speak, and hence we're continuing to see that positive momentum, at least from the analysts at this point of time. But it's also important to look at what the company also has to say at this point of time, and we have the management which will join very, very shortly on this aspect. So you have seen that the company's performance has been impacted. Q3 also had a lack of growth in that sense, so it's important to speak to the management as to what they think could be one of the key positive metrics for the company. Before we do that, the final ratings, income statement, cash flow as well as return ratios do get a neutral rating. Balance sheet, the company will have to improve on that aspect, while the other key metrics, if we can pull that up very, very quickly, shareholding is a positive, valuation a neutral in that point. For FY26, we need to look at the growth, while analyst as well as analyst recommendation has been a key positive. So the overall rating we get at 4 out of 8 for EPAC Durable as well. But to discuss in detail about what the company is all about, and we have spoken to Ajay D.T. Singhania in the past, let me welcome the MD and CEO of EPAC Durable at this point of time. Mr. Singhania, very good morning to you, sir, and thanks so much for joining in. It's a real pleasure to talk to you at this point in time, because while Q3 was a tough quarter, you did mention a few positives about you that the company has looked at, and certainly that investors need to watch out for as well. But largely my first question, sir, the last 3 quarters, the first 9 months of FY26, you've managed to do a decent performance. But to start us off with, what is the current picture of inventory on the ground? Have you seen reduction in this particular quarter, and is it coming to a level that's largely normalized, or what is the expectation of normality for inventory over the next few months?
So, good morning. In regards to the inventory normalization, yes, Q1 and Q2, because of the unseasonal rains, we had inventory being piled up both in trade as well as our end not getting manufactured. But thankfully, Q3, we saw the uptick, and the inventory movement has definitely started. The order book has been good, and going forward, next 6 months onward, the season sets in. So the market is very bullish that the past is behind us, and the tailwinds are still very strong for the industry. So at 15 to 20% kind of a growth is what I've been repeatedly saying is on the cards for the industry for the coming 26 season, and shall continue for next 5 to 6 years, definitely. So next medium to long term, definitely the tailwinds are very strong for AC.
Got that, Mr. Singhania. And you highlighted that over the last couple of quarters, it has been that the industry has been impacted largely because of high inventory amongst other key issues. But in the short term, what can be the expectations from Q4? Because it is a quarter where a lot of inventory is built in by the AC makers. Is there expectation that that is visible, at least to you in the conversations of the first 22 days of January, that Q4 could be a decent, at least flattish on a YOY basis? How should we see this?
So Q4, definitely we see growth compared to YOY basis. Q3 also has been a growth, and Q4 again we see a growth and recover partly whatever was lost in Q1 and Q2. So Q4 will definitely be a quarter wherein we'll see a lot of recovery happening, although it will not be possible to recover the entire sales loss. So as a whole, on an annualized basis, we see that the industry is going to witness some shortfall as compared to FY25, but yes, largely recover the loss of the previous 9 months.
The other key aspect, Mr. Singhania, has been that last Q4 of FY25, you did about 650 crores of revenue. Now you are mentioning that you are expecting to seeing some growth at least. So could we expect a low double-digit kind of growth expectation? Now I know you can't pinpoint it, but is there expectation of that at least?
Definitely yes. Definitely yes. So what I'm saying is the loss of the previous 9 months partly is going to get recovered, although the entire sales loss cannot be. But yes, we are looking at a ramp up in Q4 and cover a lot of ground here.
Is the expectation largely that with this, you will be able to at least have flat revenues for FY26 compared to FY25, because it's a big number that you're aiming in quarter 4 of FY26. You are aiming for almost 700 to 800 crores of revenues. You did about 650 in the in quarter 4 last year. So is that the expectations from you as well? And what could be for margins as well, if I can slip that question in as well?
Yeah, so broadly, yes, the guidance is that we are looking at the number you just mentioned. So recover a lot of lost ground on the AC, as well as our other levers are firing very well. So for us, the small and large domestic appliances will component business is something which is helping us cover a lot of lost sales. And at the three new diversified segments for us, the LDA, SDA and components are growing at multifold. So that's what we see as the growth lever going forward as well.
If you can also talk about, in terms of parts, because we've seen for AC specifically, you have diversified into newer segments as well, and that's very visible in the components growth for you. But before that, has there been increase of raw materials because of copper amongst others? How are you navigating that challenge?
So overall, if we look at the AC prices, there has been correction on two fronts for the coming quarter, and definitely the street, I believe the brands are going to increase the prices or have already increased the prices. So it's on two counts. One is the upgradation in the BE norm. So that's like the previous 5-star becomes a 4-star and a 3-star becomes a 2-star. So there is upgradation because of the price correction because of that. It's broadly like 4 to 5% kind of a price correction. And then another 4 to 5% is the price correction because of the commodities, what was done in the last quarter. So overall, we see close to 10% price correction in AC. And any further impact of commodity definitely gets passed on in the next quarter.
Also, Mr. Singhania, one of the biggest developments that happened in the industry has been the ECMS scheme that has come in. Now, we've already seen a few companies get into PCB manufacturing and get approvals as well for it. What has been EPAC's plan for ECMS? Have you already applied and are awaiting approval right now?
Yeah, so we have floated a separate subsidiary company called Bumjin Audio Products Limited, wherein we are targeting to manufacture a lot of audio parts, components, sound bars. So that's a part of our application under the ECMS scheme. And the structural approval has already been there, and now we are filing for the further plan and everything.
Mr. Singhania, if you can talk a little bit about your subsidiary, as you mentioned, is that largely into audio, or is this something specific to ACs as well? If I can just harp on that a little bit, is it also into PCB manufacturing, or that's not included in that?
So PCB is currently under our current company portfolio. So we already do PCB as an EMS. We make controllers and supplies the component. The specific subsidiary we're talking about, Bumjin Audio Products, is a JV with a Korean company called Bumjin. And they specialize in making audio components and sound bars, TV speakers, Bluetooth speakers, and all these things. So we are under currently planned to start manufacturing by the end of 26 or probably Q4 of 27 and start selling these products in India market.
So is there any plans of venturing for ECMS specifically into a new facility for PCB manufacturing? Or is that something you will take it as time comes? Because at this point of time, we've already seen approvals come in also for a few companies. So what is the expectations for EPAC specifically going into ECMS via your PCB manufacturing?
So PCB manufacturing is what we already do under our current facility.
So is there another level of capex that we could expect from you to increase capacity? Because and we've spoken to you previously on this, that India is still very deficient in terms of a lot of parts that go into both for ACs as well as for other related electronic products. So the opportunity is quite huge in PCBs, right? So is that something that you've thought about, and any rationale of not going into it as of now, currently as we speak?
So we currently do a PCB assembly, so not the bare board, but we do the entire component, the controllers. And as we scale up our operations, definitely we'll start doing more of PCBs in-house. So currently we do for air conditions and our small domestic appliances. Going forward, definitely yes. So the expansion and backward integration would continue, and scale up will happen as and when required. So that's something definitely a focus sector as our component business is increasing. Investments in PCB controllers, the assembly lines will continue to be ramped up under the current facility itself.
The other thing, Mr. Singhania, has been your advent into your LDAs, SDAs, as well as components. Is the expectation that all three of those specifically will have roughly around 30 to 35% of your revenue in FY27?
Probably more than that. So we continue to grow in AC more than the market. So if the market grows at 15-20%, definitely we will outgrow the market. But at the same time, we believe that our SD and LD and as well as the components have potential to grow multifold. And in a medium to short term, we are looking that our ACs, like current year, it has come down to almost 60%. We will try to maintain it 50-55% and outgrow our other sectors like the SDA, LDN components. So that should overall contribute to almost close to 45-50% in 27-28.
Now, Mr. Singhania, just a couple of key updates, and you've spoken about this to us in the past. The one is on Hisense. It's a big project for you. You mentioned that almost 8,000 crores of revenues could be accrued over 5 years once the project starts. So the earlier expectation was that project would start in December 2025. You've now said March of 2026. Is that timeline on as we speak?
Yeah, definitely that we are on bang on timeline. So we had maintained earlier that December is the timeline where we're looking to start the trial productions. The trial productions have been successfully completed. We have got all the approvals in place, and the current quarter, which is Q4, we are looking at to ramp up productions. So everything is on time. And our ODM sales to Hisense for the AC has already started since last year. And now the Hisense designed product is what is going to get manufactured in the new facility, the new greenfield facility. The facility is ready. The trials are done. Everything is online, on track. And this quarter, probably next month, is when we are contemplating that the mass production will start.
Mr. Singhania, what would be the products that would come out first out of this? Because apart from ACs, there are other related products with Hisense as well. So what would be in, just for FY27, if we can talk about, in that year, what is the expectation of the products to start with?
So the new facility, the greenfield facility, we are starting the Hisense designed air conditions, which are a complete tech transfer from China in next month. And then going forward, washing machines, both top load and front load, are going to start within this calendar year 26 itself.
The other aspect, Mr. Singhania, has been on washing machines. Now, that has been a product that's been with you over the last 3 to 4 quarters, but probably what's happening on the street is that the accretion that was expected compared to other EMS players, and unfortunately you are in an industry of comparison, has been one of the key focal points for investors. So for washing machines specifically, while you mentioned about large domestic appliances being a key growth area along with the other 2 segments, specifically for washing machines, is there any revenue targets that you can give us over FY27?
So the good news I'd like to share here is for the washing machines, definitely, yes, there was some delay in getting the approvals from the customers, but now that is all behind us. From Q4, we have already onboarded, got the approvals for 2 marquee clients, and the production has already started and ramped up in the current quarter. And we see significant quantities and revenue targets. We will definitely revise upward when we do the earnings call for the next for the final annual results. So that's something I'm repeatedly saying that LDA is one segment which we see will grow at a much rapid pace.
And so Mr. Singhania, you've given us a breaking news, at least on the show today. You've given us something that you've not said anywhere before. So I'll take it with both hands. The other aspect of the smaller domestic appliances as well, the expectations that while it is a higher margin business, because of the prices of those products being so low, it's a big volume game, and it's something that's while you have been an ODM player, you've always been a technology player as well. So the volume game hasn't been one which you've fought with other players. With SDA, that strategy changes a little bit. So any rationale that you can give us in terms of entering that hyper competitive space, and what do you make of it?
So our competitive strength here is our, like you said, the scale and maintaining the leadership position in the appliances, the large appliances like ACs and washing machines. Definitely we see will take leadership role in next 2 to 3 years. For small domestic appliances, I think the code we have cracked is not about volumes alone. We want to also increase the width and the basket of offerings. So we have a roadmap wherein we are going to introduce a new product, almost 1 to 2 new products every quarter, and increase the basket of offerings. Because that not only helps us cater to the versatile demand of the customer, but also kind of balance the seasonality and balance our quarterly revenues. So the whole idea of what we have been working on is to have uniform continuous revenue stream every quarter.
Well, Mr. Singhania, you've been very, very honest and upfront to us about a whole host of issues that you are trying to track, but appreciate your time here on NDTV Profit. We wish you the best hopefully speak to you once you'll speak to us again when Hissan starts production in March. So a lot more talking, a lot more numbers at that time. But thank you and appreciate your time here at NDTV Profit.
Thank you so much. Thanks a lot.
Well, that's largely, on EPAC Durable specifically, a key company in the ECMS space. In the EMS space specifically, looking to enter ECMS as well. But that's all the time we have on KYC. Stay tuned. A lot more action on the other side.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
This is going to be shaky footage, guys. Looking for that in the back.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses.
Positive global handover weans off as Nifty fails to hold on to the early morning gains today. Trades below 25,300 levels. Broader markets underperform as volatility index rises. Real estate, banks and financials under pressure. Metals shine. Interglobe Aviation reported a sharp decline in the net profit in the third quarter of the current fiscal, weighed by one-time impact of new labor codes and flight disruptions in December. The company now eyes pilot hiring timelines and operational efficiencies. Premier Energy is under pressure after revenue misses the expectations of the street. Lower tax aids the profit. Improvement in asset quality aids Bandhan Bank. Gross NPA ratio declined significantly to 3.3% from over 5%. Brokerages remain upbeat with CLSA Macquarie optimistic on the margin outlook. And among other Q3 contenders, Street will be keenly watching out for the results of several counters: Cipla, Godrej Consumer, JSW Steel and Shriram Finance to announce results today. Good afternoon. Welcome to Markets at 12. I'm Nisha Poddar, and at 12 today, in the middle of the day, well, market is looking weakish. In fact, more than 100 points drop from the high point of the trading session when we talk about Nifty 50, closer to the lower end of the spectrum of the trading session. 25,200, that is one level which is now getting tested at the current moment. Let's also take a look at what the internals are suggesting. Of course, big boy Reliance Industries is causing a lot of dent to Nifty 50's performance. Eternal, L&T, HDFC Bank, Axis Bank are some of the others. But on the upside, it is big boy from the IT sector, TCS, along with HUL, Asian Paints, Hindalco, Ultratech, the two Aditya Birla Group companies, as part of Nifty 50, are adding their weight to Nifty 50 when it comes to the positive momentum. If we really take a look at the sectoral performance, well, Bank Nifty is in line with the key indices, top indices, but on the other hand, the broader markets, there is a large amount of weakness compared to the key indices today. So keep an eye out on the mid-cap as well as small-cap universe. When it comes to the IT sector, that is one sector which is in the green and is really contributing well to the space. All right, now spotlight on some of the other earnings of the day. Remember, we are in heavy earnings season currently, and weak set of numbers for Syngene International. Premier Energies Q3 beat the estimates. Vasha has all the details. Tell us, Vasha.
Well, let me start with Syngene International, wherein the numbers were quite weak. If you see, impact was led by ongoing inventory correction for one of their drugs, which is Librela, and there was a one-time loss of 70 crore in Q3 due to new labor codes, and they've reported additional gratuity cost related to that. They've also extended their collaboration with BMS through to 2035. But the interesting point over here, and why Syngene is under pressure, because we did speak to the management, and they said to NDTV Profit that they are expecting degrowth of 2 to 3% in revenue versus the mid-single digit guidance that they had given for FY26. A bit negative coming for Syngene International. This is the the guidance which is expected at only degrowth of 2 to 3%.
All right, Varsha, thanks so much for getting all those important details. Now, remember that we are in heavy earnings season today. Of course, JSW is going to announce its numbers later today. Of course, most of the IT majors have given their results, and let's focus on that particular bit. Emphasis has mixed Q3. In fact, my colleague Puneet had a chat with the management on the performance as well as the outlook. Take a listen.
This morning. My first question largely on your deal ramp up, and we've been speaking about it consistently over the last few quarters. It's been quite strong yet again in a seasonally soft quarter. It's been a very strong quarter for you for deal wins. However, there seems to be a disconnect between that as well as your revenue growth profile, or that translating, into your P&L as we speak. If you can offer us some perspective, why the conversion from TCV to realized revenue is taking so much time for you? Is it largely that the deals are structured in such a way that the ramp up is gradual, so as to not have too much impact on P&L? If you can start us off with that, sir.
Sure. I think firstly, the ramp up in deal wins is something very deliberate and very focused. We've been driving our large deals team over the last 12-18 months, and this is showing up in both pipelines and TCV wins. On the nature of these deals, I think many of these deals typically are transformation combined with some form of existing takeover of operations. And in typical constructs of these deals are such that it'll take you 3 to 6 months to either ramp up or get to a point where you can start applying those transformation levers. And some of these are even longer term than the usual 3 to 4 years. So a combination of those factors basically means that each deal, depending on the nuance, will take some time. But conversion's been pretty strong. I think the thing to note is through the financial year 26, our growth's actually been accelerating, especially in the direct business. So I think it's fair to assume that ramp up is translating into growth. And of course, there are other puts and takes. The deal wins that you're seeing are just net new. If you have segments of the business that have other headwinds, then of course it nets off some of the growth. But broadly, all of that is behind us, and given where we stand, I think the correlation that we've now published should give you a sense that the higher correlation will mean that faster growth, as correlated to TCV wins as well. So fairly well, placed and comfortable with where we stand.
Got that view, but in terms of what we've seen in the sector as well, that the deal wins, once they start showing up in the financials, there's largely that the number of headcount that you have to add for that particular deal wins also has an impact on margins. Are you largely seeing that, or is it because, as you said, the deliberate way that you are ramping up these deals, we shouldn't see too much impact on margins going forward?
Yeah, I don't think there's anything specific to call out. I think whatever we feel comfortable with the headcount position. Also keep in mind a number of these deals are blending people-based services with certain platforms and software assets that we're deploying as well. So I think if anything, we are, based on our current headcount and utilization levels, we don't think we need to call anything out specifically in terms of impact on margins due to ramp-ups.
There's also been, your guidance on AI as well as its pricing power. You mentioned that, there's no pricing deflation largely from artificial intelligence, which is largely a contrarian view, right, to the broader fear that we are seeing in the market. So the question largely being, any kind of quantification that you can give on this particular aspect? Do you feel that are clients actively signing outcome-based deals for AI large compared to maybe value-based contracts in that sense? If you can give us some perspective on that, sir.
Yeah, I think what we are basically saying is, depending on the way the stack you play in, your services that you offer, and your ability to move seamlessly from the input-based pricing or effort-based pricing to an outcome pricing should take care of the AI deflation fears if you play it right. You will see volume expansion, you will see wallet share gains, you will have the ability to drive a certain degree of profitability. So if you stay in the same mode of pricing, then you will see price headwinds, and of course, price headwinds mean revenue headwinds as well. So I think it's a question of how you're able to use the positioning that you've built, the capabilities that you've built using platforms, and more importantly, proactively driving those conversations with customers. So you're not, reacting to an ask from a client on either efficiency or AI-led gains.
All right, so that was the Mphasis management talking about their quarterly performance. We'll slip into a short breather, but many more news and developments on the other side. Stay tuned to Markets at 12.
is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
Welcome back. You're watching Markets at 12 and let's focus on one banking results. In fact, Prashant Kumar, the managing director and CEO of Yes Bank, spoke to me a little while earlier on the company's performance. Remember that the bank has given strong set of numbers, that there are a few one-offs which have made the numbers look much better. So we got into the internals of this particular discussion with Prashant Kumar. I started by asking him about the loan growth scenario, which was clocked in at 5% in this particular quarter gone by, and what is the guidance going forward for loan growth for FY26. Take a listen. All right, we are joined by Prashant Kumar, who is the Managing Director and CEO at Yes Bank. Mr. Kumar, always a pleasure to welcome you on NDTV Profit. Of course, a strong set of numbers coming in for this particular quarter, but I want to focus on a few of the aspects which have improved or at least optically improved the performance of the company in the last quarter gone by, which have been one-offs or non-recurring in nature as well. And that's where the operational aspects also kick in. So my first question to you, Mr. Kumar, is on the loan growth. Now, for the last quarter, it has been at 5% growth. Now, if we are not wrong, there has been a guidance given by the bank of 8% to 10% growth in this particular financial year. With the 5% loan growth in the last quarter, has anything changed on the growth outlook? And what will be your guidance for FY26 and 27 on loan growth?
I think we are quite confident to achieve 8% loan growth for the current financial year. And why I'm saying this, because if you see last quarter-on-quarter growth is 2.9%. So if we grow in the same range, which is around 3%, our YOY loan growth would be around 8%. Okay. So basically nothing has changed, but we are following a very strategy in terms of chasing a profitable loan growth. Sometimes you may go for just loan growth, which may not give you the margins, because there are certain asset classes where the margins are very thin, very competitive. And on top of it, then you have the PSL obligation. So I think it makes sense that you chase those asset classes, which not only gives you good margins, but also in terms of not unnecessarily bring the obligation on the priority sector requirements.
All right, so 8% is what you're guiding for this financial year. But Prashant Kumar, you also reported an expansion when it comes to the NIMs. Now, there were a few events like CRR rate cut, deposit repricing, which also impacted, which are one-offs. And also we know that the rate cut is going to show much more impact from Q4. So putting all this into perspective, what are the NIMs headed for going forward?
So I think there has been an expansion of 10 basis point on NIMs
Yes.
For the third quarter. The current quarter, the 25 basis point cut in repo, definitely the entire loan book would be repriced in the 3 months. Okay. Though there would be advantage because of the CRR cut also. But I think in this quarter, for the entire banking industry, if we are able to protect our NIMs, I think that itself would be quite challenging. Because the reason is that quarter four, there is always a good loan growth. And because of the tight liquidity situation, I think there is a very close fight between all the banks to get the deposit. You have seen like the loan to deposit ratio of the banking industry for the first time has crossed 81%. And some of the banks are actually 90% plus. So I think in that situation, definitely those banks would be fighting very hard to get the deposit to support their loan growth. So I think quarter four, there would be definitely a very close fight for the deposit. Everybody would try to get maximum deposit. Would not be possible to further reduce the rate of interest on the deposit, at least in the current quarter. So our strategy is definitely in terms of protecting the margins in the quarter four. But definitely going forward, there would be an upward journey or journey in terms of improvement.
All right, so that was the Yes Bank management giving more insights on the future outlook of loan growth, NIMs and ROA. In all three, they are on track with the guidance that they have given. All right, let's now focus on the budget expectations. And yes, wish list has been going to the Finance Minister. Budget 2026 is just around the corner. And private equity space, the alternative investment funds, they have really given a huge amount of growth capital as well as investment diversification opportunity in the country. So they have big asks from the Finance Minister. Let's get some of that from an industry expert. Let me welcome on the show Srini Srinivasan, who's the Managing Director at Kotak Alternate Asset Managers. Srini, always a pleasure to welcome you on NDTV Profit. Now, if you have to summarize in the key highlights of the top 5-6 aspects, which are the key demands of the private equity and the fund industry from the union budget this time?
There are a bunch of things that we have asked for. I think the first of them is certainty of taxation, which is, as you know, that private equity funds or alternative investment funds are limited life vehicles, and which is quite different from some of the others who are unlimited life vehicles. So at the end of our life, we need to have clarity that the taxes are completely done and dusted. And we have requested as part of the budget that if the tax assessment of these limited life vehicles on their completion gets done within a 12-month period, it gives certainty to the investors in the fund. It also solves a lot of problems where SEBI is grappling with regard to liquidation or complete closure of funds. And this will give a great relief to both fund managers and investors, because sometimes in anticipation of potential tax liability, fund managers have to retain some money back, and that impacts investors' returns as well. So I think that's the first ask. The second ask that we have made is that between taxation on equity and taxation on interest income or debt securities is very wide.
If I can intervene, since you already expanded on this particular aspect, especially when it comes really at the time when the Tiger Global case in the Supreme Court, which was which had overturned the Delhi High Court verdict and had been given 7 years after the transaction took place. That particular case has given a body blow to the fund and the private equity industry. Is that particular scenario aimed to be really addressed for future with this big ask coming in from the private equity industry from the union budget?
Well, honestly, from our point of view, we had made this ask much before this Tiger Global verdict came about. And without getting into the merits of the Tiger Global situation, of which I am not fully intimately familiar, the reality of it is that if we can have tax certainty within a defined time frame and not a 7-year period for funds which have actually got completed, it would certainly help the cause of attracting more investments into the country. Whatever disruption that this particular verdict may cause, I think having this kind of certainty would certainly help the cause of attracting more capital into the country.
Right, Srini. In fact, the tax investigation as well as closure and resolution of the matter has to happen very close to the transaction, because funds have limited lifeline and time period, and therefore holding that cash is actually time value of money wise a loss on those funds as well. So that particular point coming out very clearly. When it comes to taxation overall, there is also a big ask of parity between equity products as well as the other hybrid debt or other related products. Where are we on that, and what is the big ask coming in from the union budget?
Well, I wouldn't say parity. I just said that, look, the disparity in terms of taxation between interest income and capital gains is actually resulting in misallocation of domestic savers' capital. Today, domestic savers are investing in different kinds of mutual funds, which are technically taxed as equity funds. And that actually is competing even with bank deposits in terms of customer assets. What we are saying is that if you have interest income taxed at the maximum marginal rate for high net worth investors, those investors are not really buying into interest bearing securities. And that has an impact even on the bond markets in India. If you tax interest at such an usurious rate compared to equity, then you are not helping the cause of deepening and widening the bond market. We need investors who are otherwise happy to take equity risk to invest in bonds, even if they are lesser rated, because they have the risk appetite to do so. Today, if you look at the bond market, the majority of the bond market is cornered by the AA and the AAA. And the institutions in India are also either by regulations or by risk management, focusing only on the AA and AAA. So the MSMBs, the lesser rated companies, they are not able to get capital or credit capital. And as an alternative investment fund industry, we have investors who have the risk appetite to invest in some of these lesser rated paper as well. And that actually makes a more vibrant, deeper and wider bond market. World over, bond markets are bigger than equity markets. We are not enabling that by having a differential in taxation, which is so wide that it is discouraging investors to invest in credit securities.
So that's the larger picture that you mentioned, Srini. And narrowing it down, private credit is one space which is growing very fast. But this particular area attracts interest income and taxation on interest income, which is much higher than capital gains tax. And therefore, it discourages and reduces the attractiveness of these kind of products. Any specific views on private credit growth and the hindrances there?
Yeah, absolutely. The taxation is one of the biggest hindrance to private credit growth, because if, as you know, in India, the category 2 funds, which are private credit funds, they're all pass-through vehicles. And the investors in those private credit funds are domestic banks, institutions, and of course, the family offices. Now, if you look at the situation, a foreign investor comes into a domestic private credit AIF, that investor is likely to pay a maximum tax of 15% on interest income, as opposed to a family office, which is likely to end up paying at anywhere between 25% to 35%. And that essentially means that you are handing over the private credit market to foreign investors. That's one aspect of it. The other aspect of it is that you are discouraging the domestic investors from coming in. If it is a pass-through vehicle, you make it a level playing field for everybody to be able to participate, and you are able to commingle both international capital and domestic capital and provide the much needed credit into the domestic market. There is also another school of thought that some people feel that private credit can cause systemic risk. I think that is at this point in time too early and probably misplaced, because unlike in global markets, private credit funds in India do not take leverage from the banking system. So it is actually looking at it from the perspective of systemic risk, more of an equity capital. If the private credit fund does not make money or loses capital, it's the loss of the investor and not on the banking system.
Right. Thanks for clarifying that bit. But that anomaly, and by design here, Srini, the equity schemes and funds are made more attractive than the debt, hybrid and other such instruments. And that parity is very, very required because equity is made much more attractive as an instrument. Finally, and very quick answer on that to explain enabling LLP's structure for AIFs. That's also an ask. How will this help? Quickly.
I think, again, trust taxation has always been a very difficult subject matter, and different regulatory authorities have different views with regard to how a trust is to be viewed from the perspective of borrowing, from the perspective of taxation, and from the perspective of operational ease and efficiency. World over, private equity funds are run as LLPs. What we are simply saying is that let's adopt what are the best practices in other parts of the world, enable the LLPs. There are kinks in terms of taxation at this point in time, which we have made specific recommendation to the finance ministry. Without getting into details, which I'm sure your viewers will find pretty foggy, this is a very important task for the industry.
Right, so some of these could really make it to the union budget speech by the finance minister. Thank you so much, Srini, for breaking it down for us and being an industry voice to lay down the wish list coming in from the budget by the private equity industry. Thank you so much for joining us.
Thank you.
And completely out of time when it comes to markets at 12. Thank you so much for tuning in, but do stay tuned to NDTV Profit. Thanks so much.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर। Celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर।
Hello and welcome to NDTV Profit. This is Hiral Dada bringing you our all-new offering trending stocks. And with me today is Mahima Vachajani standing at the NDTV Profit market pit with all the action in the markets today. Mahima, an interesting day of trade as we speak. Weakness in the rupee continues. There is selling pressure as well. What are the key factors that you're tracking?
Right, so, at the start of the day, we did start in the green, but right now the markets have turned into the red. 83 points downtick is what we're seeing. We did slide below the 25,200 mark as well, so that's the first trigger that we're seeing on the benchmark indices. But with regards to where the broader market stands, we are, further underperforming the benchmarks as we speak. Both the mid-cap 150 and the small-cap 250 are down almost 0.7, 0.8% each. With regards to where, the India VIX is concerned, that's up almost 3.5%, and that is, indicating volatility, and that should continue going forward is what something, the India, slight recovery is what we're seeing in the India VIX right now, 2.3% right now. But with regards to where FIs stand, they've remained net sellers for 13th straight session now, and that's concerning. And that, turnaround, we'll have to wait and watch out for as to how that happens and as to when that recovery comes into picture. And lastly, Bank of Japan, the latest coming in is that the rate of interest for coming in from them has remained unchanged for now, but pressure in the markets continue is the headline.
The pressure in the markets continue, that's the key headline that we're tracking at this hour. Let's quickly take you through the entire watch list that we have in terms of today's session that we're going to track. Asian Paints, the top gainer on Nifty 50. You have Dr. Reddy's and Sun Pharma. It's a GLP-1 push for a semaglutide, and Ozempic in terms of selling and manufacturing in India. Hindalco up 11% in the last 1 month. Tanla Platforms also on the back of a strong quarter is buzzing in trade. A 200 crore rights issue nod for a Deccan Gold. The outlook in terms of FY27 absolutely positive is what we are tracking as well. Moving away from a Deccan Gold, Home First Finance is also buzzing in trade. Voltas also seeing some smart moves today. Bandhan Bank on the back of earnings. APL Apollo Tubes, the margin guidance has been revised and IIFL has no evidence of tax evasion is what the management has indicated to NDTV Profit, and that's when the stock has seen a recovery. Eternal under pressure for a second consecutive day. Indigo Q3 profits have been hit by one-offs, and that's the pressure being created. The lowest revenue in 5 quarters for Ixigo is what we will be discussing as well. And RBI has ended the PIDF scheme, and that is what has put Paytm under pressure. So these are the trending stocks in today's session, but let me head across to Mahima, who will take the rapid fire with Akshay Bhagwat of JM Financial.
Right, so I'll start, Akshay, by asking you with regards to where Asian Paints stands. Slowly and steadily, the stock is picking up. 16% gains is what we've seen overall in the past 6 months. Your view?
Good afternoon. So positive view for short term, 2700 is the support. We can be looking at upside target still 2850 on Asian Paints.
Okay, Dr. Reddy's is the next one. They've secured manufacturing license for semaglutide. What are the charts indicating for this one?
Charts indicating a very positive stance. In fact, yesterday post results, good recovery from 1180 support. 1300 is the possible short term target you can look forward to.
All right, Hindalco has run up almost 11% in the past 1 month. Is that momentum still strong on the charts?
Yes, maybe sideways for short term, but overall 1000 should be the target zone with the holding of 10 to 15 trading sessions.
Okay, Turner is the next one. I think strong earnings, but I think Dipender Goyal stepping down has kind of weighed down on the stock. What are the charts indicating right now?
Short term weakness can see a drag down till 250.
Okay, Home First Finance is the next one. NI growth is stronger than the loan growth at that 25% mark year-on-year basis. What are the charts indicating?
More of a neutral setup. Range bound trades expected between 1050 to 1150.
Okay, Deccan Gold Mines is the next one. High targets, tall targets given by the management. The stock has also seen gains of about 19% in the past 1 month. What are the charts saying here?
It's more of a range bound scenario, although it's gone down. So I will not take a fresh trade on this.
Okay, lastly, Voltas has touched an intraday high of 4%. Volume's not very strong on this one, but do you think the momentum is here to stay?
No, again, it's range sideways. 1275 is the support. If it breaks, you have to take an exit.
All right, so that's the view coming in on Voltas. Hiral, tossing back to you with regards to all of these EMS players plus consumer durable players, they've been under pressure. I think the key question from here on would be whether this pressure is off the radar post seeing the Q3 numbers or not.
Absolutely, that's what we are watching out for right now. as we speak. But let's quickly address a Paytm on the screens right now and see what's happening on that counter. It's seen a major dip in intraday trade, went down to levels of almost 10% kind of a downtick, has recovered as we speak. Now, what Paytm is indicating is, there is a speculation that RBI may not renew PIDF. PIDF is the Payment Infrastructure Development. That's what it stands for, and that's the reason why, the stock has been under pressure. And this is what Arihant Capital is indicating. If this happens, Paytm may lose nearly 200 crores when it comes to annualized revenues, is what we are picking up from the analysts so far. So basically, Arihant Capital indicating that there is speculation that the RBI may not, renew PIDF, that is the Payment Infrastructure Development. And if that happens, Paytm may lose 200 crores in terms of annualized operating revenues, is what we are picking up so far when it comes to Paytm. 200 crores currently flows directly to the EBITDA, is what Arihant is also indicating so far. So that's the latest that we're picking up when it comes to Paytm right now. And that stock is trading under pressure. Apart from that, in terms of the potential mitigation, what they've said is that since the scheme's cancellation would affect the entire industry, players may collectively raise prices to compensate this. And a simple rupees 10 per month hike in soundbox rentals from the current 100 rupees per month would actually nearly fully offset this revenue loss. So one, there is an impact. Two, to mitigate the impact, they would at least have to take a hike of 10 rupees per month. So from the existing 100 rupees per month, it could go up to almost 110 rupees per month. And despite the regulatory uncertainty, the potential for corrective pricing power keeps the outlook positive. That is what Arihant Capital is indicating so far when you talk about Paytm. But 200 crores loss in annualized revenues is what we're staring at so far. We will take a discussion on this with the analysts soon as well. But let's head across to Syngene. That stock is at a 52-week low on the back of weak Q3. Varsha has spoken to the management as well, Peter Baines. Let's listen into that conversation.
Well, Hiral, if you see the Syngene has not given a good set of numbers, and this is why if you're seeing the stock is down. And the impact was led by ongoing inventory correction for one of the drug, Librela, and there was a one-time loss of 70 crore in Q3 due to new labor codes. But to speak more about the numbers and what lies ahead for next 2 to 3 years, I'm here joined by Mr. Peter Baines, who's the MD and CEO at Syngene International. Well, Mr. Baines, welcome to NDTV Profit. It's a pleasure to have you. You mentioned Q3 was impacted by a single large molecule. Can you help us understand whether the impact is temporary or structural?
So the impact has been ongoing through this year, and it is continuing to unfold, and we expect it to continue and play out in the coming quarters.
On that note, how much revenue concentration does this single product represent today?
So we don't give out that level of detail, but this was our largest manufacturing collaboration, and it's a commercial product, and it is clearly the single biggest impact on our numbers. What is important is to sort of drill down there and look at our business across the board. And if we put the impact of this single product to one side and look at the rest of Syngene's business, what we're seeing there across our diversified platforms is growth. So if I take that single product impact out of the picture and look at our manufacturing platforms, we are seeing capacity utilization increases, and we are seeing stable growth now coming out of both large molecules and small molecules. And then if we look at our research services platforms, we are seeing good growth in chemistry, we're seeing growth coming out of biology, and we're seeing growth in our translational and clinical services divisions. So in some ways, it's just it's two parts. We clearly are facing the single product challenge that we've described, but on the other side of the business, which is where we're clearly focusing our efforts, is on driving growth across the breadth of our diversified platforms And it is encouraging to see that we are growing right across those diversified platforms.
Right. But, Mr. Bains, how confident are you about growth acceleration over the next few quarters? If you could, update us on that.
So I think Syngene is very well placed to capitalize on the strength of its diversified platforms. This gives us opportunities to grow in manufacturing, and we are encouraged by the capacity increases that we're seeing and the translation of that into early growth. We need to build on that clearly in the coming quarters to see that push on. And then back to our research services. Good growth here, across chemistry, biology, and translational sciences, and we feel we're well placed, with our investments in new technologies and differentiated services, to look to build on this platform and see, growth coming in the coming quarters.
But, Mr. Bains, is Q4 looking stronger? Now, why I'm saying this, because considering FY26 mid-single-digit guidance, which was given by you, how is Q4 looking? Because Q4 has to be the strongest quarter if you have to meet that guidance.
Right. So in the light of, the ongoing challenge in the single large molecule, which I think has come in, a little bit higher than we anticipated, we will be making, an adjustment to our guidance.
And that change would be, so is there any change in guidance?
Yes, so the guidance, on revenue, we will be adjusting that from a mid-single-digit growth to a degrowth in the 2 to 3% range.
Understood. Well, thank you, Mr. Bains, for joining this conversation, and all the best for the business. Well, Mahima, this is the big statement coming. Syngene has actually reduced its guidance from, mid-single-digit growth to now degrowth of 2 to 3% for FY26. And that's the reason, if you see, the stock is down almost 4 to 5%.
Right. Varsha, thank you so much for getting us those details. I think the cut in guidance is the main reason as to why we're seeing that fall in the stock coming with regards to where Syngene International is concerned. But moving on, the other counter that's in focus is Interglobe Aviation, that is Indigo. We've seen the slowest growth in terms of a Q3 performance is concerned since FY21, that is since COVID. However, the revenue growth is better than what the street was expecting. Of course, there was a one-off of around 1,500 odd crores in terms of where the PAT stands, but we have Somit joining us to give us the entire detailed report as to how Q3 has panned out for something like an Indigo.
Well, if you look at the Indigo numbers on a consolidated basis in the third quarter, they were quite strong compared to what the street was anticipating. Now, the beat was largely that had come in on the revenue front, which also translated to a beat on the EBITDA front as well. The net profit number, however, that was impacted because of a couple of one-offs worth close to 1,547 crore rupees. Now, of this 1,547, 969 crore was related to labor code and 577 crore was related to the flight disruption. Now, if you exclude this, then the PAT number would have been close to 3,130. Again, this would have been ahead of what the street was anticipating. If you look at the company's fleet count, that also increased significantly by around 23 aircraft to close to 440. The guidance given by the management, however, that is not that great because they're expecting Q4 capacity growth of at around 10%. They're expecting their unit passenger revenue to decline by around early to mid single digit, and they're expecting their unit cost that to increase by around a mid-single digit for FY26 as compared to FY25. Now, what are we implying out of this guidance that the management has given? And that is a key negative that is coming in for Indigo. And that is the overall revenue guidance implies that overall revenue growth would be just around 4.5 to 6.7%. Again, this is the slowest Q4 revenue growth that we will see since FY21, that is since COVID times. The cost guidance, now that implies that in the fourth quarter, the unit cost could significantly increase excluding the fuel cost if you see. Apart from that, the Q4 profits could also come down significantly given the fact that there is a high base effect. Now if you remember, fourth quarter of FY25 was extraordinarily strong for Indigo given the fact that there was Kumbh Mela and hence there were more flights that flew and higher yields were also one of the reason. Apart from that, the management did not comment on whether their growth plans will slow down in the near term because of the new pilot norm. So that is also one of the concerns. And lastly, the management to NDTV's question did say that Q4 could continue to see one-off cost owing to flight cancellation. So these are broadly the negatives that are coming in from the Indigo results. However, the third quarter numbers were ahead of what the street had anticipated. Now do listen into what the management had to say when it comes to the decline in revenue and increase in unit cost.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
Okay, so that's the view coming in on Indigo. Let me get in Mr. G. Chokalingam, founder and MD at Economic Research. Mr. Chokalingam, welcome to the show. Always a pleasure to speak to you. I want to discuss three stocks with you. Let's start first off with the Indigo. On the back of the commentary on the impact and the outlook, what is your view?
I firmly believe that medium to long-term outlook remains intact. Even in this quarter, it is mainly because of negative entry in other income and exceptional expenses. It has posted a solid degrowth on year-on-year basis. But the fact is that the revenues are growing. And from economics perspective, I would say that it is very difficult to compete effectively and pull down the market share of a leader like Interglobe in the next 1 to 3 years, because it's a cash burning industry. And Interglobe sitting on a huge gross cash, though it has got a gross debt as well. But it's unique. Its balance sheet is uniquely positioned. Its market share also, it is positioning the company in a unique way. So it's going to be very difficult to replace or reduce market share of Interglobe substantially in 1 to 3 years. Yes, things may change after 3 years, but it's going to be very difficult. And secondly, the oil price still down 18-19% from 52-week high. And I have a very strong view that the oil price is going to fall significantly in the next 1 to 2 years. And that is also going to favor aviation industry. So therefore, I would maintain a buy recommendation on Interglobe.
Okay, so that's Interglobe Aviation. Moving on, Syngene is another one I want to talk to you about as well. The management actually has come on record on NDTV Profit and said that they've cut the guidance from lower single digit to negative to degrowth. The stock is trading at the day's lowest levels. What would you make of this?
Yeah, it's very unfortunate. It's a great company, great technology company, great management. But unfortunately, if you see in the last 10 quarters, there has not been a great upside in the revenue on year-on-year basis. And if you look at the operating margin also in the last 10 quarters, it has been consistently going down. And this quarter also, year-on-year basis, it is down almost around 700 BPS. So with this reduced guidance, and it is trading to more than 50 PE. So my point is, why should one give this kind of PE ratio when it is expected to, in fact, continue very, very subdued performance? Most importantly, even before making provision for labor code charges, its profit has come down drastically, more than 45%. So therefore, I would avoid. I might even take a courage to sell the stock and wait for 1 or 2 quarters before the company starts improving its business outlook.
Right. Quick view, Mr. Chokalingam, in terms of Paytm. Now, there is speculation that RBI may not renew PIDF after December 2025, which is the Payment Infrastructure Development Fund. And what reports or even analysts are indicating is that the Paytm may lose 200 crores in annualized operating revenues. But there are mitigation plans as well, wherein they're saying that by increasing the subscription price, they would be able to, mitigate it. And secondly, by not deploying unprofitable devices, the stock actually hit a low of 10% in today's session, intraday downtick. Currently still continues to trade under pressure. Your view?
I would sell the stock. Yes, the company has done phenomenally well in improving, operating margin from double-digit negative to positive around 7%. But the point is, last 3, 4, 5 quarters, there has not been a meaningful growth strong growth in the revenue. So I am very nervous to give this kind of valuation, as you also put out, some negative development in the industry, particularly for the company. So I would stay away from Paytm.
All right. So staying away from Paytm is the view coming in from Mr. Chokalingam. The stock tanking and how down by about almost 7% as we speak. But shifting focus to something like a Kitex garment, we've seen the kind of pressure that textile companies have seen. In fact, it's been volatile year for all of these textile companies, considering the US tariff trade did into consideration. But Kitex garment for second day in a row is seeing good gains. Today it's up by about 7%. And Puneet is joining us to give a perspective as to what's happening with this counter.
Well, thank you for that. It's largely been one of the big beneficiaries actually of the India-US trade deal. Now, that hasn't signed yet, but if it's the mother of all deals, as the EU Commissioner has herself said, Kitex could be one of the big beneficiaries. You're seeing an 8% up move on the stock today, although in the last 6 months it's down 37%. So it reflects the pressure that has been over the first Q1 and Q2 of FY26. If things do turn, and maybe they do in terms of the commentary by the company, it could be one of the big beneficiaries as well. Now, a lot of its exports come in the US as well as in the EU. If the EU trade deal does happen, it's a big beneficiary, and the US trade deal, while it has been much more talked about, could take some more time if needed, would be the other additional benefit for the company. If you also look at the global trends that are happening, and a lot of the production has shifted towards India, as well as reduction from Vietnam and Bangladesh, given the geopolitical tensions there. So it definitely could be a big beneficiaries. If you also see finally the revenue picture, over the last 3 years, the revenue has steadily increased from almost 553 crores to over 983 crores in FY25, but margins did get some hampering and some beat down because of higher interest costs on the net profit impact. So you have to watch out for that, but overall, a strong and big beneficiaries of the trade deal if it does happen.
Right, absolutely. Thank you so much, Puneet, for bringing us those details. Mr. Chokalingam, I'll quickly come to you on Kitex garments or the entire textile space. How, would you position yourself right now?
I would stay away. Of course, a company like Kitex and all is a great company, no doubt about it. But this morning we saw all media reporting European Union doing away with the GSP benefits for Indian goods exports. And among those goods exports, textile is one of the major exports. So already we have uncertainty from the US in terms of tariff hike. And particularly Kitex has huge capex in progress. So a substantial expenditure they have planned, and therefore the borrowing also has gone up. So with these uncertainties, I would sell Kitex garment at this price.
Okay, so that's with regards to Kitex. Now moving on, Tanla Platforms, that's seeing an interesting move in trade today, and that's on the back of the earnings that have been reported. 11% up move coming in there. Revenue has actually crossed that 1100 mark for the first time ever, and they've delivered growth across key financial sectors. Margins also have seen some interesting number on a sequential basis. I'm going to recheck if that can ever be the margin as well. The growth has been led by higher wallet share from the existing customers, and the focus of them is going to be investing in Wisely.ai. The investment is aimed at solutions for telecoms and enterprise. So that's the view on the Tanla Platforms. Mr. Chokalingam, any outlook over there? Because a 10.5% up move on the spectacular number.
To be very frank, I find it very difficult to understand Tanla business model, because there is a lot of trading of services. Employee cost is very low, unlike other technology companies. So that doesn't give me confidence. And market also, I don't know why with this kind of business revenue base and profits, it's giving a very low PE. So I would pause this stock. I would rather avoid giving any view on the stock.
Okay, all right. So that's the view coming in on Tanla platforms. The other counter that remains in focus is Deccan Gold Mines. Now, its arm, that is GMSI board, has approved right issue in the ratio of 2:1 for that 200 odd crores, and they've approved right issue at a price of 250 per share. The board is also, participating in this particular issue. Now, with regards guidance also, Mr. Chockalingam, where Deccan Gold Mine stands, they aim to have a profit of 200 crore by FY27. Is this a company that you're looking at from an investment point of view?
No, certainly not. The revenue is in poor single digit. I would rather wait for the company, build a revenue before giving a buy recommendation.
Okay, so that's with regards to Deccan Gold. Moving on, Bandhan Bank, the asset quality is improved in the third quarter. The profits are down this time around. The stock at the day's highest levels, 5.5% up move coming in there. Your view, Mr. Chockalingam, on a Bandhan Bank?
One can hold it. It is almost a slight discount to adjusted book value. So one can definitely hold the stock with the medium to long-term outlook.
Okay, so that's the view coming in on a Bandhan Bank as well. But completely out of time. Thank you, Mr. Chockalingam, for joining us on the show at NDTV Profit. Thank you, viewers, as well, from Mahima, the team that put the show together, and myself. In fact, lots more lined up on NDTV Profit. Please stay tuned. From Davos coverage, it is the last day, and you have budget, which is the next big event that all are eyes on, and what's happening across nations when it comes to all your tariff barriers, the trade deals that are being signed as well. Stay tuned to NDTV Profit.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
This is going to be shaky footage, guys. Look use for that in the back.
Delhi and Hyderabad teed off in style. The NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders.
Positive global handover weans off as Nifty fails to hold on to early morning gains, trades below 25,300. Broader markets though underperform as volatility index rises. Realty, banks and financials under pressure. Metals shine. And Interglobe Aviation reported a sharp decline in net profit in the third quarter of the current fiscal, weighed by one-time impact of new labour codes and flight disruptions in December. The company now eyes pilot hiring timelines and operational efficiency. On to earnings then. Premier Energy is under pressure after revenue misses expectations. Lower tax aids profit. And an improvement in the asset quality aids Bandhan Bank after the third quarter, where you do have the gross NPA ratio that declined significantly to 3.33% from 5%. Over 5%, brokerages remained upbeat, with CLSA and Macquarie optimistic on margin outlook. And among other Q3 contenders, Street is going to be keenly watching out for results of several counters, Cipla, Godrej Consumer and JSW Steel, as well as Shriram Finance, to announce results today. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But let's kickstart the show. Start by taking a look at the Nifty, of course, because you do have the Nifty that is not doing all that well for itself. You do have that positive handover that we have, a little bit of that, at least after that Wall Street strength. That has actually weaned off down about 90 odd points. It's Nifty for you. When you take a look at the list of sectors, it's actually metals that is broadly shining, and you can see that reflected in some of the counters as well. Whether you're talking about a Zinc, bunch of those counters actually that are buzzing away in trade. What's not doing quite well is perhaps a Realty. Let's quickly take a look at some of the counters that are buzzing away on the back of their earnings reactions as well. It's Bandhan Bank that is up about 6%. On the back of that asset quality improving in the third quarter, Home First Finance 5.5% uptick there. Hindustan Zinc, like I mentioned, 5.5% uptick there as well. And it's actually Swan Energy that is buzzing away, 5.5% uptick on that one on the back of an agreement as well. So there you go, that's a bunch of counters that are doing quite well for themselves. What's perhaps not doing so well is a Paytm that is down about 6% in trade. And PNB Housing also on the back foot. Other than that, there's also Eternal that is down about 4.5%, almost 5% right now as we speak. Axis Bank also under pressure, and BEL also trading with cuts of about 1.5%. So those are some of the counters that you're looking at. But let's also quickly take a look at what your commodities are doing, because you do have gold, of course, eyeing that $5,000 an ounce mark. And silver, of course, has been in focus. It's been a decent week coming in, albeit a week with a good amount of volatility when you talk about this entire precious metals pack. But let's also try and decode what the next week is going to look like from here on. And Biren Vakil, commodity consultant at Paradigm Commodity Advisors, joins us on the show. Good afternoon, and thank you so much for joining in.
Thank you so much.
It's a very interesting week. When you take a look at gold, when you take a look at silver, you do have a bunch of your brokerages that are bullish, at least in the near term. And you do have a bunch of volatility that we've actually seen coming in this entire week. Gold is still up about 8%. You're looking at that $5,000 an ounce mark as well. You're looking at silver as well. We've seen a great deal of volatility coming in here as well. But let's start with gold first. What is your outlook from here on? And what are you expecting, at least in the near term?
Headlines from Davos is hawkish enough to infuse fresh momentum impetus into gold. So I'm expecting further $100, $200 gains in near term, say 1 to 2 weeks. And we may see 5500 or 5500 in next 1 or 2 months. Technically speaking, as per Elliott wave, market is in fifth wave structure. And this is typical symptom of euphoria or mania condition, which are part of symptom of Elliott wave, fifth impulse.
All right, then, and it's very interesting what we're seeing coming in when it comes to brokerages as well. I wanted to also try and understand what you think about silver prices from here on as well. Are you perhaps that bullish when it comes to silver? Because, of course, that $100 an ounce mark is something that we're all looking out for.
OTC silver market in London is far end is quite tight. It shows backwardation, means actual tightness in material. So technically speaking, in London spot, we may see 110, 115 in next 1 to 2 weeks. And structure is still inverted in China as well. So I'm fairly bullish on silver.
So you're bullish on silver as well, but there's a bunch of triggers that you're looking at. You're looking at that entire de-dollarization trend also playing in. Is that something that perhaps makes it to your radar?
You fight between tangibles and fiat currency. So PGM is leading the pack. And among precious metal, I think platinum seems to be dark horse, and it is showing acceleration in momentum and new highs. So these core metals are silver is leader. Second in the place is platinum, and gold is also gaining further heights.
And when it comes to the entire geopolitical risk picture, is that something that you see weaning off in, of course, there's no crystal ball that we have here, but do you see that the geopolitical risk premium is going to be priced in from here on? Because there's actually a lot of uncertainty that we've seen just in the beginning of this year itself. Do you think the market is going to get used to this much?
I think Venezuela and Greenland factor and the latest talk of global board of peace, all these have shown greater elevation in geopolitical risk. I think it is still a lot of geopolitical risk yet to be factored in.
So lots that is yet to be baked in the pie, that's the word coming in there as well. But if someone were to perhaps start placing bets when it comes to silver, for fresh buys, what would you think that they should be looking at? What is your advice here? Do you think they should be looking at, if having an iron stomach, is that something that they should be a little bit ready for? Start with ETFs, or what's your view here?
Leverage is a tool as well as weapon. So for retail space, I think ETF is the best instrument to deal with current volatility, because current volatility is almost 5%, 10%, very high. So only deep pocket investors with proper risk management using options could test silver as of now. Otherwise, retail space may use ETF to participate the move.
No, absolutely. And I wanted to get a check going on copper as well, because, that's also quite important. Gathering pace, that entire rally there, is that something that you're also bullish on?
Currently, copper is in a consolidation, probably a corrective phase. But for the medium term, I'm bullish on copper as well.
All right, then. Thank you so much for joining in. Just one quick word from you. When it comes to the entire pack, gold, silver, as well as copper from outside the world of precious metals, what are you most bullish on for the year 2026 and also in the near term?
For near term and medium term, I'm fairly bullish on gold. But if choice given to me, I would prefer platinum, which seems fairly undervalued at current level.
All right, then. So that's something new to be looking at. Platinum, of course, we've been talking about this as well on the channel. Thank you so much for taking time out and joining us. So there you go. Add platinum to your list, as well as the commentary coming in from Mr. Vakil as well. But time now for a very quick break. More news and updates on the other side.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर।
Welcome back. Thank you so much for staying tuned in. Well, NDTV Profit has been traveling across India to capture the mood of industries and people ahead of the union budget this year. As part of our Budget for Bharat series, we reached Indore, the heart of the country's grain market and a major hub when it comes to agro processing as well. Now, in this bustling ecosystem of mandis, mills and exporters, my colleague Sharad met with one of the region's leading processors, Sri Kailash Grain Mills, to try and understand the key demand trends that are shaping the sector. Sharad brings us this ground report from Indore.
Hello and welcome to NDTV Profit. We are at Indore and joining us is Pankaj Goyal. He's the Managing Director at Sri Kailash Grain Mills. A very warm welcome to you and one of the largest players you are in this grain mills industry. Whenever we talk about the grain mills industry, we see about there's going to be a lot of people around, but I'm not seeing a lot of people around. A lot of automations are happening. Just explain us this process. How does this actually happen?
So if I talk about the grain industry, it's really transforming and it needs a lot of transformation. So we are talking about automation, and automation is mainly for consistency, and we are adopting a lot of the global technology.
Right now we are at the starting point of the value chain, I think. How does this process starts working? If you could just explain us.
So cleaning takes place through various equipments. We are removing the dust, we are removing the foreign particles. There are so many things which comes from the farm. And also we are taking so precise things where we are talking about even picking out the color defects in the wheat. So let's say in olden days, हमारी दादी हाथ से गेहूं बिनती थी. So even
तो
that
उसका
is
separate आप लोग कर
yeah.
रहे
So
थे.
that is also
अच्छा.
happening with the technology where we have a machines who is already sensing the grains with the color.
Are they separating?
Yeah. So this is the equipment which is separating the grains in terms of colors.
See, you know, this grain has become almost automated. Well, what's the future here?
So I have visited various countries and in terms of wheat processing industries. So over there we are talking about the dark mills. So dark mill is
You spoke about dark mills.
Yes, dark mills.
That means there's no person involved in the factory.
Yes, there is no person involved in the factory. Even the lights are completely off for the power saving, where they are controlling the cost, and the whole industry is being automated to the tune that a person sitting on a computer can operate the industry.
There seems some concerns are still there. Industry is having some kind of headwinds.
Yes, certainly. I am to say, being an agro-based industries, so always there is a lot of risk associated with the climate, and there is a lot of risk associated with the food security. So currently, the government is bringing a lot of policies every now and then, and we find there is a surprise every day. So we get a notification today, the exports are banned, tomorrow there is some stock limit. We have lost one of the very big market we developed in last 5-10 years.
And is this the export market you're talking about?
Yes, this is the export market. So we were one of the global players supplying to a lot of industries across Asia and the other regions. But since 2023, the exports are banned.
What's your budget expectations if you had to put into the government? What would that be?
In India, still the value addition is not as per the mark which is happening in the global standard. So to create this value addition, there is requirement of more stability in terms of a government policy, engaging with stakeholders, especially the industries, to have an outlook of the industry also. Certainly government is doing a great work on balancing the farm side and the consumer side, bringing the price stability. But in this whole game of, stabilizing the things, industry is really not able to survive. They're facing a big challenge.
We're talking about the consumer front.
Okay.
That's pretty interesting on that. But to put in perspective, what's so special about Madhya Pradesh and agriculture, especially the wheat front? Over here, I'm hearing a lot of different varieties of wheat. Where is being used? Is it just roti or something more?
So Madhya Pradesh grows very large varieties of wheat. So if you talk about for the chapatis, you have a sharbatis, which are specialized wheat, which is grown for good chapatis. You have a durum wheat, which is used for pasta making, for semolina, for halwa, for upma. You have other varieties of a wheat which are good for bread making.
But Gen Z viewers, they are also very particular about the protein front.
Correct.
They seek protein in anything and everything. So over here, what are the protein related products which everybody wants to know?
So durum wheat is really a rich protein product which is used for making good quality pasta. As compared to the other varieties of wheat which are there in the market, the durum wheat has higher protein levels, up to 11.5% protein level.
But apart from that, there is also northern India and the southern India markets. They behave very differently.
Correct.
So you are into grains, but of course one area rice is also there. So how do you balance this up?
The North India market doesn't pay much premium for the atta.
And why is that? Why doesn't North India pay that much? घर में ही बना लेते हैं.
चक्की में पिस जाता है. So that is a homegrown product. And certainly if you go to South India, for the chakki atta, they are ready to pay the higher price because that is something, a unique product which is not a homegrown product.
What are the initial demand trends looking like,
In India, in last 5-10 years, we have seen a big change in the consumer demand in terms of packed food. So atta which used to be grinded at the homegrown chakkis or atta which used to be sourced in the bulk in the loose has now changed completely. Consumers are looking more packed and safe food where they're asking the trust on the product which they are consuming. So more consistent product, more quality conscious product, that is what the consumer is looking for.
Thanks a lot, Pankaj, for giving us the entire industry view, what the budget expectations are, and of course for the future itself, best of luck from NDTV Profit to your entire team. Thank you.
Thank you so much.
Aradhan, there you go. So that's something from our Budget for Bharat series. But the voices that matter are all at Davos 2026. Let's now cut across to an exclusive conversation coming in from Davos, where Indian leaders share their insights on the defining forces shaping the global economy.
We've been talking here in Davos about tariffs, geopolitical concerns, and what it means for the world. But one area where the impact is seen in a very sharp sense is trade. And to give us perspective on what really the geopolitical and tariff talk means for trade is Anil Mohta of DP World. I would describe this company as one of the world's largest logistics company, end-to-end supply management, basically the job of getting goods from one place to another. That's what they look at. Anil, thank you so much for joining us here at the NDTV studios.
Thank you. Thank you for having me. It's a pleasant weather today relative to yesterday. And there were a lot of concerns yesterday about what is going to be said about Greenland and what's the impact in terms of the global alliance. So I guess a lot of those concerns stay rested today. Let me talk about tariff, trade, global policies. What does that mean in terms of the global trade? If you look at the overall volume of trade, the volume of trade has never come down. You see a year-on-year increase in the global trade. Tariff has some impact in terms of people trying to see which is the best place to procure their goods. But in terms of the overall value of the goods, if you start looking at what is it in terms of impact for the full value of the cost of the product, it's not that substantial. In the past, the US tariffs used to amount to more like 2.5% on an average value of a good that a person would consume, which today is more in the range of 10 to 12%. Yeah, 10 to 12% cost of goods increasing relative to the price people were paying for the tariff ocean freight during the COVID times is not that meaningful. Yeah, so it is not something that is going to deter people from consuming goods. What people have to consume, they will consume. The price will be a little high, but it's not as bad as what people were paying for freight back in 2022-23. Now, we need to think what is the objective and what is going to be achieved out of these trade policies and how the developing markets can position themselves into China plus one or China plus many strategy. The tariff has been introduced with the intention of creating trade balances with the countries, with the intention of promoting production within the home countries. Can it deliver the outcome in places like US and Europe? It's not just the labor cost that matters. It's more than the labor cost. Labor cost arbitrage goes only few miles. It's the overall productivity gains that you achieve is the most important thing that matters. And that is where countries in the developing markets needs to create the full ecosystem for trade to grow in those countries. It's not one thing that matters. Having a good port is important, but having a good free zone or an industrial zone around that is equally important. Giving a comfort around the regulatory certainty is equally very important.
No, so let me come to some of those 2 points with more details. Number one, you said that the impact on the value of trade has not really changed with tariffs. People pay the extra because they have to. But that's on an absolute term. There would be a difference in some discretionary and non-discretionary items. Pharmaceuticals, etc., yes, no matter how much you charge, people are going to get it. But have you seen certain buckets of trade or sectors of trade taking a hit or certain routes taking a hit?
Trade is like a river flowing through the mountain. it will find its way. You create obstacle, it will find alternate ways to find its ultimate consumer. And that cannot be stopped by putting in, artificial blockages like tariff or currency restrictions. We have not seen the trade reduce in terms of quantum. Year on year, we are seeing the trade volume increase only.
Other than that, right, there is commentary coming in as far as Davos is concerned, but let's also put the spotlight on some of these counters that are in focus on the back of their earnings that are going to be reported. So it's actually a JSW Steel that is down about 1%. Bunch of other counters also in focus. In fact, let's take a look at Cipla that's also set to announce its numbers. You do have US pressure that's still intact. Can the India business and companies quarter really sort of see a pickup here? Varsha, in fact, is joining in with that answer.
Well, thank you so much for that. We'll see a weak set of numbers when it comes to Cipla. Now, let's highlight the concerns. One is the US business, which is still under pressure. The base US sale is expected at around $215 million, which will be impacted by Revlimid, that is the cancer drug cliff. And the price erosion continues to be a key headwind. Overall, the US business remains a concern. When it comes to the drug, which is lenalidomide, the Cipla has regained traction in that drug, but has also reached the market share of around 24%. But it faces competitive risk from the Amneal's entry, and sustainability of market share will be closely watched. Then talking about the India business, well, the domestic business is expected to grow at 7 to 8%, but the growth is not sufficient to offset the US weakness that the company will see, and this will have a limited impact on overall consolidated performance. So overall, on a net to net basis, if you see a weak set of numbers for Cipla is expected, well, we'll see when the company will announce its results in today.
Aradhan, thank you so much, Varsha, for joining us with that update there. So there you go, that's Cipla for you as well. But tell you what, that's all that we have on the show for now. Thank you so much for tuning in.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
shaky footage, guys. Good news for that in the bank.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground.
Hello and welcome to NDTV Profit. My name is Varsha. Well, KEI Industries is in focus. Now, this is on the back of Q3 FY26 numbers. Just for the benefit of viewers, let me just, tell the numbers. The revenue was up almost 20%. EBITDA was up 30% at 320 crore versus 240 crore last year. Margins were at 10.8% versus 9.9% year on year. And profit was up almost 43% at rupees 235 crore. But, to speak more about the numbers and what lies ahead when it comes to next 2 to 3 years, I'm here joined by Mr. Anil Gupta, who is Chairman and Managing Director of KEI Industries. Well, Mr. Gupta, welcome to NDTV Profit and always pleasure to have you. My first question would be, if you see the revenue saw growth of 20%, this is below estimates, what Street was estimating, because of the lower growth in your key C&W segment. Now, what led to this lower growth and what's the outlook from here? If you could update us, as you reported, I think lowest growth amongst the key peers in C&W. So if you could, just give us the outlook on that.
Good morning. The issue, the lower revenue growth is mainly due to because we had capacity constraint in our cable factories, and due to which the revenue could not grow. Now, with the commissioning of our Sanand plant in end of December, and now production being ramped up from January onwards, I think we'll come at par with our industry peers in terms of revenue growth. It was our interactions that, considering the demand and scenario, we are for short of capacity, and hence we started building up new capacity 2 years back. And this problem should be over from the fourth quarter.
Got that point. Also, sir, then with that, do you still stick to your growth guidance of around 18% for FY26 and 20% over FY27 and 28?
Of course. In this financial year, we definitely expect to grow by 20% overall revenue for the full year. And next 3 to 4 years, we will grow by 20% CAGR with the upcoming capacities being lined up in our new plant.
Understood. And Mr. Gupta, in Q2, you outperformed your peers due to higher export sales. And in Q3, if you see, the institutional export sale was seen, the share has gone up sharply. What's the growth seen and targeted here? And high margin exports will be driven by which categories? And thirdly, the export order book, especially Sanand project and key markets for that, if you could update us with all the 3 questions.
Yeah, we have grown significantly in this financial year in exports. Over 9th, in the third quarter, we have grown by around 95%. And in the full year, we have already grown by around 80%. Our major markets of exports are Middle East, Australia, and now Europe. And we are continuously adding geographies in our export basket. and we expect that this growth in exports will continue in the coming years as well. The exports will be targeted from our existing factories as well as our new plant coming up at Sanand. And I think, but we will be equally focused on our domestic market and gaining back domestic market share also, which from our new facility.
Yeah, shifting our focus to Cipla, because Cipla's Q3 earnings is out, and a weak set of numbers is being seen when it comes to Cipla. The net profit is at 676 crore versus estimates of 1,000 crore, though there was a one-time impact also of around 276 crore on the new labor codes, but EBITDA is down 37% at 1,255 crore versus 1,989 crore. Margins are at 17.7% versus 28%, and net profit is down 57%, and revenue is flat at 7,000 odd crores. Now, the problem over here is it missed estimates by a strong margin. Now, one of the reasons we are still waiting for the press release for the company, but one of the reasons would be a low US growth, because US growth is still under pressure. This is equal, or this is true for every pharmaceutical company, because the base US sales was actually expected at around $215 million, and this US growth was expected to be impacted by Revlimid patent cliff, and the weakness was partly offset by, or this was expected to offset by lenalidomide and arbitral growth, and there seemed to be pricing erosion also in US market, which might have impacted the overall revenue for the company. If you see, the Cipla had regained traction in one of their products, that is lanreotide, which had a market share of around 24%, but they face incremental competition risk from Amneal's entry, and sustainability of market share will be closely watched when it comes to this product. India business was expected to grow at 7 to 8% year on year, but overall, if you see, the numbers were expected to be weak, Somit, but the miss is by quite a large margin if you see.
Yeah, and it completely seems like the miss has come in from the top line, around 500 crore miss on the top line, which has trickled down towards the bottom line. Obviously, there's that one-time expense, I believe, because of the labor code, but the EBITDA margin miss is really 600 basis points. I guess analysts were expecting the EBITDA margin to be close to 23%, but it has come in at 17.7%, so that's a big miss coming in. Let's get in some view from Prashant Tapse, the Senior Vice President, Research Analyst, Mehta Equities. Prashant, did you get the time to go through the Cipla numbers? A big 500 crore miss at least that we see on the top line front. 7,074 crore is a number that has come in. Analysts were expecting this number to be close to 7,500 crore rupees.
Yes, you rightly pointed out. I think the major downside has come from the export businesses because of the US and India trade deal. There is some kind of pressure with respect to the export opportunities, and even when we say export has high margin business, so that is also contributing lower pressure on the EBITDA level. So overall, the numbers on the top line, bottom line, as well on the bottom line. So I think if you consider there is a good miss which has been seen on the back of street estimations. That is the reason why the stock has been down, and the stock has been continuously down from the last 1 week, expecting such kind of bad numbers in the market. But this picture remains same with everyone. If you see Dr. Reddy's, if you see other companies, pharma companies which are exposing more to the US. So similar kind of top line miss, similar kind of marginal hit has been seen in the industry. So I think the total everything has been discounted right now. I think the coming quarter would be a major wait and watch for us. If the deal goes well, I think the margins will recover back to its 24-25 levels.
Hi Varsha, this side, pleasure to have you. Though I agree for the US thing, because this is the US pressure is, would be seen in every pharma company, considering the Revlimid phase out, that all the companies will be seen. But domestic growth, I think, was also low when it comes to Cipla. But overall, on a pharma pack, if I were to talk about, apart from Cipla, which are the other companies that you are bullish on, considering the Q3 expectations that investors have built in?
I think granules would be one such stock which I am very much bullish on, considering more growth from the domestic space. I think that stock looks very good, and that is in our in-house research counter. So that stock we are very much positive and expecting a better Q3 as well as the full year numbers for FY26. So second half is going to be better EBITDA improvement expectations in granules and as well as on the full year aspect.
Right. From Cipla now, let's shift our focus towards the small cap stocks. And today, first, let's discuss what's on the show. Firstly, as we were speaking with the management of KI Industries, the outlook was something important to track. But apart from that, we'll be talking about Infobeans Technologies. Now, the company reported a weak set of numbers. The net profit was down 17%, and that is the major reason why the count is also weak in trade. Dhampur Bioorganics, and the stock is seeing some kind of did see some kind of short covering yesterday. Now, this was on the back of strong Q3 numbers that we have seen coming in from Dhampur Bioorganics. Anthony West, something the stock has moved nearly 10% up on intraday basis. And lastly, we'll be speaking about Deccan Gold Mine. The stock is up nearly 21% in the last 1 month. And out of the last 7 sessions, the stock has been gaining for 6 out of them. If you look at the profit number for FY27, the company is eyeing a profit of close to 200 crore rupees as against a 45 crore loss of that we had seen in FY25. And if you look at the markets, the Nifty 50 is down nearly 220 points, broken below the 25,100 level, and yet again the benchmark index is below all its key moving averages, below its 50, 100 and 200 DMA. Among the sector indices, other than Nifty Pharma and Nifty FMCG, all the sectoral indices are down more than 1.5% in trade. Nifty Real Estate Index is down nearly 3%. Nifty Energy down around 2% and the Nifty Small Cap Index, that's down close to 1.5% in trade. Nifty IT and Nifty FMCG, these are the only 2 indices that are largely flat in trade. But Varsha, when it comes to the small cap segment, what's been buzzing here?
Well, we are seeing some bit of pain when it comes to small cap segment also. If you see, it's down almost 1.5%. But let's see which are the stocks which are moving. As of today, you have Ashoka Buildcon. The stock is up. This is on the back of course, order win. You have Mukka Proteins. You have Jindal Poly Investment, wherein the stock is buzzing on the back of strong volumes at around 5 times. Even Everest Kanto, if you pull up that stock, the stock is buzzing on a very strong volume at almost 92x. The volumes are at 92x of its 30-day average. The stock is up almost 11%. Patel Retail, if you see, is buzzing on the back of volumes at 2x. But on the losers side, though, you have HG Infra, wherein the search was conducted at companies of EPAC, Prefab, Tatva Chintan and Khaitan Chemicals, are some of the stocks which are on the losing trend when it comes to overall small cap. But moving on, Infobeans Tech is in focus, is cracking in trade. This is on the back of course, Q3 FY26 numbers. But let's get Jasmeet in to tell us more about that.
Well, Varsha, thank you for that. If you look at this particular counter, let's quickly understand what does the company do. Well, company operates in AI-led service transformation space, and company has huge clients including Microsoft, ServiceNow and Salesforce. If we look at the overall key numbers, we see a weak set of numbers coming for this particular counter. The margins have dropped sharply in this particular quarter, though the company has done well on YOY basis. But given an IT company, we generally track it on QOQ basis to get a better understanding of the company. On QOQ, the number looks pretty weak. If we look at the next aspect, we also say that the overall revenue sees a good growth, a broad-based growth seen across geographies for revenue figure, but the margins are under pressure as the employee expense rose at 14% versus the revenue was 7%. So expenses grew faster than the overall top line. That's what impacting the margins. In terms of the other key highlights, the management did approve a bonus issue of 1:3 share. That means every 3 share you hold will get 1 additional share of the company. Apart from that, revenue is up 7%, EBIT is down 2.9%, margins are down by 185 basis point, while the net profits is a down to 15%. Management remains positive about the new labor code and says they have already included that impact in this particular quarter and don't see any much impact going forward. All in all, we see a weak set of numbers coming in for the company, but the guidance of the management remains strong going ahead.
So much, Jasmeet, for all the details. Well, Prashant, what's your view when it comes to Infobeans? The numbers are weak, but the guidance remains strong, and also your view on overall IT sector.
I think despite the guidance have been very strong from the management, the numbers looks very weak, almost below the street estimation. So One, again, the stock has rallied a lot because of the AI integration, and a lot of AI focused stocks have been rallied in last two quarters. So I think the expectations of the earning growth were very high in the investors category. So that led some kind of disappointment in the investors, and then leading to such kind of profit booking attempt in the post result impact. But again, IT industry, I think we need to wait and watch for clear deal which is going to happen between India and US. I don't think, because the way how TCS, Infosys, HCL Tech, as well as Wipro has provided their numbers, there is a very mixed action seen in this stock. But overall, many stocks which are focusing high on the AI may see some kind of good interest. But this would be some kind of wait and watch approach for me.
Anthony West, that counter continues to remain in focus. Multiple order wins is something that they have announced in the past. Today, the stock is up nearly 13% despite the weakness that we are seeing in the market. What could be the reason? What could be happening in this counter? Let's get in Jasmeet to give us more details on Anthony West.
Well, Sumit, thank you for that. As rightly said, the company has been buzzing recently on the back of the huge order wins the company has been getting. If we look at the overall business update for the Q3, the management has remained positive. The overall update says the core operating revenue has grown 9.2% in this particular quarter. Further, the overall total waste managed by the company also has an uptick of roughly 19%, while the processing activity also jumped over 26%, while the sales, that's something which will be in focus for the counter, which sees a decline on RDF level, even on the overall composite sale level. Though the management is increasing the intake and the volume of tonnage they process, but the sales is something which is dropping, seen in the Q3. If you look at the overall key wins, the company secured 2 recent orders from the BMC for waste management of roughly 1,300 odd crores, and the order book of the management stays strong at 12,500 odd crores as of September 2025. Now, in terms of the outlook, management expects a compounded growth of 25% over next 4 to 5 years going forward. Further, they also see a key investor, that's MIT, having stake in this company, which makes an overall a positive up move for this particular counter. All in all, the company does waste management services for various government projects as well. We see good operating leverage and operational performance of the company, but the stock is also performing in the same line with what we were expecting. The sales is one figure that will be in focus, given it's a downtick in the Q3 compared to previous quarter on YOY basis.
Right. Prashant, Anthony West, multiple order wins is something that we have seen in the recent past. Management is quite confident of a strong growth. In fact, multiple analysts or multiple brokerage notes were also citing 25% growth coming in. But at the current valuations, do you think it would be a right buy?
I think yes, considering the visibility of the companies by having a 1,000 crore top line recent and 12,500 crores of order book, there's a good 12 year kind of decent visibility of the top line. Obviously, this kind of sector requires a lot of hard work and a lot of government related job works and all. I think they have done really well by getting that BMC order of almost 1,300 crores. So I'm very much positive at this point of time. Yes, the valuations are still comfortable for me. Quarter-on-quarter analysis should be done because the way the EBITDA margins have been volatile from last 2-3 quarters. So that has to be sustained by the management and maintained, make sure they earn well with respect to the new orders what they are getting. But overall, yes, positive view at this point of time.
Before moving on to our next small cap stock, let's get in Puneet first to understand what's been buzzing in the FNO side. Puneet, a very weak trading session. Nifty is down nearly 200 points in trade. Anything that's been in action here?
Well, multiple stocks that are in focus, but let's firstly quickly start with the Sensex, because here, as you rightly said, a lot of pressure that we're seeing across the markets today. Stocks like Eternal, Adani Ports and Indigo have biggest losers in the Sensex. There is some respite on the consumption names like Asian Paints and HUL, but largely a lot of pressure across a bunch of stocks, which is dragging the Sensex today materially in the red as we speak. When you look at the most, the top trades, of course, ITC, Axis and HDFC come and focus on the list with the top volumes also as visible on your screen. When you move on and look at the other key aspects, that's of course the most active contracts. You've seen 82,300 have the most one, with 80,800 also continuing that aspect. In terms of the puts, 80,700 is one of the key levels that we're watching out for. For the BankX, that's the other key aspect. IndusInd, Federal as well as SBI are in focus. IndusInd also has its quarterly results today, so you do have to keep this counter on your radar. In terms of the most active contracts, you've seen largely for the BankX, 67,600 is the one on the calls that you have to watch out for. On the put side, 67,700 also is seeing active interest, but it's 64,700 that is seeing the most. Finally, in terms of stocks, what do you have to watch out for in terms of long build-up. There's Bandhan Bank as well as Hindustan Zinc that are in focus. Apart from that, short covering is seen in Nalco. After a very quick run-up, Nalco is back in focus yet again, while short covering seen yet again in Ashok Leyland. You have to realize that Ashok Leyland was at 280, had the bonus issue and the corporate action, and from 140 yet again, stocks almost closing in at 200 rupees per share. In terms of long unwindings, you're seeing Premier Energies as well as Syngene, which are the ones which are seeing long unwindings. Syngene, of course, we've been covering since morning on the back of their quarterly results. And finally, short build-up on Paytm as well as PNB Housing. So these are some of the key stocks that you have to watch out for your radar as per the BSE FNO setup.
Well, thank you so much, Puneet, for all the details. Well, moving on, let's pull up the chart for Dhampur Bioorganics. If you see, the stock is, the stock is up. Now, this is on the back of course, Q3 numbers. The stock is up almost 20%. Let's highlight the Q3 FY26 numbers. One is the revenue reported a decline mainly on account of lower sugar sales, but the profitability, if you see, the profits were positively impacted due to higher margins in sugar. Net profit was positive at 17 crore after sequential losses, showing operational recovery. Now, talking about the growth drivers, there's a seasonal cyclical recovery that has been seen. Sugar industry typically sees this swings, and the Q3 profit recovery shows ability to manage through seasonality. Talking about the diversified product mix, beyond sugar, biofuel, spirits, ethanol, renewable power and chemicals are some of the, the diversified product mix that the company is eyeing. And of course, onto the capacity expansion, the new dual feed distillery is expected to be operationalized, in next few quarters, boosting fuel, ethanol and spirit volume. So overall, the Q3 company turning profitable is one of the reasons why the investors are, eyeing on it. But let me go across to Prashant. Prashant, what about Dhampur Bio? The stock is up 20%. What will you advise to investors? Should they book profit or should they, hop in considering the growth prospects that this company has?
I think if someone has luckily bought this at recent lows of 80s or 75s, they should try to book profit at this point of time. I think the numbers were really surprising to see. After long underperformance of 2-3 quarters, the company has turned to be a profitable company. I think the more on ethanol as a business outlook, that is the stock is doing really good. But again, at 95 upper circuit, it's a way to go and book profits.
Kitex Garment is the next stock that remains in focus. On an intraday basis, it was up as much as 11% on the back of strong Q3 numbers, I believe. If you look at the volumes, they are nearly 8 times its 20-day average. Let's get in Puneet with more details on the same.
Well, thank you for that. There's also, definitely the earnings part that are in focus, but the India-EU trade deal is also one of the big beneficiaries for Kitex. Now, some comments coming in Davos about the mother of all deals for India and EU could be one of the potential triggers apart from earnings as well. Barring that, EU and as well as the USA is one of the key trading partners for Kitex as well in terms of the export geography. So any kind of respite on that, which has been hampering the stock over the last 6 months, stock's down 37% in the last 6 months, but an 8% move today and continuing that momentum, slipped to 5.5, but definitely a positive move for the counter. The other aspect is that, post FY25, the company's interest costs actually had increased quite a bit, and you saw that impact in the FY25 profitability, but revenue growth over FY23 to 25 has been quite strong. So you have to keep H2 FY26 a key one for this counter. It's a make or break in terms of the performance that could lead the momentum in FY27, but one counter you have to have a focus on.
Right. Prashant, any view on Kitex Garment? The stock is up nearly 6.5% in trade today.
I think it was a very sentimental impact with respect to their quarterly earnings as well as the deal which is going to happen with EU and India. So some kind of positivity is more focused on the textile as a segment. So overall, that is the reason that the stock is up, but I don't have tracked this company fundamentally.
Well, thank you, Prashant, for that. We on to our other stock, which is buzzing in trade, is Deccan Gold. Let's get Mahima in to tell us what's happening with this counter. Mahima, over to you. Right, so overall, of course, not at its day's high point. The stock has fizzled out since the high of today's trades. But in terms of where this particular counter is concerned, there was a recent news that did come out with regards to its arm, that is GMSC board, that did approve rights issue of 2:1 in that ratio, and this for roughly 200 odd crores, and this was at the price of 250 per share. In terms of where the growth pipeline for this particular counter is concerned, management is allocating into different parts of different global countries in terms of where 2026 drilling capital stands. In Finland, in Mozambique, as well as in India. For Finland, it's the gold project. For Mozambique, it's the copper and gold project. For India, it is nickel and copper project, and Mozambique, another lithium as well as cesium project is underway. In terms of where the financial stands, the company is of course yet to kickstart in terms of where the revenue stands. Just did about 5 odd crores in FY25, made a 43 crore of loss in FY25. So everybody who's kind of invested in this counter wants to know as to how visibility looks like. When they spoke to NDTV Profit recently, they said that they expect PAT of over 200 crores in the next year when these mining start to realize. And FY29 bottom line, they expect to reach by 400 to 450 crores. But we'll have to wait and watch out for us to whether this actually materializes or not.
Well, thank you so much, Mahima, for all the details. Prashant, what about this counter? A lot of investors are actually, interested in this counter. In the last 1 month, the stock has given a good returns to investors. And, I guess investors are waiting for that one positive quarter, considering the 200 crores of guidance for FY27. What's your view on that?
Very high risk optimism in the counter right now, all because of the gold, which is being very shining from last 1 year at least. So if they are getting some kind of production trials going right in the Kazakhstan gold mining, and that will also trigger a lot for their profitability, which the management has guided. But again, a very high risk, high return category investors can think of taking any position in this. And a lot of big investors are also showing interest because of their visibility with respect to production of gold in all their mines, which they have declared right now. But yes, it's a high risk call, but overall gold being the very shining segment, so the investors are focusing more on this.
Right. Well, thank you, Prashant. Thank you for joining us and giving us your perspectives on the stocks that we discussed today on the Small Cap Show. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story।
Hello and welcome. You're watching the afternoon edition of Ask Profit. Viewers, you're tuning in. This show is directed towards answering all your stock related queries. But before we move on to the queries, let's take a quick look as to how the markets are doing. Clearly under pressure. We are well below the 25,100 levels now for the Nifty 50, down almost 1% there. The Bank Nifty also facing equal pressure, down by about 1%. Right now, let's try to pull up the Nifty 50 heat map and see as to what are the counters that are actually kind of keeping the Nifty in check. And you know, there's red across that sea, but you still have some counters like Dr. Reddy's, which is holding up, given up of course you know, some profits for the day, but Dr. Reddy's, Asian Paints, HUL are some of the counters which are up and about in trade just by 1%. But something like in Eternal, Cipla, Interglobe Aviation as well as Geo Finance, all down in that range of 3 to 5%. You have Power Grid, Bajaj Finserv, Axis Bank as well as BEL, Maruti Suzuki, Trent, Kotak Mahindra, all down by about 1% each. So that's with regards to where the markets stand. The sentiment not moving positive is what we are seeing. The VIX also, if we can try to pull that up. The India VIX also is you know, kind of inching up. Let's try to pull that up because it's up by almost 7% right now. You know, in the midday it was up by about 3.5 odd percent. 7% is quite volatile, so that's what the mood of the market is looking like right now. Let's quickly pull up the sectoral heat map as well to see as to what sectors are looking like right now. All in the red, and you know, there's no surprise there. Nifty Realty, the biggest loser, down by about 3 odd percent, followed by something like a Nifty Media, Nifty Energy, Nifty Defense, Nifty PSU Bank, as well as something like a Nifty Bank, Oil and Gas Consumption, all down in that range of 1% to 2% each. In terms of where the advanced decline ratio is concerned, because I'm sure that this, you know, gap has also widened in how throughout the day. Because it's down by about you have like 500 odd advances versus that of almost 2,000 odd declines. So that 4:1 ratio in terms of where declines are more than advances is what we are seeing. With regards to where the broader markets are concerned, Puneet, I think the pressure has continued and still continues.
Well, continues to be so, and that's very well visible in the declines as well. But you know, the flash on the bottom of the screen, you know, rupees hit a new all-time record low as well at 91.89 as we speak right now. And you know, stop losses are triggered on the short bet, so you have to continue to monitor this aspect. But definitely, it's been a while since we've, you know, addressed the rupee, because we saw these interventions coming in from the RBI. Not today, at least. Hit a record low of 91.90, and then currently trading at 91.91 will be the other key aspect that we continue to monitor very, very closely. Before we move on to the broader markets and that action, Shriram Finance is the other one I want to quickly highlight because the earnings came in and it's a very important set of earnings. Likely let's quickly pull up the Nifty IT as well. Let's see what it's doing because it's one of the biggest beneficiaries of depreciating rupee as well. But that consistent pressure that we've seen on the rupee it does highlight that impact of continued volatility as well. So quickly pull up the Nifty IT to see if there's any intraday moves that we are seeing on this particular counter as something to watch because you do see all of those stocks come back into fray. You get the oil and gas companies also come back into fray once there's very stark pressure on the rupee. So that continues to be that impact as we say. But overall that impact is definitely one key impact that we continue to monitor, Mahima.
All right, okay. And as Puneet was mentioning, rupee yesterday we saw the biggest fall, single day session fall in the rupee. Today also hitting another new lows is what we're seeing now. 91.9 is what we're seeing in terms of where the rupee dollar rate is concerned, down almost 0.3%. So that's with regards to where the rupee dollar rate goes. But we're also joined by Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal, and Lancelot Dikuna, CIO at ValueX Wealth Connect, joining us now. Ruchit, before I take on the quiz, I think it's important to have your take in terms of where the markets stand. We're well above the 25,100 levels also now. What is the kind of support that you're now seeing?
There's no doubt about the trend for the market, which changed in the second week of Jan. Earlier, since the month of October till this first week of Jan, whenever there were corrections in the Nifty, the 50-day EMA was acting as a support. That support got breached on 8th of January, and that too with a significant negative market breadth. And after that, if you look at from 8th of Jan till now, the market breadth has consistently been on the negative side. So still no signs of reversal. Minor pullbacks are getting sold into. I think 24,800, 24,750 is the next support that we are watching out for. And now whatever lower top, low bottom structure, if until that negates, along with the positive market breadth, then only I think the structure overall would change. Otherwise, on any kind of pullback moves, we are likely to see continuation of the selling pressure.
All right, okay, so that's the view coming in on with regards to where the Nifty 50 is concerned. Quickly, in terms of where Shriram Finance stands, your net profit has come down by around 29%. Your net interest income at that 6,500 crore mark versus an estimate of 6,535 crores, so largely in line with where the estimates were. In terms of the overall, NII stands, the uptick has come in at that 18% mark. Let's quickly pull up the chart. Not doing much in trade right now, not reacting much. There's a slight spike that, of course, we've seen post the earnings were announced, but trading around 0.8% higher. But with that, let's dig into the queries. The first question that we have is from Mali, who is writing us from Hyderabad, asking about Newgen Software Technologies, whether this is the right time to make an entry into this counter or not. Ruchit, your view on the charts?
I recommend to avoid fresh entry as of now. Overall, the stock has been an underperformer since last few months. It's not that the stock is correcting along with the market since last few days. But in last few months, in the last entire 1 year, we have not seen any kind of uptrend coming in the stock. So the stock on the weekly as well as the monthly stock charts have also breached its important support. So until we see any change in trend, better not to do any bottom fishing.
But the other one that's coming in on Suzlon now, the next query. And Shinoj from Abu Dhabi actually is writing this question. He's bought it at 59.5. So, pardon me, currently sitting on a loss of almost 52,000 rupees. Lancelot, should he continue to hold or what would you recommend him to do with Suzlon?
I think, while business seems to be slowly stabilizing for Suzlon, given that, the outlook is a little difficult for the wind market, and the trends that we've seen is that it's become more competitive in this market, and people have become a little bit more wary in terms of expanding their wind energy footprint. Growth could look to slow down over the next 12 to 24 months, and it is valued at around 20-22 times earnings. So I think one should probably wait out. Or if one has to book losses, it may be worthwhile booking loss and then wait for a lower level. Maybe that you can add at lower level again.
Focus to rupee back again. It has hit a record low of 91.95. To give us more clarity on this, we are joined by Anindya Banerjee, SVP Currency and Commodities Research with Kotak Securities. Anindya, 91.95 record low level, near to 92 is the number that we are now seeing. What is causing this fall?
Yeah, a very good afternoon. Thank you for having me. Actually, it has been always the equity FPI outflows which has been doing this, and today the sudden fall in the equity market is, I think, also causing this downward pressure on the rupee. And once it broke the recent all-time high, a lot of stocks got triggered of the importers, and we saw this flurry of buying. And seeing this rupee weakness, exporters are not really hedging. So from that part too, the supply is coming up.
Right. Few dealers were saying that their stop losses had hit because of the sharp fall that we are seeing in the equity markets. Do you see that also one of the reasons why we are seeing this kind of reaction when it comes to the Indian currency?
Yes, it is, because Indian rupee is already one of the weakest currencies in Asia. So whenever there is a sharp fall in the equity market, it is seen as a kind of signal where the speculators come and short the rupee, especially in the options. So that also adds to the pressure. So only when the RBI will step in aggressively, we will see a turnaround.
And do you expect Reserve Bank of India to step in? Because a couple of days back, I believe they had stepped in. And again, after that, we are seeing this kind of a downfall. Multiple analysts are saying that the worst is over, but it doesn't seem like.
Right. Actually, RBI, yes, the RBI generally tends to step in whenever there is a 80 paisa to a 1 rupee move, like almost we have seen today. So we would see the RBI step in above the 92 levels. But what is happening is RBI is not selling very aggressively. They are not continuing the selling. They are coming to the market, selling dollars, and then going away and letting the market dictate the price, because I think as long as the trade war is on, they will continue to use the currency as a tool to fight the trade war.
And just one last question, Anindya here. Where can we expect this to stop? Because when I remember when it had hit 90, there were multiple foreign global broking firms were saying that the worst is over. At 91 again, they started saying that the worst is over. And now we are nearing 92.
It's very hard to put a number, because see, it's already it's quite undervalued based on many models that we use to look at a currency. Currently, it's completely flow-driven, sentiment-driven. So what is needed is a kind of a positive trigger. We'll see whether the EU India FTA can be that, but I think the India-US FTA could become that trigger. So till then, we have to wait.
Well, thank you, Anindya. Thank you for joining us and giving us your perspectives on the Indian rupee. Back to you, Mahima.
Right. Thank you so much, Somit, for bringing those details with regards to where rupee, of course, we're seeing hit its low point, and we've seen this in the past couple of days. Every day is a new record low for the rupee. We'll have to wait and watch out for us to where this stops at the end of the day. But moving on, the next question that we have is from Deepak, who's writing us from Hyderabad. By the way, viewers who are tuning in, you can also give us a call and ask your queries straight away on the call on the number that will be flashing on your screen up there in a while. But the next question, Deepak from Hyderabad is holding 250 odd shares of Elecon Engineering at the rate of 400 per share. He's sitting on a loss of around 6,000 odd rupees. How long can he hold is something that he wants to know. Ruchit, on the charts, what would you suggest?
The short-term trend seems to be negative for the stock. We have a lot of low bottom structure which is going on in the stock. And we have not seen any kind of pullback moves of late, which has been supported by high volumes. So I think until we see any such signs, better to avoid. And in case of any existing positions, if you get any minor pullback moves, look to exit on pullbacks.
Got the view, Ruchit. But the next one, and it's been a kind of like a retail favorite stock, which is getting a lot of queries on. This is on Kaynes Technologies. Prashant is asking this question. He's bought it at 3,938 and asking if he should wait right now or average as well. Lancelot, I don't think we've spoken to you on this counter, because EMS has been in focus over the last 4 to 6 weeks. Your view of this correction across stocks as well as on Kaynes Technology, should you average in right now?
One should average right now, because even if you look at the current price earning multiple, it's trading almost at 61 times current earnings. And if you look at even the sales growth, while it is expected that it may grow at around 25-30% every year, the earnings multiple still remains highly elevated. So one needs to wait for a serious correction, and then one can look at adding and averaging out on the downside. So I think having gotten at a very high level, one has to consider whether it may make sense to book some losses and exit, at that level, and then look at, if it does correct, add at lower levels.
Okay, so that's the view coming in with regards to where Kane's Tech stands. The next question that we have is from Hariprasad Reddy, who's writing us from Hyderabad. He's got 450 odd shares of Tata Chemicals, bought 2 years back at the levels of 980. Wants to know as to what should he do with this counter. Lansot, I'll stick with you for this one. What's the view like?
So I think Tata Chemicals has been, in consolidating. And as far as the business is concerned, the business remains strong with soda ash as part of its business that is even expanding to Africa, and that the product range is being expanded. So last year the EPS was at 9 times, and while it might be a little expensive, from an investment perspective, it's trading at a little higher multiple. But we are seeing some amount of growth coming in with the new plants that will come on stream. And so one can look at, maybe adding on Tata Chemicals even at this price.
Got that view, Lancelot. But the next question coming in on Tata Motors CV, and another counter that we've been getting a lot of queries on. This one's from Abdul Rashad. He's from Kerala and asking if it's a good time to enter this counter. Lancelot, let me stay with you because very recent listing, so I don't want to trouble Ruchir with it. But in terms of that counter, do you think that given what we've seen actually with Ashok Leyland, what a stock move, right? Post that corporate action, it's back very close to that 200 level. Would you recommend getting into Tata Motors CV right now?
I think if you look at maybe the CV cycle and the passenger vehicle cycle, I think the CV cycle is seeing considerable amount of traction and growth. And so it would probably be a better idea to invest in the CV space as opposed to directly in the passenger vehicle space. So given that this demerger has just happened, and we have still to get individual numbers of each division, and how the balance sheets are, what kind of return on earnings that we can expect going forward. It's a rather difficult task to try and make a valuation impact at this point in time. But given that we are seeing a growth in the CV segment, I think one can look at accumulating the stock at this point in time.
All right, so that's the view coming in on Tata Motors CV. The next question that we have is from Reenu, who's writing us from Bengaluru, asking about Uno Minda. She's been accumulating this counter since September 2025 and wants to know, currently, by the way, she's holding 70 odd shares at the levels of 1186. For the next 3 months, should she continue to accumulate is her question. Ruchit, would you recommend that?
You hold your existing positions, but if you're looking to go fresh longs on this or accumulate more, give a buy and dip approach. The major long-term trend for the stock is still positive, and the recent correction just seems to be a corrective phase within an uptrend. The support for the stock would come around 1060, 1070, where the 20 EMA on the monthly charts is placed. Every time, if you look at this entire uptrend since October 2020, that is in last 5 years, every time the stock corrects towards its monthly 20 EMA, then after that the stock resumes its uptrend. So that support is around 1060, 1070. So if it comes down towards that level, then the risk reward ratio would be favorable to add more over there.
Okay, so that's the view coming in on Uno Minda. We've got our next caller. Ajay is calling us from Noida. Ajay, hi, a very good afternoon to you. I believe you've a question on Paytm.
Hi, good afternoon. This is Ajay from Noida. I'm a long-term investor. I wanted to know what the effect of a recent news on a PIDF is going to affect Paytm. I'm invested in it for a 12 to 18 months.
Okay. All right, Ajay. Got your question. I'll take this up with Lancelot. Lancelot, What he's referring to is with regards to the news coming in as to RBI ending the Payment Infrastructure Development Fund, and this was used to kind of incentivize deployment of digital payment infrastructure, right? The scheme ended in December 2025 and has not been extended is the news that's come in. But, he's not wrong in asking this question because the stock has tanked and how? Almost trading at slow point right now, down 8% as we speak. How do you assess this entire news flow with regards to Paytm?
So, I would look at it in a slightly different manner. This fund actually was to incentivize, payments, payment gateways and payment infrastructure at a time when payments were in a very new stage. And now we are seeing a much more mature digital payment market. There are many players who have got in, and we are seeing people using the infrastructure. If you look at the volume of digital payments that is happening, there's a significant increase over the years and over the last few months. However, when you come specifically to Paytm, I think the fact that they were depending on the payouts from this fund, and now that payouts is not going to be available to them, I think that will definitely have an impact as far as its bottom line and profitability is concerned. In any case, if you look at valuations were still on the higher side, and I think since the risk reward ratio is not favorable, one should stay away from making investment in Paytm at this point in time and wait for valuations to become attractive or moderation.
All right. Okay, so that's the view coming in with regards to where Paytm stands, but it's time for a rapid fire round. Lancelot as well as Ruchit. So we try to throw as many questions as possible to you. You try to keep your answers as short as possible to just buy, sell and hold. The first question that we have is from Nivendu Sharma, who's asking about Hindustan Zinc. He's got 150 shares, wants to know if he can continue to hold the counter or not. Ruchit, your view on the charts?
Trend is positive, so continue to hold.
The next one's, Eternal bought at 260. Lancelot, what would you recommend Lalita to do?
So if you are a longer term investor, I think one should stay invested in Eternal, even though there may be some short term negatives. Because over the longer period of time, I think one would.
Okay, the next one is on Railtail. Jaya from Bengaluru wants to know the short term target for this one. Ruchit, on the charts?
Short term, the trend is weak. 310 can be expected in the near term.
L&T is the next one, Lancelot, for the next 6 months because our viewer has bought it at 4,071. Would you recommend continue to hold?
Yes, I would recommend continue to hold.
Okay, Jubilant Foodworks bought at the levels of 531. Can he book losses or wait? Lancelot, your view?
I would suggest better to book losses.
The next one's for you, Lancelot. Our viewer, actually, Don Francis from Kerala, is asking two stocks, Talbros or Voltam, which is the better choice to enter in the long term?
It's better to enter Talbros in the longer term for a longer term.
Okay, Castrol India is the next one. The person wants to know if he can average out at the current levels. He's sitting on a loss of around 3,500 rupees. Ruchit, your view?
Provided current levels around 165, you can do averaging.
HDB Financial is the other one. We had some recent news flow also for their chairman resigning today. But Lancelot, any view? Is there a preferred pick in that space?
Yes, I mean, longer term, I think the business model is very robust and one should accumulate this stock at even the current levels.
Okay, Kirti is asking about Kalyan Jewellers. She's bought 100 shares at the levels of 510. Can she continue to hold from a long-term perspective? Lancelot, your view?
She should continue to hold.
PG Electroplast is the other one. Lancelot, coming for you yet again. Ashok Reddy is asking if it's the right time to enter for the next 1 year.
Yes, for a 1 year perspective, one can look at adding to the stock.
Okay. Natco Pharma is the next one. Madesh from Tamil Nadu wants to know if this is the right price to make an entry. Ruchit, your view?
No, the trend is still weak, so avoid bottom fishing.
The next question that's coming in is from Rajesh from Bangalore, and again another housing finance company, Bajaj Housing, is what he's asking on. Would you recommend if it's the right time to purchase, Lancelot?
Yes, I think this is a long-term business, and if you buy even at this levels, one will be.
Maruti Suzuki is the next one. Jaya Krishnan wants to know if this is the right time to make an entry for the next 6 months. Ruchit, your view?
Look to buy and dip around 14,700 where 200 EMA is placed.
Tanla Platform is the other one. Let's pull up that count. It was up in trade at the start of the trading session. Ramesh holds 50 shares but at 985. Lancelot, should he continue to hold average down? What would you recommend?
No, I think it would be better to exit rather than try to average down at this point in time.
All right, okay, so that's the view coming in on Tanla platform, up 8.5% as we speak. But with that, Ruchit and Lancelot, thank you so much for helping us answer all of those queries. We're completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close up next.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा।
Hello and welcome to India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Samit Sarkar. Clearly, a day where you're seeing that pressure which is building in terms of markets, because of which that impact coming in on the Indian rupee as well. We'll come to that, but we had at 25,068 cuts of almost 0.9% coming in there. Let's just pull up the intraday chart of Nifty 50 and then we'll look at Bank Nifty and the VIX as well. Is going to be interesting to track over here, but clearly the pressure is building up across. Can we just have the intraday chart of Nifty 50 as well? There you go. We are at the day's lowest levels if you talk about it. I mean 25,041 has been the day's low. I mean somewhere hovering around those range, that range. And if you pull up Bank Nifty intraday as well, you'll see that similar chart over here at the day's lows again. 58,445 has been intraday low in terms of Bank Nifty. If you look at the heat map, let's pull up that one and then we look at the advanced decline ratio as well. It seems to be pretty even Stevens in terms of reds and greens, actually more of reds versus greens. Dr. Reddy's is holding pretty strong in trade today for a second consecutive session. HUL, Asian Paints will be reporting numbers next week. So there is some momentum there as well, but no major trend that's emerging from the IT pack. It's Tech Mahindra and TCS along with the whip Infosys, which is maintaining on the borderline. Adani group of companies trading under pressure. Eternal today is down nearly 6%. Third consecutive session where you're seeing the pressure build up. Indigo is an earnings impact. Cipla, again reacting to what the numbers are looking like in terms of today's session. And if you talk about heavyweights as well, HDFC Bank, yes, that pressure coming in from there. ITC, yes, pressure coming in from there as well. Reliance Industries is another one that we should look at as well. I'm genuinely not able to track where RIL is right now, but there you go, yeah. Almost 1% down in terms of where RIL is concerned. Let's look at the advanced decline ratio right now as we speak, because the VIX is also now pretty elevated. You see the way the mouth is widening, clearly almost 2,000 declines versus around 500 advances, breadth absolutely favoring the bears in trade today. Broader markets and VIX is what we will look at now. Broader markets also, first is the VIX, a 6% up move, but the level is crucial in terms of the VIX. We're at the day's highs of levels, almost of 14.31 is what we've hit. That's where we are hovering at. Deeper cuts coming in broader markets. Mid-cap 150, 1.5% downtick coming in there. And if you talk about the small cap 250 as well, similar kind of cuts trading at the day's lowest levels. Let's look at NSE 500 components, and that will give you a breath of the advanced declines. Adani Green, Adani Energy, Adani Enterprise, major pressure there. Paytm 7.5%, 200 crores is the kind of impact on the potential of what the RBI is not allowing. Poonawalla FinCorp is trading under pressure as well, and that's probably because of their other Poonawallah's commentary when it comes to RCB stake. Syngene International, Eternal, a few of the other ones. What's standing out? Tanla Platforms again earnings, Home First again earnings, Bandhan Bank on earnings is what you're seeing, but again Hinzink, the upward journey continues. So it's a pretty interesting day of trade. The breadth absolutely in favor of the bears. And the question from here on is, where do we go? Because I think Tuesday is going to be expiry. So probably everything that needs to happen on a Monday is happening today in the market, Somit, because it is going to be a long weekend. And two, probably no negative news in the budget is what the street is watching out for, and that is the only positive trigger that I see right now, apart from the India-US trade deal. Because if you pull up the Indian rupee as well, I mean, record lows once again. Whether the RBI will intervene or not, what dealers are indicating right now is that the importers are buying dollars. 91.90 is what you're tracking over there as well, Somit.
So one more reason why the rupee has also depreciated is because of the sharp fall in the Indian currency, at least Indian markets, Indian equity market. At least that is what the dealer check is indicating. And yes, yet again a painful day for the Nifty 50, below 25,100, below all its key daily moving averages, 50, 100, 200, and from the highest point we have again slipped more than around 1,200 points in trade. But let's also welcome in our guest on the show today. Let's also welcome in our guest on the show today, Jay Bala, founder and chief market technician, and also Lancelot Dicuna, CIO of Value X Wealth. Jay Bala, coming to you first. The downward trend in the Nifty 50 continues. Where are you seeing some support coming in? Because we are now even below the 200 DMA.
Yeah, I've been expecting this market to drop to somewhere close to 24,400, the August low, and maybe slightly below that. But in my opinion, the medium-term trend that began from the April low of 2025 is undergoing a correction. And once this correction ends somewhere below 24,400 or thereabouts, we are likely to see the resumption of the bull trend that we saw between April and July. And I'm still holding the view that the markets are heading to 29,000 in the medium term.
Okay, so Jay, we're looking at Nifty 50 again from a perspective where there is pressure that's building up. And any trigger that you're seeing that could be a good level to watch out for, that, okay, if those are the levels ahead of the budget, there could be some bit of positive momentum on Nifty and Bank Nifty.
On the higher side, you mean?
Yes, on the higher side.
Okay, see, I think the structure needs the markets to drop to the August lows. Only then that's complete. But, from a levels point of view, Reliance holds the key.
And Reliance, if it can hold 1350, the September low of Reliance, and that's going to be the crucial point. We need to see Nifty trade about 25,400 for to see the possibility of resumption of the uptrend. But even that'll still be doubtful. I would rather wait for the markets to. It's looking more and more probable that the markets are heading closer to the August lows of 24,400.
Okay, so what would your top picks be at this hour then?
Cash, hold cash, and selectively short the market, and look at financials, which have been doing, which have done a tremendous job over the last several months. I would say we can even attempt a short at Bank of Baroda with a stop loss of 314. But keep all this, and objective is 276, 270 thereabouts, and I would say keep these short term, because in the medium term I'm bullish. The markets are undergoing a correction. It's a welcome correction, and I don't see any major hiccups coming through for the market in the medium term.
Technically, just wanted to get your view on a stock like Eternal. Lancelot, I'll come to you also when it comes to earnings and overall fundamental outlook. But Jay, Eternal on the charts, do you see more downside?
Of course, it's on the medium term charts. It's undergone important 5-step move, which marks the end of the short term top. So I would look at the stock dropping closer to the mid 2025 low of about 190 odds, and once it's there, then we can reevaluate. But it does look like, with the limited history that the stock has, that the long term could be good, but it has to undergo turbulence in the short to medium term.
Okay, turbulence in the short to medium term. Lancelot, how are you looking at Eternal? Third consecutive session of decline. And the numbers were good. I think it's mainly an overhang that we are seeing when it comes to change of management. Do you think that the street is unhappy with the change of guard that's happening?
So I don't know whether it's somebody being unhappy with the change of guard, but I think from a valuation perspective, yes, it was trading at a very high valuation. And now that some trigger is there, people are looking at an opportunity to rebalance on the valuation and take profits off the table. And from a longer term investor or a fundamental investor, there's still time for which you can justify it from a valuation perspective. So I think we would see some more correction, and once it corrects to levels where the growth catches up with the price, then one would look at it saying, okay, yes, this is a good probable price to enter. I think it's too early to say that for now.
Right, Paytm is one counter that remains in focus. Now, the stock was down as much as 10% in trade, and this was after the street realized. In fact, the word I'm using, realized, is because this thing actually happened on 31st of December. But it was the fact that no one knew about it, and that was the reason why the stock never declined. And today the people came to know that PIDF incentive scheme, that is I believe Payment Infra Development Fund scheme. Now, that scheme expired on December 2025. Now, why was this scheme given? The government provided, or what was this scheme actually? Here the government provided around 40 to 90% of the cost of the device as an incentive to promote digital payments in Tier 3 and Tier 4 cities. Now, typically 75% of the payment was upfront, and the remaining happened depending on the activity that the merchant used to get on that device. So this scheme has been expired, and that means that now Paytm won't be getting any funds from the government for this. Now, as per analysts, they were this could have an impact of around 200 crore rupees on their operating profit. But there are few analysts that also believe that the company could simply increase the prices of soundbox rental by as much as 10 rupees, which is just 10% of the current charges, and completely offset this revenue loss that is expected to happen. So it will clearly depend on how Paytm now reacts to this, given the fact that this scheme has already expired on December 31st. But also Paytm came out with this announcement where they are accepting the fact that the scheme has ended, and in the first half of this financial year it contributed close to around 128 crore rupees to their financials. So that is important that we need to watch out for when it comes to Paytm.
So that's going to be interesting. We'll take a question next, but let's also cut across to an exclusive conversation coming in from Davos, where my executive, the managing editor of the channel, that is Tamanna Inamdar, who's in conversation with IOCL chairman A.S. Sani, discussing the oil supply issues amid the geopolitical concerns. Let's listen into that conversation.
Thank you so much for that. We've had incredible conversations right here through the World Economic Forum. And we have the IOC chairman, Mr. Sani, with us this morning at our studios. Mr. Sani, thank you so much for your time to NDTV Profit. Have you had a good WEF this year?
Yeah. Good morning and thank you for hosting me here. Yeah, this was a wonderful year and a lot of conversations around energy, lot of conversations around newer forms of energy, lot of conversations around the continued legacy of conventional fossil energy also. So it's a well-rounded energy conversations that have been there, and look forward to cementing some of the good partnerships here that we have started the conversations.
Was the highlight for you, among other things, the address that US President Trump gave, where he kept speaking about conventional forms of energy? I mean, he kept referring to a green scam, so to speak. As you look at the global energy platform or, picture right now, how do you look at it, Mr. Sani? Do you think oil is making a comeback, or there is going to be a waning of conventional forms of fossil fuel?
Look, I perceive this problem in a very different manner because I see it from the lens of the country of India. For India, this non-fossil forms of energy or the newer forms of energy, which happen to be low carbon energies also, low carbon polluting energy forms also, they are a godsend opportunity for a country like India. Because in oil terms, you know that around more than 85%, 87% of my crude requirements we are importing, and we are spending around $130 billion per year as a country for importing those crude oils. And if the kind of energy growth India is needing and the kind of growth that India is perceiving in the next few years, if we continue on the same trajectory that we hope that we will continue, then I will have to spend hundreds of billions of dollars every year going on importing this crude oil and moving on the same path. For me, these alternate forms of energy are a godsend opportunity for at least adding all the new energy requirements to coming from these renewable forms of energy, the energy which is coming in a cleaner form. Maybe it is in forms of EV, it is in forms of bio, it is in forms of nuclear, it is in forms of all other kinds of energy other than fossil. They are good for the country like India. So whatever the world thinks, we should catch on to this bandwagon, and we should move ahead on this alternate sources of energy.
No, India is clearly charting its own path through the entire situation in the last 1 year. And as a country that imports crude, the good thing for us is that crude prices have been very soft. Despite some, flare-ups when there's something happening in Venezuela, Russia, Iran, कभी ना कभी कुछ ना कुछ हो ही जाता है. But we have been okay. How have you been navigating this as someone who runs a large oil corporation?
We have been constantly on the endeavor to increase the sources of crude that we are procuring from outside. And crude prices are only one aspect of the whole matrix, I'll say. The cracks have been varying. Although we can't complain on the types of cracks that are going right now, with diesel at around $18 to $20 and gasoline at around $10 to $12. We can't complain, but we have seen better days also, and we have seen worse days also. So that is also a part of the matrix. The situation is good. Situation is satisfactory because of the crude prices that are being there, and the reasons for crude prices being there where they are is the supplies demand factor. Today, the supplies are available all across the world. The newer forms of the newer areas, the newer geographies that are coming up, that is Brazil, that is Colombia, that is Guyana. So these are all opening up for newer geographies. Today, I can tell you that India was procuring, last 5 years back or so, we were procuring crude from around 27 geographies. Now we are procuring from 41 geographies. So we have expanded our span of procuring crude, and that is what gives me a sense of stability in my energy security.
It's part of a strategy to de-risk, right? You don't want to be dependent on a Russia or
Of
an
course.
Iran. Percentage of imports from Russia for you have come down significantly?
They are based on commercials basically. They are on a very moderate phase, I'll say that.
But if I were to compare from a year ago,
Moderate, very moderate.
no, so say halved, seven,
Because
three-fourths.
I don't want to talk about all the companies because you are talking of India. I don't want to comment on that. But
No,
they
but
have
for
been
IOC
on a downward. They have been on a downward.
On a downward spiral. So there's no stress there.
There's no stress
I would say, Mr. Sani, actually we should, and viewers watching right now should commend the strategy that oil corporations and the Indian PSU space over here has had to navigate all of this. In terms of what it has meant for profitability of these companies, and I know you're in a silent period, so I will not ask you about your profitability, but marketing margins on a year-to-date, on an annualized basis, have been pretty solid because of dropping crude prices despite the rupee. Is it in the 8 rupee mark or thereabouts?
No, you are referring to GRM when you talk of marketing margins. They are, in our parlance, refinery margins and marketing margins are different ball games. But I understand what you are referring to, and I will not comment on the figure, as you are rightly said that we are going to declare our quarterly results in few days, so I can't comment on that. That is for sure. But what I can show that I can be very sure in telling you that the kind of transformative journey that my company is taking in last 9 months or 1 year, wherein I am trying to improve my costs on transportation, on supply chain, whole ecosystem supply chain, the cost on processing of crude in my refineries, increasing the efficiencies of my refineries, reducing the energy consumption in the refineries, reducing the CO2 emissions that we are doing for the environment. All this is going to give me a substantial benefit in terms of my profitability, because everything, all of these, some of the actions have been completed. They will be giving results in next 6 months or to 12 months, and some of them will be a long-term projects which we will take up for improving the efficiencies. They will take 2 to 3 years also. But in nutshell, I am saying this company is on a path wherein it is going to improve its operational margins and its operational efficiencies will improve.
Yeah, and we have been seeing that also quarter on quarter. And this is also part of Project Sprint, isn't it?
Yes, Project Sprint is basically working on customer focus. It is working on cost consciousness. It is working on strengthening my core business. These are the 3 C's. And then the company has to be transformation ready. The company has to nurture the talent, and the company has to be technology ready. So these are the 3 T's. The 3 C's and the 3 T's, they comprise the sprint. And these are the 6 priorities on which we are working. We are working very assiduously on developing the talent for us, because the talent line, the pipeline of talent, what we are targeting today is not only for Indian Oil but for the industry also, because our people have been great leaders going forward into other companies also. So we are developing them for not only for us but for the industry also.
Absolutely. Just as an outlook for the rest of the year, and I think asking anyone for an outlook on what 2026 calendar year is going to look like geopolitically is tough. But having said that, do we possibly see a situation of a large unlocking of supply from Venezuela? That has been the big question mark. Huge reserves, very little contribution, I think 1.5% to world supplies of crude. Do you think that we see a large unlocking? What does it mean for India? What does it mean for a company like yours? Do we have the capability of refining the kind of crude that Venezuela could produce?
If you are talking of 1 year horizon, I don't see much of the effect. But long term, maybe what happens 2 years down the line or 3 years down the line, that is in the realm of future. That we should not predict on that or speculate on that. But 1 year, I don't think it is going to be much, because the quantities are less. Lot of investments will be needed for bringing up that crude onto the market. So, and whatever crude is being produced, in my sense, most of it will be getting consumed in Gulf Coast of US only, and maybe some other areas. But at the same time, I can say that several of the Indian refineries are capable of processing those kind of crude. So technically we don't have a problem. I can speak for the private sector refineries also and for the public sector refineries also.
is there an opportunity for our industry at all, or is it not going to make an impact?
It may
either
happen.
way?
It may happen. Sometimes some opportunities can come, and we should be ready for that.
Okay. Thank you so much, Mr. Sani, for speaking with us. It's been delightful chatting with you in the cold air of Davos.
Thank you so much. Thank you.
Right. Before going to Lancelot on IOCL, Jaybala, any view on Paytm on charts?
See, Paytm has broken down from a head and shoulder stock. So, it's likely to go around the 1,000 mark at least. So, if you're long, be very cautious. This is not a good setup. And there is a pronounced negative divergence at the top. So, this is likely to undergo a slightly deeper correction in the short term. So, be very cautious. Don't be long.
Okay, so that's with regards to where Paytm goes. But moving on, we've already spoken about Indigo so far, because clearly in terms of the quarter, it's a strong adjusted, overall strong adjusted for one-offs is what we've indicated. The stock is at the day's lowest levels. Revenues are up around 6%, and the EBITDA, adjusting for the forex loss, is down around 5.5%. Margins at around 29.8% versus a 30%. I would love to get Somit's view on this. In the meantime, he's just looking at Laurus Laboratories as well right now. So I'm just taking the opportunity to look at this one. Profits, again, a downtake of around 78% to 540 crores, and we've seen a loss of around 2,449 odd crores in the previous one. Overall, in fact, it's the slowest third quarter revenue growth that we've seen since FY21, and this was the year when COVID had hit. However, the revenue is better than what the estimates are, which has led to the overall beat. In fact, let's also listen into what the management had to say, because they've said that the exceptional loss owing to the new labor code was around 968 crores, and due to flight disruptions stands at around 577 crores. The PAT would have been 3,130 crores, excluding the one-off impact and the forex loss so far. Let's listen into the management.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex, for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
Well, if you look at the Laurus Labs number, 1,778 is the revenue number coming in, as against the street estimates of 1,637. EBITDA has come in at close to 481 rupees as compared to 439, that was the analyst estimates. Margin coming in at 27% as against 26.8% estimates, while the net profit number, that has come in at 250 crore. Analyst estimates were close to 190 crore. Strong beat looking on all the fronts for Laurus Labs, and that is one of the reasons why the stock has perked up around 2% even in such a weak market. We are yet to get the finer details here for Laurus Labs, but it seems to be a beat on all front, with strong beat coming in at least on the profit front. 250 crore is a profit number that has come in as compared to 190 crore that the street was anticipating. Now, one of the reasons behind this could also be lower tax structure, but we have to get to those details. But yeah, overall it seems to be a good beat so far when it comes to Laurus Labs. Lancelot, any view on CDMO companies like Laurus Labs? Divi's is yet to report numbers, but Laurus Lab has reported a strong set of numbers.
Yeah, I think the strong set of numbers is actually very helpful in terms of an outlook on this company. But if you look at valuations, despite the strong set of numbers, the stock still trades at almost 60 times its forward earnings. And while there is, this is one of the sectors that we continue to see strong growth, a growth potential. One needs to probably wait and see, at what levels one can look at buying it, because in case there are a couple of negative quarters, then the stock could get re-rated significantly, and probably that's the time one can look at accumulating this stock.
So that's the view coming in on Laurus Labs. I think for them, finance costs have significantly come down from 57 crore to 38 odd crores. But overall costs have gone up by 13%. Yet there's an uptick, slight uptick in the margins that we're seeing for Laurus Labs, and that's why the stock, up and above in trade, almost 3% as we speak. But shifting focus, we have Somit, of course, with us, who's going to give us all the chatter that he's been hearing from the dealing room. Somit, what are you picking up today?
Not too much activity yet again in the market.
I think lots of activity on the downside. 2 months right?
Downside. But the thing is, at this kind of levels, people are not that courageous to even short market from the current levels because it has fallen a lot. And technically, there's no reason as such other than global factors.
But don't you think, Somit, that the global markets overall, if you see the way Europe has opened up, the way US was, there is some bit of stability at least at the global markets.
But Indian market does not seem
exactly. It's only our markets which are correcting right now. Secondly, Monday is a holiday, which is again an extended week. So probably because Tuesday being a NSE expiry. Expiry game and rollovers are happening today itself.
Could be. That could also be the game given the fact that it's a long weekend coming in. So yeah, that could also be one of the reasons why we are seeing this kind of a downtick in markets. But few stocks that dealers have highlighted. Firstly, a bunch of mid-cap IT names, Emphasis, Persistent and Coforge. Dealers indicate that there are some buy flows coming in all the three names at the lower level in trade. And delivery volumes are expected to be on the higher side for these counters. When it comes to Voltus, there are buy flows on the large HNI desk. Dealers are expecting strong Q3 numbers coming in from this company. And lastly, when it comes to Hero Moto, there are sell flows on the PMS desk. Dealers expect weak Q3 numbers coming in from Hero Moto and hence this selling pressure coming in for this counter as well.
Okay, so interesting names there, Mahima.
I think Voltas has been seeing good gains. It did touch an intraday high of almost 4% in trade today, but right now seeing gains of about 2%, has cooled off a bit. Jayabala, your quick view on something like a Voltas, not much in terms of where volumes stand, but seeing some momentum in trade today.
Yeah, it's a very uninspiring chart. It's gone sideways and it's been stuck in a range between 1520 and 1180 for the last several months. And it's in the short term slightly negatively biased. So I wouldn't see today's bump up as a big positive, but it's probably going to be meandering within this range of 1520 to 1180. So, it's an avoid at the moment. No clear structure in the short term. Maybe, it's probably needs one more drop below the 2025 low for it to complete a correction. Not clear at all.
In terms of where the direction stands for Voltas is the view coming in from Jayabala with regards to where technicals are concerned. But earlier today, we spoke to Nimal Jain, the founder of IIFL Group, about the IIFL's tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listening to exactly what he said.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
Okay, so that, was the clarification coming in from IIFL Finance, which after being in the positive has slipped into the negative as well. But as we slip into a short break, let's also listen into the management of Bandhan Bank, where the stock was seeing some smart moves, whereas Syngene, which has gone ahead and cut the guidance, and that's the reason why the stock is trading under pressure. And the clarification came in only on NDTV Profit. Let's listen into both the managements as we get into a break.
So asset quality, definitely it has improved. One thing is that we have taken I would say a very important step this time. We have sold almost close to 3,200 crores of assets to one of the ARCs. And this has definitely given a one-time reason. So of course, we have got a hit in the profit and loss because of making higher provisions, because that our PCR on account of this almost is at the same level at 83% if we include the write-offs. And we wanted to maintain that provision coverage ratio. So we have taken a hit in the balance sheet, but we decided that we should cleanse also our balance sheets, which were piling up with the NPA, especially in the EEB segment, that is the microfinance segment, right from the days of Corona. So we have got rid of those assets. We have been able to sell it to our ARC company, where we have also invested in the SRs.
In the light of the ongoing challenge in the single large molecule, which I think has come in a little bit higher than we anticipated, we will be making an adjustment to our guidance. The guidance on revenue, we will be adjusting that from a mid-single digit growth to a degrowth in the 2 to 3% range.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation.
कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in the back.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. You're watching India Market Close here at NDTV Profit, where while markets are not, at all positive right now, there's one counter that's zooming in trade on the back of its earnings, and that's Laurus Labs. And we have Varsha joining by, who tracks this very closely. Varsha, good improvement in terms of where margin stands, net profit also up 1.7 times. What has led to this?
Well, I would say, a strong set of numbers that Laurus has posted, beat estimates on all round. Revenue is up 25%, EBITDA is up almost 68%, margins at 27% versus 20%, and good uptick in net profit. Now, let's see what are the key highlights, what has led to these numbers. One is the strong growth that you're seeing is, of course, led by CDMO space. Everyone knew this. The next leg of growth for Laurus Lab is, of course, CDMO. And there was also robust performance which was led in generics division also. The EBITDA that you're seeing, the strong gain in EBITDA is because of due to improving operating leverage. I would say the investment that the Laurus did in the last 1 or 2 years, now they are enjoying their fruits when it comes to the EBITDA margin, when it comes to the revenue growth. While if you see that they've delivered gross margin expansion of over 4.3 percentage points to 60%. This was led by the better product mix. Also, if you see the outlook for FY26, they're well on track to deliver healthy operational growth. Now we need to see whether this performance of 26 to 27% of 25 to 26% of margin will they do in Q4 also. But one more thing, the lower tax rate also aided profit because the estimates were around 190 crore of profit, but they delivered almost over 250 crore of profit. So lower tax has also helped that. And lastly, if I were to talk about the FY26 capex is expected at around 1,000 crore with no equity dilution planned, and the ROC is expected over 25% over the next 2 years. So overall, a strong set of results. This was expected, but they have beat the expectations as well.
Their own medicines are working on them, I think, Varsha. That's what it seems like right now. But clearly, Somit was just pointing out, after hitting that high, the stock is again just corrected from the day's highest level. So it actually tells you what the markets are actually looking at. In fact, in terms of the outlook for 26, what they've said is that they are on track to deliver healthy operational growth, as Somit has been pointing out, for Laurus Laboratories, and that's what you should focus on. But your stock is under pressure. In fact, we have Neeraj Devan as well, who's joining in. Neeraj, your view when it comes to Laurus Laboratories, who's posted numbers right now. A good set of numbers, but the stock is corrected. And to add to that, you have a Cipla also, which has reported their numbers.
Yeah, good afternoon. See, I like the space. CDMO is growing very well for most of the companies. I like the CDMO API space. But see, Laurus Lab, to comment on Laurus Lab, the results are good, definitely. But then the stock is expensive. So at these levels, they're going to be profit taking. You look at other stock in the listed space, which into similar space, they're available at much better valuation. So I like the space, but I would rather look at some other opportunity in the space.
Okay, so that's the view coming in with regards to where Laurus Lab stands. But let's quickly also try to pull up Cipla as we speak, because the pressure for Cipla has started, and with regards to where Achin Gupta, the successor, is going to take over from 1st of April from Umang Vora. Management is, kind of talking about that. The stock is down 4% in trade today at its, low point as we speak. But Neeraj, before we talk more about that, your quick view on Cipla?
Medicine provider.
The results were not good, so I think that is why the stock is correcting. But I think it should be an opportunity because, see, over the medium to long term, definitely there are a lot of other things that will happen for the company, and there will be a lot of other drugs they're working on. So this is an opportunity, I think, for medium to long term investment.
Neeraj, I'm just going to interrupt over here. Just give me 2 minutes because we have the Cipla management who's speaking at the press conference. Let's listen in to what they have to say, and then we'll talk about your views.
Consumer business, where we continue leading on multiple categories, and the profitability also keeps improving with economies of scale and better efficiencies. If I then move to our second largest business, which is North America, we delivered a top line of 167 million in the last quarter. As I mentioned, this had a small contribution from lenalidomide in Q3. Base business delivered a double-digit YOY growth, and several products did well. Albuterol continued to hold number one position. We had a market share of 22% as of last week of December. There was some challenges which came our way. Lanreotide, one of the prominent products, faced a supply challenge following the US FDA audit of our partner Pharmathen. We are working together with them on the remediation efforts, and we expect supplies to resume sometime in H1 of FY27. Meantime, the product will be in limited supplies based on clearance of existing lots. And we're also looking at enabling an alternate site together with the partner. What's exciting about our US business is the pipeline. We're making good progress on that. There are 4 respiratory assets that are under assessment and nearing approval. We believe 2 of these we could have a sole generic opportunity with quite a significant material upside. On peptides, we now have approval for generic Victoza, and we expect to launch 3 more peptides in the coming financial year. So our new launches would provide us strong sustainability on top line as well as bottom line. And while Lena revenues taper off on the business, we would expect a good continuity of growth in the business. On South Africa market, the private business outperformed the market 6.3 versus 5.7 for the market. We did see a temporary destocking at the channel at the end of Q3, but this will normalize in the coming quarter. EMU, happy to say that they delivered 4th consecutive quarter of 100 million plus revenues with 7% YOY growth in USD terms, supported with strong execution both in DTM as well as B2B markets. And I think important to also mention that on regulatory front, we are expecting re-inspection of Indore facility anytime now. So if I then move to an update on the profitability, we have reported 18% EBITDA for the quarter. This is a little bit lower than our internal plans, approximately 1.5 to 2%. A few reasons. One, as I mentioned, Lanrio, we had supply challenges towards the end of the quarter. Also, we continue to invest strongly in R&D. We put in 7% investment to sales on R&D, and we have some very exciting assets in the pipeline, including the filings that we are doing on complex oligonucleotides. Additionally, we incurred certain operating expenses in the quarter on account of preparation of the upcoming respiratory launches. So most of these are in the nature of one-offs. We are excited about the pipeline that is coming in. And I think I'm personally also excited about the quality and capability of the teams that we have. So we really look forward to a sustainable growth on top line as well as profitability as we continue to serve patients around the world. With that, we will open the forum for questions. Thank you.
Thank you. All right, so that was the management speaking about what lies ahead for Cipla. But Neeraj, do complete your point. You were talking about Cipla.
So that's what I was saying, but the management also mentioned that there is a strong pipeline for the company. So the stock is corrected and there was expectation of not so good results, plus the inspection which happened. So I think because of that, stock in the last 6 months has corrected from 300-400 rupees. So I think this is an opportunity for medium to long-term investors. So in the shorter term, maybe there may be some more impact, but medium to long term, there will be strong pipeline. There will be definitely good growth that will come for the company.
Okay, so that's with regards to where Cipla goes. Osho, the correction that we are seeing when it comes to Cipla, the reaction that you're seeing when it comes to Laurus Laboratories, all are event-driven right now. Any trade that is emerging on these two names?
For Cipla, firstly, I think obviously the counter has seen very strong beating from the high zone of nearly 1480. But at current levels, it is not advisable to exit positions for those who are already holding the stocks in Cipla because it is at historical supports of 1300. So I'm expecting that in the coming period, once the counter stabilizes, then from here onwards, we can look for opportunities on the longer side. But at present, if someone is not holding a position, there is no advice in Cipla to accumulate or to exit from the current levels. On the comparison with Laurus Labs, this counter has been one of a strong performer, and with the correction in the recent month, the counter have now tested the 100 exponential moving average. So I'm expecting that now it might hover within a range of nearly 1000 on the lower end and 1080 on the higher end. So that is the immediate trading range for the counter. If it breaches beyond the zone, then we can see some kind of continued momentum in the coming period. For now, 1000 is a very strong support levels and 1080 is the resistance that one can expect in this counter.
Shifting focus from pharma to solar manufacturing space, a big face-off between Vari Energies and Premier. Vari Energies reported a strong set of numbers, Premier a weak set of numbers. What are the differences? What is the reason? Let's get in Varsha to understand the same.
Well, thank you so much for that. Today we are actually comparing two companies in our bull versus bear case. Let's talk about starting with the Q3 FY26 numbers for Vari, which is a volume leader. There was a massive growth when it comes to revenue, 119% year-on-year growth, while for Premier it was only 13% growth, and hence Premier was down in trade today. Talking about EBITDA surges for 167% for Vari, while 15% year-on-year growth for Premier Energies, and the net profit, if you see, was up 118% for Vari, and with the margin improvement of around 25%, while it has an industry-leading EBITDA margin at 31%. Talking about net profit, was up 118% versus 53% jump in Premier Energies. Now, let's discuss about both of the. If I were to talk about order book, massive order book at 60,000 crore versus 8,000 to 10,000 crore of order book when it comes to Premier Energies. Now, let's deep dive. Starting with Vari Energies, why the numbers were so strong. One is the unmatched execution and global reach, and the first Indian firm to sell 1 gigawatt plus modules in 1 month. Talking about, they have a 32% overseas revenue, which focuses on high realization US markets and expanding manufacturing to capture inflation there also. Also, if you see, they are investing almost $30 million in Oman facility for a future traceable supply chain. Now, talking about the fundraise, so they've recently raised 1,000 crores of fund for battery energy storage and inverters and hydrogen. Now, moving on, if I were to talk about Premier Energies, it's a technology and capacity focused company, and higher focus is on solar cells, and hence the margins for Premier is 30% versus 25% for Vari, which is into modules. They are also targeting 10.6 gigawatt cell and 11.1 gigawatt of module capacity by September 2026. Even if you see, they are also on to large scale utility projects and IPPs within India. Moving on, if I were to talk about why Vari numbers were explosive, one is 1 gigawatt per month scale up allows Vari to absorb cost very efficiently, number one, and higher prices in US market versus India drove 118% PAT growth for Vari Energies. Plus, if you see, 60,000 crore of order book signals much faster trajectory than peers. Now, if I were to talk about Premier Energies, why Premier Energy is a specialist when it comes to margin. One is higher ratio of cell manufacturing versus modules makes Premier Energy focusing on cell, which is a higher margin product, and hence 30% of margin for Premier versus 25% of margin for Varis. Even if I were to talk about that defense segment, which provides high margin income regardless of solar price shifts, number one, and also, so if you see the overall, if I were to talk about, if I want to, differentiate between Vari and Premier, of course, Vari is in focus considering a volume game that Vari is playing versus Premier, which is a specialist when it comes to margin. But considering today's sell-off in Premier Energies, Vari has given a very strong set of numbers considering the production of modules, while Premier has been into 30% margin scale only.
All right, Varsha, thank you so much for getting us those details and, completely helping us understand as to how these two are different and what is causing the pain in one and what is, Vari Energy is doing better in terms of fair, that is in fact reflected in the stock as well in terms of how the financial performance has fared. But Osho, I'll quickly come to you on both of these counters. I mean, clearly the street has given its verdict with regards to where Q3 stands, but in terms of a technical stance, where do you find the charts more attractive right now?
But technically, both the counters are looking very bleak, but comparatively, Vari Energies are having better technical formations as compared to Premier Engineering, because Vari, we have seen a kind of a a retracement from the lower end, from the oversold terrain. There has been a decent traction in the last two trading sessions. So that is an initial signal of reversal in the counter, although conviction still lacks because it is below the 20-day exponential moving average, but comparatively it is looking better than compared to premier. So overall, I'm expecting if it sustains above the zone of 2650 to 2680 kind of a zone, then in the coming period, we might see some kind of respite or pullback in the counter towards 2900 odd levels. So I'm expecting that this counter might perform the other counter in the short term period.
Osho, just wanted your view when it comes to. Okay, sorry, yeah, the chart was not loading. Just wanted your view when it comes to Syngene. The stock has nearly hit the lower circuit of 10 odd %. Fundamentally, obviously, they have cut their guidance and the numbers were weak. But on charts, any support levels?
Technically, there is a strong support around the zone of 530 to 520 odd levels, where we have seen a very strong consolidation in the previous year from the zone of nearly 530 was tested around 20 from 2020 towards 2023. So this has been a very strong consolidation zone for the counter. So I'm expecting that till it sustains above the zone of 520, the concerns remain subsides. But again, if there will be any kind of further breakdown below 520, then there might be some kind of disruptions in the coming future. So for now, I'm expecting that another 20 points of loss or 20 points of fall can be seen as a healthy correction or can be seen as an even opportunity for the counter. And on the higher end, again, 600 is a very strong resistance. So 520 to 600 is the trading range for the counter.
Sona BLW is another company that has come out with its earnings. If you look at the revenue, it's up 38%, but it's the margin pressure that has been acting up. Hence, that's the reason the stock is down nearly 4% in trade. Margins have come in at 24.7 as against 27% last year. And if you look at the EBITDA number, that is also up around 26%, but margin pressure is something that has led to the fall in the share prices of Sona BLW. Right. Any view on charts here, Osho?
Yes, the counter is having a kind of a consolidation around the short-term moving average, but overall I'm expecting that in the previous 2 months, the counter was trying to emerge above the 200-day simple moving average, but again, there has been a kind of a correction, but overall, the counter is into a consolidation, long-term consolidation zone. So I'm expecting that if it breaches the zone of 475 to 480 on a higher levels, then only one can look for buying signals in the counter, and from there onwards we can even see some kind of momentum coming back in this stock. While on the lower end, again, it is having a very decent support around the zone of 440, 430 odd levels. So this is the support zone for the counter. No doubt there might be volatility in 1 to 2 trading sessions, but I'm expecting till the time it is respecting the zone of 430, there is no sign of concern in this counter.
Right. And what would be your BTST views, Osho?
It is very difficult in such market to have a BTST view.
And any STBT view?
STBT is also very, very.
I mean, it's fair, I think, taking the 3 days holiday.
No, but I have a stock in my radar, but that's not for BTST, but for positionally, it is looking very positive. HUL is one of the counter which is looking very positive to me. So being from the FMCG space, there has been some kind of defensive stock in the name, and HUL has even outperformed the market in today's trading session. So I'm expecting this counter can see some kind of outperformance in the coming period as well. So HUL will be the buy recommendation with a strict stop loss of 2350, and 2350 has respected its support zone. So I'm expecting that it might not breach in the coming period. And from here onwards, there can be a strong upside rally in this counter. So HUL will be a positional bet. Immediate target is 2460, followed by 2480 from positional 1 to 2 trading sessions.
So positive momentum expected in HUL from Osho. Neeraj, I'll quickly come to you on HUL as well as GCPL, the first FMCG company to post its earnings today in this quarter. The expectations are that profit, of course, growth will outweigh the revenue growth, but revenue growth is also expected in that high single digits. Your quick view on both of these counters?
Yeah, I'm positive on the consumer space. So I think that, of course, short-term impact will be there because of the results. But over medium term, also, I feel that FMCG is a space one because it is defensive. Second, because the inflation has been low, so raw material pressure is not there. So margin improvement can happen. Plus, GST benefit will also come their way for this full quarter. So I'm positive on these two counters.
Okay, so that's with regards to where GCPL goes and HUL. But Ola, let's pull up that one on the screens because there has been some bit of pressure over the last couple of trading sessions on Ola Electric, and with the third quarter results right at the corner. What's in store for the balance sheet? Puneet is here with more details. Puneet, today as well, 3% downtick. And if you pull up a 5-day or a 1-week chart as well, that will tell you the kind of pressure that has been created on this one. 12 to 13% is the kind of value erosion that investors have already seen. What are you picking up?
Well, it's also very close to its 52-week low of 30 rupees per share as well. And the big headline is that the company could actually cut its guidance in FY26 for sales volume. But there have been some other bad news as well in this particular month itself. So the first biggest takeaway is that, its CFO has resigned. He was one of the key voices in the earnings conference call as well. So it's definitely one that has impacted the company and led to the recent downtake on the stock. The second key takeaway is that there are expectations of weak Q3 earnings, and we'll get to that in just a bit. While the third one is that the market share has fallen to an all-time low of just 6% in January this month. So it's on a year-to-date basis that we are doing the first 23 months of this month. And 6% is compared to almost 35% that the company used to do almost just 12 months ago. So it's a sharp downtake that we've seen across market share, and promoter selling on the back of this at the end of December was another key trigger. But in terms of the Q3 sales data, that's another key aspect. For FY25 last year, Q3 was almost 84,000 units. That slipped to just 35,000 units. So there was a downtake of almost 58% on the downside. So minus 58% is what the number was. Apart from that, the Q3 preview is something else. Revenue is expected to fall by 41% to almost 615 crores, with margins expected to be EBITDA loss actually be of 180 crores and a net loss expected of 389 crores in this particular quarter. Finally, what brokerages have also cut target prices unanimously with Kotak Securities as well as Ambit being the lowest of 25 and 30 respectively. But the guidance cut is what I want to finally highlight before I wrap up. They had mentioned a sales guidance of almost 2.2 lakh units for FY26. This was cut from the earlier guidance at the start of the year of almost 3.7 lakh units. But given the company's 9th month sales performance, it seems a very bleak picture. Even from 2.2 lakh target, they've only resounded to around 1.4 lakh sales units, and hence there could be an impending guidance cuts either in Q3 or Q4. But that's the picture on Ola Electric and in the profit intelligence segments. A weak picture and a weak outlook altogether.
Okay, so that's with regards to Ola Electric. Neeraj, your view when it comes to your EV makers, Ola, Ather, all of them. The month probably has been slightly weak. How would you look at trading on these names?
Yeah, actually, I'm not too positive on the two-wheeler space also right now. So because there's been some pressure lately, but if I have to go for a two-wheeler space, I'll rather not go for something like Ola Electric or Ather. I'll rather go for something like a TVS, which is present into electrical two-wheelers also. So I think there TVS would be my best bet as far as investment is concerned.
Right, Neeraj, quickly your view when it comes to a counter like DLF. Yes, obviously their cash flows were strong, they have become debt-free, but pre-sales number coming in at 420 crore as against estimates of 2,500 crore, plus lower number of launches going forward, which will definitely have an impact on growth numbers, right, going forward?
Yeah, actually, this year, I think the guidance that they gave about 22,000 crores kind of a pre-sale, it's looking difficult for them to achieve. So last year they were able to go past the guidance. So definitely there is some pressure in NCR territory, in Gurugram, where they are predominantly present. And there is that because of that pressure, you saw the numbers, the kind of pre-sale that they're doing for the quarter. So I think the short-term pressure is definitely there, but if again for a medium to long-term perspective, DLF, the kind of lease rental that they are targeting for in 2 to 3 years, and the kind of launches that are scheduled over the medium term are massive, and they may be 1 or 2 quarters blip here and there, but over the medium to long term, definitely the story is still intact, and they are almost debt free, gross debt free. So that will, in the longer term, I think once the cycle reverses for real estate, I think then one can have a look at this counter.
At this moment in the real estate basket, any stock that you feel is attractive?
See, I would say DLF is also attractive for a long-term investor. You know, there are other stocks also in the NCR market.
Then I would not say
that-
attractive.
yeah.
Would it be a right time to buy, or there could be more downside from here on also?
I would say that one should start accumulating. One should not be going all out and buying them, but I think these are good prices to start accumulating their such stock.
Okay, so that's with regards to where DLF goes. Osho, let me take a quick question with you on real estate, because that was one of the top losing sectors in trade as we opened up for trading in today's session. And there seems to be some bit of weakness that is building in. One of the worst performing sectors of 2025 has been one of the worst performers at the start of 2026 as well. Are you seeing any opportunity on the charts, or do you say that the momentum is just downwards, best time to sell?
See, overall, there has been substantial increase in trading volume once there has been breakdown in majority of the real estate counter. Coming to DLF, there has been a decent breakdown, firstly around the zone of 680, then the zone of 620, and now I am targeting a short-term target for nearly 545 for DLF. So, and in this correction, there has been increase in trading volume. So there has been a strong conviction on the selling side for the real estate space. So I am expecting that in the short-term picture, yes, there is a bleakness on the technical charts and there might be further correction. But once these counters reach towards the oversold terrain, which some of them are already into the oversold terrain, then there might be some opportunity to start accumulating. But again, that in a staggered manner and not at current levels with the current scenarios going on. So one should wait for them to get stabilized at lower end and then may look for buying opportunity, but again in a staggered manner only.
All right, so that's the view coming in regards to the entire real estate pack. With that, Neeraj as well as Osho, thank you so much for helping us with all of those stocks insights and of course taking out the time and speaking with us at NDTV Profit. Quickly, if you can see as to how the markets close today, of course, Monday being a holiday, the markets kind of have seen pressure throughout the day. 25,000, below the 25,100 is where we are ending at right now. Almost 1% down on the Nifty 50. The Bank Nifty also down by about 1.3 odd %. Broader markets also, there is no respite there. The mid cap 150 down by about 1.7%. The small cap 250 also seeing a downtick of about almost 2% at the end of the trade. Quickly, if you can pull up the Nifty 50 heat map and see what are the counters that have really seen pressure in trade today and what are the counters that have actually kept Nifty in the check. You have Dr. Reddy's up 1.6%, although did go to almost 3% higher in trade today. Tech Mahindra up 1%. ONGC, HUL, some counters in the green. But on the flip side, you have counters like Eternal, Indigo, Geofinance, as well as Cipla, Axis Bank, SBI, Tata Consumer, as well as Power Grid, Maruti, HDFC Life. So, I mean, I can go on and talk about all of these stocks which have tanked almost 2% in trade today, but that's the reality. We are, not seeing any positive momentum. Quickly, if we can also see the India VIX, because, at the start we saw India VIX seeing great overall, gain of about 3 odd %. But with regards to where the India VIX goes, it's seeing, that kind of tells you the volatility in trade today, and we ended at that 7.7% mark. Let's also quickly pull up the BSE 500 and see as to what are the counters in the broader end of spectrum. Look like you have Home First Finance, Tanla Platforms, both in the green on the back of earnings up 6% each. Hindustan Zinc on the back of fundraise up 4%. Infibeam, Bandhan Bank, some counters in the green on the back of earnings. But on the flip side, you have something like Syngene International tanked 8%, and how something like a Paytm down 8% as well. Poonawalla Fincorp as well as Balaji Amines down 6% each. Quickly, advanced decline ratio before we wrap it and go to the cues that you need to watch out for. The gap has widened throughout the day with regards to where advanced decline ratio is concerned, closing at 1900 declines versus 500 odd advances. Lastly, in terms of where cues that you'll be watching out for throughout the day, you have India bank loan growth YY coming in, deposit growth YY also coming in. So data of this will be out this weekend. Foreign exchange reserves data will be out. US S&P Global Composite PMI data will be coming out. You can keep your eye out for that. S&P Global Manufacturing data will be out. Michigan inflation expectations will also be out. So these are some of the things that you'll be watching out in terms of where the global markets are concerned. But some of these names also seeing interim dividend announcements and of course cutoff dates for all of these names like Persistent Systems, United Spirits, Wipro as well as SRF. You have lock-in expiry for something like a Gujarat Kidney at 6%. Companies that will come in terms of earnings post market hours, you have Bharat Petroleum, Godrej Consumer, IndusInd Bank, all of these big names reporting their earnings. India Cements, Nuvama, Prime Focus as well as something like a Welspun Specialty. Also companies like Chennai Petroleum, Axis Bank, Ultratech as well as Kotak Mahindra. Asian Paints of course will be posting its earnings on Tuesday. WeWork, Spandana Spurti, Marico etc. will be in focus next week. So that's with regards to where some of these companies stand in terms of where earnings will post. But Adani Green has released its Q3 numbers showing steady growth in operations and profitability. The management has also issued a press statement outlining the company's performance and outlook. Let's listen to what they had to say.
I'm delighted to share Adani Green Energy's robust operational and financial performance for the first 9 months of fiscal year 2026, underscoring our relentless growth trajectory and industry leadership. Our energy sales surged by impressive 37% year-on-year, reaching 27.6 billion units. This robust growth is a direct result of significant greenfield capacity additions and strong plant performance. Our operational capacity expanded by 48% year-on-year to 17.2 gigawatt, reinforcing our leadership as India's largest and fastest growing pure-play renewable energy company and putting us firmly on course to achieve 50 gigawatt target by 2030. In calendar year 25, we added 5.6 gigawatt of greenfield capacity, which represents nearly 14% of countrywide solar and wind capacity addition. Our landmark Khavda project, the world's largest renewable energy installation, continues to advance at an accelerated pace with an operational portfolio of 7.7 gigawatt of solar, wind and hybrid assets. We are on track for deployment of one of the largest single location battery energy storage project in coming months. Our hydro pump storage project on Chitravati River in Andhra Pradesh is also on track. Our industry-leading financial results further reflect our operational excellence. Revenue from power supply increased by 25% year-on-year to rupees 8,508 crore, while EBITDA grew by 24% to rupees 7,921 crore, achieving an EBITDA margin of 91.5%. These results are powered by advanced technologies and digitized operations, leveraging sophisticated data analytics, machine learning, and artificial intelligence for real-time monitoring, enabling superior operational performance. Adani Green Energy's commitment to sustainability and responsible business practices continues to be recognized globally. We have been named the world's #1 green utility in the 2025 Global Top 100 Green Utilities ranking by Energy Intelligence. AGL is top sustainability performer in power generation sector for second consecutive year in NSE sustainability ratings. As we look ahead, we remain steadfast in our commitment to India's energy transition by enabling large-scale adoption of affordable, clean energy. Adani Green Energy is powering sustainable growth for India and the world. Thank you.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर। Celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
मोटिवेशन इज टू सर्व द नेशन। कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Possibilities for that in the back.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you all the headlines that you need to know at this hour, including the ones that you may have missed. Let's get straight to the show then. Let's take a look at the markets. First things first, you're looking at another volatile session on Dalal Street as markets saw choppy trade after a good start in the opening session. Now, when you take a look at the benchmarks, Nifty and Sensex ended with near 1% cut, while broader markets saw deeper cuts as both mid and small cap indices also ended with almost 2% in terms of the downtick there. Let's quickly take a look at the sectoral picture as well. It was in fact a sea of red across sectors that you're looking at. Realty stocks witnessed sharp selling as well through the day as realty index ended with over 3% fall as well. When you talk about public sector banks, they also dragged in trade. And you do have the PSU bank index that ended with over a 2.5% cut. So that's something that you're looking at as well. And that's the sectoral picture largely that you have at hand when it comes to some of those sectors. Let's also talk to you a little bit about the rupee, in fact, that weakened. That weakness seems to continue as the local currency has hit a record low of 91.95 against the US dollar today. Now, this of course comes against the backdrop of global turmoil, rapid FII selling and uncertainty around the India-US trade deal. So those are some of the factors that you're looking at that were a key drag coming in when it comes to the rupee. Let's also talk about Paytm. Let's get a little stock specific talk about Paytm. That was down about almost 10%, 9.5% downtick coming in for Paytm. That was under pressure after a key revenue lifeline snapped for the company. And the RBI's PIDF scheme, which bought digital payments infrastructure and contributed 20% to Paytm's operating profit, expired in December with no renewal in sight. Now, a 200 crore rupee annual hit is something that you're looking at looming, and the industry is preparing for what comes next, tighter margins and possibly higher prices as well when it comes to merchants, and you can see that clearly being reflected in the stock as well. 9.6% downtick coming in. As far as Paytm is concerned, let's also talk to you about some of the other stocks. Then Cipla was the one that was in focus on the back of its third quarter earnings. Cipla reported a weak set of numbers when it comes to the third quarter. Profit fell sharply as you do have higher costs that hit performance. Let's also talk about the revenue that was largely unchanged, but operating performance actually softened and margins narrowed through the quarter. Now, what you're also looking at when it comes to Cipla is that the company was also impacted by a one-time expense related to the new labor codes, which further dragged down its bottom line. Overall, though, Cipla in fact ended the quarter on a slightly subdued note with profitability under clear pressure despite a stable top line, and that in fact was what was being penciled in. When you take a look at the counter, that was down about 4% in trade, and previously before the numbers were reported, of course, it was tepid, not doing all that much. Ended the day with a cut of about 4%. That's Cipla for you. But talking about Laurus Labs, then posted a strong set of numbers in the third quarter with net profit nearly tripling to 252 crore rupees. Revenue grew over 25%. EBITDA jumped nearly 70% as well, pushing margins up to 27%, reflecting that little bit of robust performance that you have across its business segments. So that's a decent performance across segments that you're looking at when it comes to this particular counter. But let's keep it going with our coverage of earnings as well, because you do have Shriram Finance that was also in focus, reported a sharp 29% thereabout downtick coming in when it comes to the net profit, coming in at 2,522 crore rupees versus 3,570 crore rupees last year. Meanwhile, when you talk about the calculated NII, that actually grew 18% to 6,574 crore rupees on a year-on-year basis. This is in fact signaling continued strength when it comes to their core lending operations. The stock wasn't doing all that much at close, but the company is also preparing to raise funds via NCDs and bonds, reinforcing its capital position for future lending and refinancing needs. So that's something that you're looking at when it comes to this particular counter. But let's also keep it going with some of the counters that were in focus on the back of their earnings, and it's actually Interglobe Aviation that was in focus here. Posted a better than expected third quarter, even as revenue growth slows to its lowest since the COVID period, rising to about 23,500 crore rupees. Net profit in fact stands at around 550 crore odd rupees as well, weighed down by that one-off cost that you're looking at. That's been a common factor across some of these companies, and you're looking at that one-off cost being at 1,500 crore rupees when it comes to this particular counter. Excluding these exceptional items, though, you do have the profit that jumped to over 3,100 crore rupees. The airline adds 24 aircraft this quarter, while free cash falls noticeably. That's very important because this is the biggest drop that you're looking at for this particular metric in nearly 5 years, and that's Interglobe Aviations for you. But let's also keep it going with this particular counter, because there's actually a bunch of brokerages that have written notes when it comes to this one. Morgan Stanley sees opportunity, calling the stock overweight and highlighting strong profits and an attractive valuation here. Now, on the other hand, you do also actually have Investec that remains cautious, maintaining a sell rating, pointing to weak results and rising costs that could slow growth. So that's something that you're looking at when it comes to Interglobe Aviations. But let's also keep it going with some of the other counters that are in focus on the back of their earnings. So it's actually Premier Energies that is in focus on the back of a mixed quarter that they've delivered. Revenue came in softer than expected, but profits still managed to beat estimates. The company in fact benefited when it comes to the lower taxes, which lifted the bottom line. Its order book remains healthy, and during the quarter, it also commissioned a new 400 megawatt solar cell facility, adding to future capacity, which is going to be a key focus here. Operational performance is something that you're looking at that improved modestly with slightly stronger margins, and overall profit also saw a solid jump coming in here. So that stock though was down about 7.5% on the back of that revenue miss that we've highlighted earlier. So there you go, that's one particular counter that was down and out in trade. But let's also talk to you about Syngene International that was also down and out in trade, reported a tough quarter hit by inventory corrections and one-time labor costs. When you talk about the revenue here though, that has actually dipped slightly, but profits take a sharp fall with net income plunging nearly 90%. On the brighter side though, you do have the company extending its partnership with Bristol Myers Squibb through 2035, showing long-term commitment in its collaborations. But it does look like the street wasn't really impressed with that cut coming in to the tune of about 8% when it comes to this particular counter. So that's something that you're definitely looking at when it comes to Syngene International. But let's also be talking to you about a bunch of brokerage notes actually. Let's put the spotlight back on brokerage notes, because you do have Citi upgrading Aditya Birla AMC to a buy, raising its target to 900 rupees. Now the broker highlights stabilizing market share, improving equity fund performance and reduced redemption trends. Now you do have strong sales here in terms of the efforts being made when it comes to sales. Sustained performance are also expected to drive assets under management higher, making the risk-reward outlook favorable when it comes to this particular counter. So that's something that you're looking at when it comes to brokerages. Let's keep it going with the brokerage story though, because you do have Jefferies maintaining a hold when it comes to Eiffel Finance and trimming its target to 600 rupees, but the story isn't all somber, because you do actually have Q3 numbers actually beating expectations, powered by surprisingly low provisions. But there's actually a twist here that you're looking at. Tax authorities have called for a special audit, a move that could hang over the stock in the near term as well. Meanwhile, on the business front, you do have gold loans that glittered, driving growth. NIMs inched higher and credit costs came in better than the forecast, offering a bit of shine amid the uncertainty. Let's also talk to you about Coforge, that posted a mixed quarter with revenue up slightly but profits down sharply by over 30%. EBIT and margins show marginal dips, while the company also announces an interim dividend to the tune of about 4 rupees per share, offering some relief to investors amid slower earnings growth. Let's also talk to you about Tanla Platforms. Now, this is one counter that has actually delivered steady growth this quarter, with revenue crossing the 1100 crore mark and profit inching higher. The company says that momentum was strong across key metrics, with both its business segments continuing to perform well. Most of the sequential growth actually came organically, driven by higher wallet share from existing clients. Tanla is actually also sharpening its focus on Wisely.ai, with fresh investments aimed at building solutions for telecom operators and large enterprises. Overall, a stable and broad-based quarter for the communications tech player is what you're looking at. Sharpening focus on AI though, and that's one particular story that's quite important here. But let's also talk about Bandhan Bank, that is showing signs of a steady comeback this quarter. Asset quality has actually improved sharply, with gross NPAs dropping to 3.33% from over 5%, while NII slipped 5%. Provisions are down 16%, giving the bank some breathing room. And you did have Street also cheering that, with a 4% plus uptick coming in here. Margins inched up, with NIMs rising 6 basis points to 5.9%. Loan growth came in at a healthy 8.9%. And when you talk about the brokerage view here, the brokerage verdict actually is cautiously optimistic. CLSA calling it a decent quarter after tough ones, while Macquarie maintaining its underperform rating, but does see NIMs improving in the coming quarters. So that's a little bit of an update coming in as far as the brokerage verdict also is concerned. When it comes to Bandhan Bank, that particular counter was up and away in trade. Talking about up and away, let's talk about Swan Defense, that secured a $227 million order for 6 chemical tankers from Europe's Rederiet Sternsen as well, with an option for 6 more vessels. The first tanker is expected to be delivered with 33 months, marking a significant boost when it comes to the company's order book. So that's an update coming in on the order win front. But let's also talk to you about one particular counter that was in focus. Sun Pharma getting its DCGI approval to manufacture and market a generic version of semaglutide injection. The drug used for chronic weight management is going to be launched after the existing patent expiries, boosting the company's portfolio. When it comes to the entire therapy segment, the stock wasn't doing all that much, but of course it was in focus on the back of this particular approval. Let's also talk to you about Zaggle Prepaid Ocean Services, that has inked a major 3-year pact with HDFC Ergo General Insurance as well. Under this agreement, Zaggle will be providing its Propel Rewards, an engagement platform that is a digital solution designed to manage structured incentive recognition and partner engagement programs as well. So that's something that you're looking at. When it comes to this particular counter, the collaboration actually strengthens Zaggle's presence in the enterprise reward space, while giving HDFC Ergo access to a specialized tech-driven reward system. And the company in fact says that the deal is fully domestic and not a related party transaction. So that's something that you're looking at on the deal front. They've also said that they're ensuring full compliance with governance norms. So that's the update coming in here. But let's also take a look at Ixigo, that has reported its lowest revenue in 5 quarters, down about 13.5% in trade. Lowest revenue in 5 quarters. Other than that, revenue is very important to be looking at, because you do have EBITDA that rose 23 odd percent. You did have a rise coming in as far as the revenue is concerned, but that milestone, in fact, didn't cheer Wall Street, didn't cheer Street at all. Margin saw a slight dip, 8.3% compared to 8.9%, but the bottom line was strong, with net profit jumping 56.8% to 24.3 crore against 15.5 crore year on year. So Dalal Street wasn't really cheering that, down about 13.5 odd percent. That stock for you. Let's also talk to you about Sona BLW, that posted a mixed quarter with revenue up sharply by over 38%, while net profit remains flat at 151 crore rupees. EBITDA rises over 26%, though margins dip slightly. The company also declares an interim dividend of 1.6 rupees per share. Let's also shift focus to some business news coming in terms of some updates, though. You do have platinum prices that actually surged to a fresh all-time high as investors rush towards safe haven assets. Amid growing uncertainty in the United States, the metal touched an intraday record of around $2,684 an ounce, driven by a weaker dollar and nervousness over US economic and trade policy. Now, at the same time, there's demand that has outpaced supply as well when it comes to platinum, a metal that is used in a wide variety of sectors. So, Tale of Two Triggers managed to scale up platinum onto that record high. Let's also talk to you about Amazon, that is preparing for another major round of job cuts, with thousands of corporate roles expected to go next week. The move is part of the company's plan to trim around 30,000 white-collar jobs overall. Amazon already cut about 14,000 roles in October, and the next round could begin as early as Tuesday. The cuts are actually likely to hit teams across Amazon Web Services, Retail, Prime Video, and Human Resources. And TikTok has struck a last-minute deal to keep operating in the United States, setting up a new majority American-owned joint venture to avoid an outright ban. Under the agreement, TikTok's Chinese parent, that is ByteDance, will cut its stake to just under 20%, meeting US legal requirements as well. American and global investors, including Oracle and Silver Lake, will take control of the new company. TikTok says US user data and its algorithm will now be protected through stricter security and oversight. The deal follows years of political and legal pressure over national security concerns. And former Google and Airbnb executive Piyush Ranjan, who also served as CTO of Walmart-owned Flipkart, and Mukesh Bansal, co-founder of Myntra, on January 23rd, launched Fermi.ai, an AI-first edtech startup focused on high school STEM education as well in India and the United States. The startup, which has emerged from the Meraki Labs ecosystem, is headquartered in Singapore and operates through subsidiaries in India as well as the US. And you do have Fermi.ai that is available for free on the cloud, as the company remains in a pilot and product discovery phase. The launch comes at a time when the edtech sector is recalibrating after a funding boom and bust cycle, even as generative AI tools, the likes of ChatGPT, become deeply embedded in how students study. All right, then moving on, let's talk to you about Nokia Corporation, that has expressed interest in setting up a global capacity center and additional research facilities. And Karnataka Industries Minister M.B. Patil said the telecom major discussed expansion plans during meetings with the state government on the sidelines of the World Economic Forum in Davos, which is where all of the action is. Nokia, which already runs its largest global R&D center in Bengaluru, is also exploring opportunities in Tier 2 cities. The Karnataka government has assured full support for the company's future expansion. The talks underline the state's push to attract high-value technology investments. And on to some national news then. Prime Minister Modi has flagged off 4 new train services in Kerala from Thiruvananthapuram, including 3 Amrit Bharat Express trains and 1 passenger service, officials said. Now, the trains linking Thiruvananthapuram to Tambaram and, to Charlapalli as well, and also to Mangaluru and Thrissur as well, Guruvayur passenger, are expected to strengthen regional rail connectivity across southern India. So that's an important update that you're looking at there. Modi's address highlighted the role of improved transport links in boosting economic activity and access to services. The event, though, also coincided with the inauguration of broader development projects in the state. And tell you what, with that, it's a wrap on Market Express. Thank you so much for tuning in.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या खुद पे।
Market ends close to 1% lower, with Nifty closing a little above 25,000 levels. The Sensex falling over 750 points. All sectors finish lower. Nifty Realty loses the most. Broader markets underperform the benchmarks. Rupee weakens further to a new record low of 91.96 against the dollar as a result of the global turmoil, rapid FII selling, and uncertainty around the India-US trade deal. Experts say today's sudden fall in the markets also weighed on the Indian currency versus the greenback. Q3 earnings in focus. Laurus Lab reports more than 100% jump in profit, with Cipla's profit drops, while Cipla's profit drops by around 57% on the back of one-time exceptional loss. Meanwhile, Shriram Finance reports a 29% fall in profit, with net interest income gaining 18%. Interglobe Aviation's share plunged over 4% after reporting 577 crore impact of Indigo's flight disruptions on its Q3 profit. New labour codes dragged the profit by 969 crore rupees. IFL Finance shares fall nearly 18% after receiving an IT department notice. Company tells NDTV Profit that search happened in February last year and no evidence of tax evasion was found. Sun Pharma gets DGCI's nod to manufacture and market generic semaglutide injection. Company will launch the weight management drug after the patent expires. Karnataka High Court revokes the ban on bike taxis subject to conditions that the state may impose. Uber Rapido welcomed the court's decision. President Trump sues JP Morgan, files a $5 billion lawsuit alleging the bank shut his accounts over political vendetta. JP Morgan says the suit has no merit and it did not close accounts for political reasons. Trump posts on Truth Social about Greenland, says a structure for is being worked on and it will be amazing for the US. Welcome, this is Profit 360 on NDTV Profit and I'm your host Mahima Vachajani. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's take a quick look as to how the markets did today. Both the benchmark as well as the broader markets did close in the red, of course. The benchmark Nifty 50 closed almost 1% lower. With regards to where, the Nifty 50 heat map is concerned, let's try to pull that up because a lot of counters kind of led to that fall in the Nifty 50. You had counters like Eternal facing immense pressure in terms of where the stock is concerned. Indigo, Cipla, as well as something like a Geo Finance, Axis Bank, Bajaj Finserv, all of these counters ended in the red by about 2 to 4% each. On the flip side, you have counters like DRL, Tech Mahindra, as well as something like an HUL, which kind of kept the Nifty in check and held the Nifty above that 25,000 levels, but we did close below the 25,100 levels. With regards to where the broader markets are concerned, the mid-cap 150, let's try to pull that up, closed around 1.72% lower. The small cap 250 also closed by about 2% lower. With regards to where the BSE 500 is concerned, let's try to quickly pull that up because it was a very stock-specific market. So you had something like a Tanla platform, Home First Finance, buzzing on the back of earnings, gaining strongly up 6 to 7% each. Something like a Bandhan Bank also up on the back of its earnings. Hindustan Zinc on the back of fundraise. Soba as well as Infibeam seeing gains of about 2 to 3% each. But on the flip side, you had counters like Paytm, which did see a downfall of around 8%. Poonawalla FinCorp, Balaji Mines were some of the counters which did see pressure anywhere between that 6 to 7%. So that's with regards to where the markets are concerned. But rupee's weakness continues as it has hit a record low of 91.96 against the US dollar. Now this comes against the backdrop of global turmoil, rapid FII selling as well as uncertainty around the India-US trade deal. The rupee plunged to a fresh all-time low as dollar demand from corporates and importers outweighed early moves and compounded existing pressure on the currency. In fact, we did have a phoner on this, Anandya Banerjee, who is the SVP of Currency and Commodity Research of Kotak Security, tells the reason as to what is the reason behind this fall. Listen in.
Indian rupee is already one of the weakest currencies in Asia. So whenever there is a sharp fall in the equity market, it is seen as a kind of a signal where the speculators come and short the rupee, especially in the option. So that also adds to the pressure. So only when the RBI will step in aggressively, we will see a turnaround.
And do you expect Reserve Bank of India to step in? Because a couple of days back, I believe they had stepped in. And again, after that, we are seeing this kind of downfall. Multiple analysts are saying that the worst is over, but it doesn't seem like.
Right. Actually, RBI, yes, the RBI generally tends to step in whenever there is a 80 paisa to a 1 rupee move, like almost we have seen today. So we would see the RBI step in above the 92 levels, but what is happening is RBI is not selling very aggressively. They are not continuing the selling. They're coming to the market, selling dollars, and then going away and letting the market dictate the price. Because I think as long as the trade war is on, they will continue to use the currency as a tool to fight the trade war.
All right, so that's the view coming in with regards to why we did see rupee hit record low, but the other counter that remained in focus today is Indigo. The share price crashed over 4% in the day after Q3 earnings, and for the quarter, December ended, of course, 2025, reported a 77% drop to the 550 crore against the 2,500 odd crores in the same period. Now, the low-cost airline did take a one-time hit of 1,547 crores. This includes an exceptional loss of 969 crore owing to new labor codes and a loss of 577 crore due to the flight disruption and regulatory penalty of around 22 odd crores. Laurus Labs was also in focus today on the back of its numbers. Did come almost at the end of the market close, but it's time to look at how the earnings fared in terms of the numbers. This pharma major had a good Q3, beat across metrics. Net profit nearly tripled from 92 crore in the same period last year to around 252 crore this time. Operational efficiency stood strong with over 68% rise too. Let's get in my colleague Varsha to give us more details as to how Laurus Lab fared. But before that, the stock also ended 1% higher in terms of where the trade stand. We'll shortly get in Varsha to give us more details on Laurus Labs. But Godrej is another counter where the numbers came in just post market hours in terms of where the numbers stand overall. Q3 financials, consolidated sales saw growth of around 9%. In terms of constant currency, the growth was at 7%. Underlying volume growth at that 7% odd. Standalone volume growth at 9%, where sales grew by around 11% odd. For Indonesia, underlying volume growth grew by mid-single digits and sales degrew by around 3% odd. Overall, EBITDA stood at a growth of around 21.6%, and consolidated net profit also saw growth of around 14% odd. The company, of course, has declared an interim dividend of 5 rupees per share. So that's with regards to where, overall, the stock that is in focus, that is Godrej Consumer, which will be in focus on Tuesday, of course, because Monday is being a market holiday. But next on our list is Shriram Finance. This is a large cap deposit taking NBFC that had a tough ride in Q3. The company's profit dropped over 29% to 2,522 crore as opposed to 3,570 crore last year. However, on the positive side, the net interest income witnessed an annual growth of 18% at that 6,574 crore mark. But the street did not get that quite impressed with these numbers, and the stock ended almost flat with a negative bias in trade today. Sun Pharma is the other counter that remained in focus, has secured approval from India's drug regulator, that is DGCI, to manufacture and market a generic version of semaglutide injection in the country. The injection is indicated for chronic weight management in adults and is meant to be used along with a reduced calorie diet and increased physical activity. Sun Pharma will market the product under the brand name Novel Treat and plans to launch it after the expiry of the semaglutide patent in India. The DGCI note follows the regulator's review of a phase 3 clinical trial conducted in India. Earlier today, we spoke to Nirmal Jain, founder of IIFL Group, about the IIFL tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listen in to what he said exactly.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
All right, on to our segment from Davos. Our managing editor Tamanna Inamdar spoke to Yezdi, the CEO of KPMG India. Let's take a look at that conversation.
Davos is a place for thought leaders to exchange ideas, and of course the theme this year is the spirit of dialogue. But the biggest question on everyone's mind is how this dialogue will take place in the face of so much uncertainty. You know, this is the one conversation point we have to start with when we're speaking to people, and Yazdi Nagpurwala, the CEO of KPMG, is with us. Yazdi, we're at a very interesting location, and I don't know if you can spot it in our camera. We're outside the USA House, which is at the English Church. And all of the action, the queues outside, all of the action really is about what Trump is going to do, what it means for the world. The USA and Europe talking about fresh tariffs. What does this mean for India? We've seen some impact on the markets, but where does India stand in the middle of all of this?
Hi, Tamanna. Let me just say, to begin with, I'm facing the mountains. So yes, you are right. The entire theme is the spirit of dialogue, and which is the main objective of getting all the business leaders in. And clearly, again, you are right. There is a huge amount of uncertainty prevailing, and especially with events lined up for today. And we'll have to see how they pan out.
No, but coming back to the point of the impact of tariffs, if tariffs do go up, I mean, I don't even know which iteration of the tariff war this is. Is second, third, fourth, 14th? Can't keep count after a point. But if there is an escalation of tariffs between US and Europe, and we don't have our trade deal so far, do you think it now starts to affect and impact Indian businesses, or are we relatively more secure?
So I don't know who has a control on tariffs at the moment. But one thing is clear, and there is a fair degree of recognition on that score as well, that India has to rely on domestic capabilities. It has to rely on domestic consumption, along with, of course, our exports and the rest of the world.
In terms of sectors where you see India really in a sweet spot, and you know we're speaking ahead of the budget as well, where do you think that growth comes with? Yes, you have the vantage point of looking at a variety of sectors, so you have some of that kind of an overview of where the growth really is coming from.
If you break it down broadly, for us it's services, manufacturing, and agriculture. Keeping agriculture aside for a moment. Services, definitely, there is a huge focus, and we've got a place in the world as far as talent and services is concerned, and we should continue to hold that. And I say this in light of all the developments we see on AI unfolding, and which will continue to unfold in the next 2 years. I would actually also talk about manufacturing, which has been a focus of the government for the last maybe few years, and that, along with a supply chain focus, will show us results.
And coming back to the point of what we can expect, or what you would hope to see in the union budget this year, considering how precarious the world is and how India can really be resilient.
I would say, without getting into specifics, I'd say we will continue our path of domestic consumption. And you saw a bit of that last year, and that should sustain, and you should see more of that whether it's in the budget or outside of that. But I think the focus that we have on domestic capabilities will continue.
We've also seen a lot of easing of taxation with the GST, rationalization coming in. I would say more than easing, a lowering of taxes. We have seen, of course, what is done with the income tax, now the labor code. In terms of compliance for businesses, do you think that we're seeing a period of maybe transition, which will be a little painful before the fruits begin to show?
You're right. We are in this phase where, end of the phase, you will see that it's much easier to have a compliant business. The approach is to stay compliant. It's part of ease of doing business. But we are in a phase of transition. If you backtrack a few years, all said and done, after GST, there were things to be sorted out, and those dynamics have all now been sorted out. So you could say we are in the second phase of GST.
Okay. What has been the highlight of your Davos trip so far, Yazdi?
It is, I would continue to believe there is dialogue. That happens definitely. India's represented fairly well, and I'm fairly proud of that, being here in Davos. A lot will be unfolded today with the events, but until today it is more around AI, and that is India's sweet spot as well. And one key philosophy or takeaway that I have now started developing is the very fact that India is building physical assets and infrastructure. Parallelly, India is building digital assets and infrastructure. And we are in a unique situation, a unique position in the world where we are building both of them simultaneously. What that means, what the opportunities are, we have yet to see.
I thought you were going to talk about one of the the after parties in Davos, which go on till the late night. That's very much part of what happens in Davos, if you have the energy to keep up. Thank you so much, Yezi. Great to have you here.
Thank you, Tamanna. It's a pleasure being here.
All right, so that was our managing editor Tamanna Inamdar, straight from Davos, talking about how the discussions are going in Davos, and of course everything is about AI going forward. But moving on, NDTV Profit has been traveling across India to capture the mood of industries and people ahead of the union budget, which is to come on 1st of Feb. As a part of our Budget for Bharat series, we reached Indore, the heart of the country's grain market and a major hub for agro-processing. In this bustling ecosystem of mandis, mills and exporters, my colleague Sharad met with one of the region's leading processors, Sri Kailash Grain Mills, to understand the key demand trend shaping up in the sector. Sharad brings us the ground report from Indore.
Hello and welcome to NDTV Profit. We are at Indore and joining us is Pankaj Goyal. He is the Managing Director at Sri Kailash Grain Mills. A very warm welcome to you, and one of the largest players you are in this grain mills industry. Whenever we talk about the grain mills industry, we see about there's going to be a lot of people around, but I'm not seeing a lot of people around. A lot of automations are happening. Just explain us this process. How does this actually happen?
So if I talk about the grain industry, it's really transforming and it needs a lot of transformation. So we are talking about automation, and automation is mainly for consistency, and we are adopting a lot of the global technology.
Right now we are at the starting point of the value chain, I think. How does this process starts working? If you could just explain us.
So cleaning takes place through various equipments. We are removing the dust, we are removing the foreign particles. There are so many things which comes from the farm. And also we are taking so precise things where we are talking about even picking out the color defects in the wheat. So let's say in olden days, हमारी दादी हाथ से गेहूं बिनती थी. So even
तो
that is
separate आप लोग
yeah. So that is also happening with the technology where we have a machines who is already sensing the grains with the color.
Are they separating?
So this is the equipment which is separating the grains in terms of colors.
See, this grain has become almost automated. What's the future here?
So I have visited various countries and in terms of wheat processing industries. So over there we are talking about the dark mills. So dark mill is
You spoke about dark mills.
Yes, dark mills.
That means there is no person involved in the factory.
Yes, there is no person involved in the factory. Even the lights are completely off for the power saving, where they are controlling the cost, and the whole industry is being automated to the tune that a person sitting on a computer can operate the industry.
There seems some concerns are still there. Industry is having some kind of headwinds.
Yes, certainly. I am to say, being an agro-based industries, so always there is a lot of risk associated with the climate, and there is a lot of risk associated with the food security. So currently, the government is bringing a lot of policies every now and then, and we find there is a surprise every day. So we get a notification today, the exports are banned tomorrow, there is some stock limit. We have lost one of the very big market we developed in last 5-10 years.
And is this the export market you're talking about?
Yes, this is the export market. So we were one of the global players supplying to a lot of industries across the Asia and the other regions. But since 2023, the exports are banned.
What's your budget expectations if you had to put into the government? What would that be?
In India, still the value addition is not as per the mark which is happening in the global standard. So to create this value addition, there is requirement of more stability in terms of a government policy, engaging with stakeholders, especially the industries, to have an outlook of the industry also. Certainly, government is doing a great work on balancing the farm side and the consumer side, bringing the price stability. But in this whole game of stabilizing the things, industry is really not able to survive. They're facing a big challenge.
We're talking about the consumer front.
Okay.
That's pretty interesting on that. But to put in perspective, what's so special about Madhya Pradesh and agriculture, especially the wheat front? Over here, I'm hearing a lot of different varieties of wheat. Where is being used? Is it just roti or something more?
So Madhya Pradesh grows very large varieties of wheat. So if you talk about for the chapatis, you have a sharbatis, which are specialized wheat, which is grown for good chapatis. You have a durum wheat, which is used for pasta making, for semolina, for halwa, for upma. You have other varieties of a wheat which are good for bread making.
But Gen Z viewers, they are also very particular about the protein front.
Correct.
They seek protein in anything and everything. So over here, what are the protein related products which everybody wants to know?
So durum wheat is really a rich protein product which is used for making good quality pasta. As compared to the other varieties of wheat which are there in the market, the durum wheat has higher protein levels up to 11.5.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है.
This is going to be shaky footage, guys. Looking for that in the back.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices. It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art.
Hello and welcome. You are watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put the spotlight on one company that you need to have on your radar today. Before we move on and do all of that, it's important to look at which company are we talking about. It's a very, very hot sector, a very, very hot space right now, and that is the EMS sector as a whole. We're talking about EPAC Durable, a key company in the consumer discretionary space. They are key manufacturers AC, but before we do all of that, a little bit of history about the company. It was incorporated back in 2003, began as a contract manufacturer essentially of consumer durables, which includes AC amongst other key products. Now when you look at what the company has focused on, has largely been the room air conditioner space, and even post listing, it was a meaningful part of the company's revenue and margins as well in that aspect. But post that, in 2012, they later transformed into an original design manufacturer. It essentially means that they designed the product for other companies in the AC space like Voltas and Blue Star, and designed the product as well, which is a high margin business. Now, this was of course founded by the Singhania and the Bothra brothers, and we will be speaking to Ajay D.D. Singhania in just a bit but important to look at, what are the other clients that they focus to. So all the room air conditioner clients like Voltas, Haier, Philips, amongst others, Godrej, Daikin, Havels are all the company's clients, and these are just some of them. When you look at the key products though, over the last few years, they have diversified away from air conditioners into large domestic appliances as well as small domestic appliances. The large domestic appliances do include products like washing machines, while small domestic appliances have water purifiers, air coolers, amongst other key products. This has been a key diversifier for the company, and that's very well visible in terms of revenue. Now, it's been a tough year for the company, largely led by a longer period of winter, shorter summer, a bigger monsoon. So AC sales do get impacted, and that's reflected in the 36% downtick that we've seen in the AC revenues. But because of the diversification in appliances as well as the other key segments like components, that has helped the company in somewhat way to reduce the losses. So while the AC segment is down 36% in terms of revenue, the total revenue is down only 15%, led by the high growth for the appliances as well as the component space, and that has been the one key differentiator. Although though, the key problem is that there have been a key concern on the financials of the company because of this aspect. Over the last few years, AC concentration has been key, but that has impacted the company's margins at this point of time. So when you look at the rating parameters with the funds which we'll be focusing on and diving deep into what's impacted the business is going to be key, because the company's share price is down 49% in this particular time frame, and we'll focus on a lot of that. But income statement, balance sheet, cash flow, return ratios, if you're a regular viewer, you know a bit about this. Shareholding, street cred, valuation, and finally, what do analysts actually make out of EPAC Durable? When you look at the first key parameter, that's income statement. Now, between the 3-year CAGR, if you see, the performance has been quite strong. 33% growth that we've seen just in terms of revenue. The EBITDA margins have also been substantially scaling to 7 to 8%. While FY25 did have a blip, it has been a good year overall on a 33 to 48% growth in terms of a CAGR growth, that is, in terms of revenue and profit. So why the neutral rating? In the last few quarters, it's been a difficult performance for the company, and margins as well as net profit has been impacted. Just for this specific quarter, Q3 saw 427 crores in terms of revenue, but profits were impacted, and that's been one of the key concerns for EPAC Durable. We have been talking about the impact in terms of margins, but it's also important to look at the balance sheet as well. Now, we've been looking at the long-term borrowing as well as the other key aspect that has increased, and that's visible here. So while the equity portion and the reserves have actually increased going into H1 of FY26 as well, we saw stagnation of this number post FY25. But you look at the borrowing number, that increased and almost doubled from 62 crores to 122 crores at the end of FY25, and the H1 number is just for H1, so that's 33 crores. So there has been an increase in borrowings, and that's because of the increase in working capital. Lower AC sales, it means that the inventory is higher and a lot of money gets locked into that. Hence, the company had to borrow quite a bit to include and transfer into that particular period, while the cash bank level has been quite stable at 44 crores, but from the FY24 level, it has seen a quiet dip as well. And hence, we've given this a thumbs down, and largely on the back of lowering the company's inventory as well as borrowing number is something to talk about. When you look at the third key metric, and that is cash flow, we have been talking about working capital as well as the impact of the business in terms of the cash flow from operations as well. So when you look at the cash flow from operations, it has increased to a highest level of about 257 crores in FY25. There you see the dip to 31 crores in FY26. And this is, of course, in FY25, this was H1 of FY26, we saw the dip. Also, the operating profit, the operating cash flow to PAT is the other key metric. After a huge, humongous increase, that has again come down to 56%, while the net cash flow has also been largely stable. So there are multiple key factors happening here. While some metrics are positive, the cash flow from operations being impacted is clearly a big negative, but we've given the company a little bit of benefit of the doubt, given it a neutral rating for cash flow as well. The fourth metric though, that's return ratios. Now, for a company the size and scale of EPAC Durable, there has been a pressure on the return ratios, and the story largely was as the company gets bigger, the return ratios will improve. Well, FY22 was a year we've seen reduction of the return on capital employed over the last few years. With the company's advent into larger appliances as well, the return ratios are expected to improve, but that has yet to materialize. So while it has improved from FY24 to FY25 level, we will have to wait for a couple of years at least to look at a meaningful increase because of these initiatives. So hence, we've given this a neutral rating as well. The other key part is shareholding. It's been largely stable, one where the company has shown immense promise in not selling out at any point. So we've seen some selling between March 24 and 2025, but largely a little bit only at 47.18. Company has been managed to keep it. What's also interesting is the increase in shareholding of retail as well as public investors. It's gone from 32% all the way up to 45% and shows the company's interest amongst retail investors. As the share price has corrected, that's also one of the key factors that retail investors do sometimes buy the dip, but it's important to keep track of the metric. While domestic investors have steadily reduced their shareholding, hence while we have given this a thumbs up rating largely on the back of promoter holding, there is a lot to look at in the changes between public as well as the foreign institutional investors and also the domestic institutional investors as well. When you look at the street cred, that's the other key part. It has been a disappointing picture for investors for EPAC Durable over the last few periods. When you look at the number over the last 1, 3 and 5 months, specifically the stock is down 14% in the last 1 month. It has been under pressure, largely led by what's happening in the particular space as well. But even in the 6-month period, the stock is down 34%, almost down 50% on a year-to-date basis. So that's just in the last 15 to 20 days of January 2026, and down 49% in the last 1 year. So investors have borne the brunt for EPAC Durable as they've held on to this particular counter. 5-year performance has to have some caveat that the company listed in February of 2024 since then has given decent returns, but given the large what has happened in the last 6 months, we've given this a thumbs down for now. When you look at final few metrics as we wrap up into looking at this aspect has been valuations. Now, because the stock price correction, FY27, the next year of financial year 2027, looks quite appealing in that sense at 30 times price to earnings for an EMS company, that too. While price to earnings is also visible of that, the EPS is expected to be impacted in FY26. Now, last year the company in FY25 did about 5.6 rupees in terms of EPS. Consensus estimates are down to just 3.4 rupees, and hence the higher price to earnings metric in FY26 compared to FY22, where hopefully the growth comes back. But because of the share price correction, analysts have, while reduced their target prices, continued to maintain their buy ratings, and that's visible in the calls as well. So they are seeing a return potential of almost 33% as we speak, and hence we're continuing to see that positive momentum, at least from the analysts at this point of time. But it's also important to look at what the company also has to say at this point of time, and we have the management which will join very, very shortly on this aspect. So you have seen that the company's performance has been impacted. Q3 also had a lack of growth in that sense, so it's important to speak to the management as to what they think could be one of the key positive metrics for the company. Before we do that, the final ratings, income statement, cash flow as well as return ratios do get a neutral rating. Balance sheet, the company will have to improve on that aspect, while the other key metrics, if we can pull that up very, very quickly, shareholding is a positive, valuation a neutral in that point. For FY26, we need to look at the growth, while analyst as well as analyst recommendation has been a key positive. So the overall rating we get at 4 out of 8 for EPAC Durable as well. But to discuss in detail about what the company is all about, and we have spoken to Ajay D.D. Singhania in the past, let me welcome the MD and CEO of EPAC Durable at this point of time. Mr. Singhania, very good morning to you, sir, and thanks so much for joining in. It's a real pleasure to talk to you at this point in time, because while Q3 was a tough quarter, you did mention a few positives about you that the company has looked at, and certainly that investors need to watch out for as well. But largely my first question, sir, the last 3 quarters, the first 9 months of FY26, you managed to do, a decent performance. But to start us off with, what is the current picture of inventory on the ground? Have you seen reduction in this particular quarter, and is it coming to a level that's largely normalized, or what is the expectation of normality for inventory over the next few months?
So, good morning. In regards to the inventory normalization, yes, Q1 and Q2, because of the unseasonal rains, we had inventory being piled up both in trade as well as our end not getting manufactured. But thankfully, Q3, we saw the uptick, and the inventory movement has definitely started. The order book has been good, and going forward, next 6 months onward, the season sets in. So, the market is very bullish that the past is behind us, and the tailwinds are still very strong for the industry. So at 15 to 20% kind of a growth is what I've been repeatedly saying is on the cards for the industry for the coming 26 season, and shall continue for next 5 to 6 years definitely. So next medium to long term, definitely the tailwinds are very strong for AC.
Got that, Mr. Singhania, and you highlighted that over the last couple of quarters, it has been that the industry has been impacted largely because of higher inventory amongst other key issues. But in the short term, what can be the expectations from Q4? Because it is a quarter where a lot of inventory is built in by the AC makers. Is there expectation that that is visible at least to you in the conversations of the first 22 days of January, that Q4 could be a decent, at least flattish on a YOY basis? How should we see this?
So Q4 definitely we see growth compared to YOY basis. Q3 also has been a growth, and Q4 again we see a growth and recover partly whatever was lost in Q1 and Q2. So Q4 will definitely be a quarter wherein we'll see a lot of recovery happening, although it will not be possible to recover the entire sales loss. So as a whole, on an annualized basis, we see that the industry is going to witness some shortfall as compared to FY25, but yes, largely recover the loss of the previous 9 months.
The other key aspect, Mr. Singhania, has been that last Q4 of FY25, you did about 650 crores of revenue. Now you are mentioning that you are expecting to seeing some growth at least. So could we expect a low double-digit kind of growth expectation? Now I know you can't pinpoint it, but is there expectation of that at least?
Definitely yes. Definitely yes. So what I'm saying is the loss of the previous 9 months partly is going to get recovered, although the entire sales loss cannot be. But yes, we are looking at a ramp up in Q4 and recover a lot of ground here.
Is the expectation largely that with this, you will be able to at least have flat revenues for FY26 compared to FY25? Because it's a big number that you're aiming in Q4 of FY26. You are aiming for almost 700 to 800 crores of revenues. You did about 650 in the last in Q4 last year. So is that the expectations from you as well? And what could be for margins as well, if I can slip that question in as well?
Yeah. So broadly, yes, the guidance is that we are looking at the number you just mentioned. So recover a lot of lost ground on the AC, as well as our other levers are firing very well. So for us, the small and large domestic appliances will component business is something which is helping us cover a lot of lost sales. And at the 3 new diversified segments for us, the LDA, SDA and components are growing at multi-fold. So that's what we see as the growth lever going forward as well.
If you can also talk about, in terms of parts, because we've seen for AC specifically, you have diversified into newer segments as well, and that's very visible in the components growth for you. But before that, has there been increase of raw materials because of copper amongst others? How are you navigating that challenge?
So overall, if we look at the AC prices, there has been correction on 2 fronts for the coming quarter, and definitely the street, I believe the brands are going to increase the prices or have already increased the prices. So it's on 2 counts. One is the upgradation in the BE norm. So that's like the previous 5-star becomes a 4-star and a 3-star becomes a 2-star. So there is upgradation because of the price correction because of that, which broadly like 4 to 5% kind of a price correction. And then another 4 to 5% is the price correction because of the commodities, what was done in the last quarter. So overall, we see close to 10% price correction in AC. And any further impact of commodity definitely gets passed on in the next quarter.
Also, Mr. Singhania, one of the biggest developments that happened in the industry has been the ECMS scheme that has come in. Now, we've already seen a few companies get into PCB manufacturing and get approvals as well for it. what has been EPAC's plan for ECMS? Have you already applied and are awaiting approval right now?
Yeah, so we have floated a separate subsidiary company called Bumjin Audio Products Limited, wherein we are targeting to manufacture a lot of audio parts, components, sound bars. So that's a part of our application under the ECMS scheme. And the structural approval has already been there, and now we are filing for the further complete plan and everything.
Mr. Singhania, if you can talk a little bit about your subsidiary, as you mentioned, is that largely into audio, or is this something specific to ACs as well? If I can just harp on that a little bit, is it also into PCB manufacturing, or that's not included in that?
So PCB is currently under our current company portfolio. So we already do PCB as an EMS. We make controllers and supplies the component. The specific subsidiary we're talking about, Bumjin Audio Products, is a JV with a Korean company called Bumjin. And they specialize in making audio components and sound bars, TV speakers, Bluetooth speakers, and all these things. So we are under currently planned to start manufacturing by the end of 26 or probably Q4 of 27 and start selling these products in India market.
So is there any plans of venturing for ECMS specifically into a new facility for PCB manufacturing? Is that something that you will take it as time comes? Because at this point of time, we've already seen approvals come in also for a few companies. So what is the expectations for EPAC specifically going into ECMS via your PCB manufacturing?
So PCB manufacturing is what we already do under our current facility.
So is there another level of capex that we could expect from you to increase capacity? Because and we've spoken to you previously on this, that India is still very deficient in terms of a lot of parts that go into both for ACs as well as for other related electronic products. So the opportunity is quite huge in PCBs, right? So is that something that you've thought about, and any rationale of not going into it as of now, currently as we speak?
So we currently do a PCB assembly, so not the bare board, but we do the entire component, the controllers. And as we scale up our operations, definitely we'll start doing more of PCBs in-house. So currently we do for air conditions and our small domestic appliances. Going forward, definitely yes. So the expansion and backward integration would continue, and scale up will happen as and when required. So that's something definitely a focus sector as our component business is increasing. Investments in PCB controllers, the assembly lines will continue to be ramped up under the current facility itself.
The other thing, Mr. Singhania, has been your advent into your LDAs, SDAs, as well as components. Is the expectation that all three of those specifically will have roughly around 30 to 35% of your revenue in FY27?
Probably more than that. So we continue to grow in AC more than the market. So if the market grows at 15-20%, definitely we will outgrow the market. But at the same time, we believe that our SD and LD has, and as well as the components, have potential to grow multifold. And in a medium to short term, we are looking that our ACs, like current year, it has come down to almost 60%. We will try to maintain it 50-55% and outgrow our other sectors like the SD, LD and components. So that should overall contribute to almost close to 45-50% in 27-28.
Now, Mr. Singhania, just a couple of key updates, and you've spoken about this to us in the past. The one is on Hisense. It's a big project for you. You mentioned that almost 8,000 crores of revenues could be accrued over 5 years once the project starts. So the earlier expectation was that project would start in December 2025. You've now said March of 2026. Is that timeline on as we speak?
Yeah, definitely that we are on bang on timeline. So we had maintained earlier that December is the timeline where we're looking to start the trial productions. The trial productions have been successfully completed. We have got all the approvals in place, and the current quarter, which is Q4, we are looking at to ramp up productions. So everything is on time. And our ODM sales to Hisense for the AC has already started since last year. And now the Hisense designed product is what is going to get manufactured in the new facility, the new greenfield facility. The facility is ready. The trials are done. Everything is online, on track. And this quarter, probably next month, is when we are contemplating that the mass production will start.
Mr. Singhania, what would be the products that would come out first out of this? Because apart from ACs, there are other related products with Hisense as well. So what would be in, just for FY27, if we can talk about, in that year, what is the expectation of the products to start with?
So the new facility, the greenfield facility, we are starting the Hisense designed air conditions, which are a complete tech transfer from China in next month. And then going forward, washing machines, both top load and front load, are going to start within this calendar year 26 itself.
The other aspect, Mr. Singhania, has been on washing machines. Now, that has been a product that's been with you over the last 3 to 4 quarters, but probably what's happening on the street is that the accretion that was expected compared to other EMS players, and unfortunately you are in an industry of comparison, has been one of the key focal points for investors. So for washing machines specifically, while you mentioned about large domestic appliances being a key growth area along with the other 2 segments, specifically for washing machines, is there any revenue targets that you can give us over FY27?
So the good news I'd like to share here is for the washing machines, definitely, yes, there was some delay in getting the approvals from the customers, but now that is all behind us. From Q4, we have already onboarded, got the approvals for 2 marquee clients, and the production has already started and ramped up in the current quarter. And we see significant quantities and revenue targets. We will definitely revise upward when we do the earnings call for the next for the final annual results. So that's something I'm repeatedly saying that LDA is one segment which we see will grow at a much rapid pace.
And so Mr. Singhania, you've given us a breaking news, at least on the show today. You've given us something that you've not said anywhere before. So I'll take it with both hands. The other aspect of the smaller domestic appliances as well, the expectations that while it is a higher margin business, because of the prices of those products being so low, it's a big volume game, and it's something that's while you have been an ODM player, you've always been a technology player as well. So the volume game hasn't been one which you've fought with other players. With SDA, that strategy changes a little bit. So any rationale that you can give us in terms of entering that hyper competitive space, and what do you make of it?
So our competitive strength here is our, like you rightly said, the scale and maintaining the leadership position in the appliances, the large appliances like ACs and washing machines. Definitely we see will take leadership role in next 2 to 3 years. For small domestic appliances, I think the code we have cracked is not about volumes alone. We want to also increase the width and the basket of offerings. So we have a roadmap wherein we are going to introduce a new product, almost 1 to 2 new products every quarter, and increase the basket of offerings. Because that not only helps us cater to the versatile demand of the customer, but also kind of balance the seasonality and balance our quarterly revenues. So the whole idea of what we have been working on is to have uniform continuous revenue stream every quarter.
Well, Mr. Singhania, you've been very, very honest and upfront to us about a whole host of issues that you are trying to track, but appreciate your time here on NDTV Profit. We wish you the best. Hopefully speak to you once you'll speak to us again when Hissen starts production in March. So a lot more talking, a lot more numbers at that time. But thank you and appreciate your time here at NDTV Profit.
Thank you so much. Thanks a lot.
Well, that's largely, on EPAC Durable specifically, a key company in the ECMS space. In the EMS space specifically, looking to enter ECMS as well. But that's all the time we have on KYC. Stay tuned. A lot more action on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
तेरा ये बिजनेस एक मास्टर स्ट्रोक है यार, है ना? पर मुझे लोन कौन देगा यार?
बैंक ऑफ बड़ौदा देगा तुम्हें MSME लोन बॉब डिजी उद्यम के साथ 100% डिजिटल प्रोसेस, अप्रूवल इन मिनट्स। बैंक ऑफ बड़ौदा से MSME लोन लेना भी एक मास्टर स्ट्रोक है।
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of the conversation. And this year, Suzlon, a leading global renewable energy company powering a greener tomorrow, comes on board with us as we spotlight ideas shaping a sustainable and innovative future. Suzlon co-presents NDTV Ignite at Davos. Your access to the world's thinking room only on NDTV network.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में
-40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
A new era in luxury living. A celebration like never before.
This is going to be shaky footage, guys. Looking for that in the back.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets.
India is the fastest growing economy in the world, has been for a while. But what does that mean for a non-resident Indian? 2025 has not been the best year for markets. Well, not here. The rest of the world has been just fine. But the long-term wealth creation and more importantly, the return potential for India is up there. The question is, should an NRI dedicate a large portion of their investment corpus to India? And if so, what should they bear in mind about portfolio construction, about taxes, and the rules related to repatriation? That is, in the event that they don't intend to come back to India. There are some places where you even get taxed at 0%. Joining me on this episode of MoneyWise is Shalini Sekhri, the Chief Executive Officer of Renaissance Investment Managers. Shalini, welcome back to the show.
Thanks so much, Alex. Always fun to be here. Thanks for having me.
And this is right down your alley. In the past, we've spoken about, retirement, and we've spoken about certain other aspects and inheritance and various other things. But today, I'd like to ask you, you're speaking to a lot of people who invest from outside into India. Is India currently a hard sell for you?
So, Alex, India continues to be one of the most exciting economies in the world. And as you know, markets follow economies. We are in a phase that we call the economic miracle. So I don't know if you've heard that. But it took us, 65 years to add the first 4 trillion of economic output, what we call GDP. And all reports suggest that we will add another 4 trillion, doubling from here in just 7 years. These phases come maybe once in a century in a country's history. And I think we are blessed to be alive at this time and to actually be seeing all of this play out. We all know that India is today the 4th largest economy. In spite of that, we are barely about 3.5% of the world's GDP as we speak. I think in under 10 years, that number would go to 7%. We would be a 10 trillion GDP economy. So I think these 15, 20 years are what we all call the golden years of the economy. And I think the bigger risk today is to not be in India rather than to be in India. As we know, stock markets do follow the economy. And if you look at the numbers, they've actually been stunning. So the last, say, 20 years, 10 years, 5 years, anywhere between 13 to 15% annualized GDP, annualized return at just a nifty 50 level. We're just talking about the index. So when you kind of look at that, I think it makes us the second most large economy with those kind of returns after just the US. So for any international investor, whether a non-resident Indian or even a global investor, honestly, there's no getting away from India. So while there will be a lot of short-term noise, for the first time in history, we've been both in a physical as in a geopolitical war all around the world and an economic war. So when the largest country in the world unleashes trade wars on every country in the world, it is an economic war. So this confluence, I think we've probably not seen since the Second World War.
Yes.
So while there will be all of these noises, we all know that the best time really to start your investments is when you get these very brief opportunities in time to really, enter at the right point. And as we were discussing, smart money or the knowledgeable investor is really taking the bull by the horns, and we do continue to see that money flow in. Maybe the more retail investor is still trying to be a bit cautious, but as they say, you invest when others are fearful, and that's when you really make good money.
Okay, that's well answered. And even if it is a hard sell, I think you're doing a pretty good job, Shalini. So let me ask you this then. And before we get into portfolio construction and what you're talking to your clients about, when you are a non-resident Indian, I suppose what you're thinking about is what you need the funds for. Of course, you need it for what everybody else needs it. But are you going to take the money out eventually? Or are you going to keep it in and move back to India? Is that something that you say is the first thing that you think about?
Sure. So portfolio investing can happen whether you intend to move back to India or not, right?
Okay.
So I think that all options are possible. But when you look at investing in India for NRIs, I would say as important as the product basket is really for them to understand how you route your capital, right? How repatriable will it be? How do you avoid tax leakages? And how is this going to compound in the long term?
Okay.
So I would say this is an equally critical part of it. And then obviously your decision on where to invest will get colored by, do you eventually want this money in India, to come back home when you retire? Or do you want to take all of this back out and have the money, freely moving between countries?
So let's look at each of these, because you talked about, and I hope I remember correctly, you're talking about the route, you're talking about repatriability, and you're talking about tax leakages, right?
That's right.
So let's talk about each one of these 3 issues so that everyone's on the same page. When you talk about routing of the money, you're talking about how you deploy money in India. How do you deploy money in India?
Sure. So there are 2 basic types of bank accounts that you would set up in terms of the infrastructure you require to really invest in India, right? One is the non-resident external account, or what we call an NRE account. This would be for money that you have not earned in India. So any money where the source of funds, which has been earned outside India, is freely repatriable. So ideally, you need to set up an NRE account in India, bring money in there from wherever in the world you have that money. You can invest it. And in most instances, the principal plus the return can be freely taken out because this money to begin with was not earned in India.
You said in most cases, are there restrictions?
There are, for example, in rental income, the rent, because it's earned in India, though your original purchase of the house might have been from, money earned overseas, the rent has to come into an NRO account.
Okay.
So the other kind of account being a non-resident ordinary account. This is for income earned in India. So you might have, say, sold shares in India, you might have received an inheritance, you might receive rent.
So what about
from a
dividend
property.
income?
So dividend income on shares that you have here would come into an NRO account.
Interesting. Okay.
Yeah.
Okay. So go ahead. So you have to create this NRE account, but you also have to have an NRO account.
That's
if
right.
If you're earning, and so if you're, I would guess if you're earning through mutual funds, you would generally not suggest a dividend option. You would choose to have it as a growth option in most situations.
So there are other interesting exceptions, right? So NRIs, for example, if they have NRO money in India, which is invested here, the dividend and interest part is freely repatriable.
Oh, interesting.
There's no cap. Otherwise, as you know, for even NRIs to take money out, there is a, liberalized remittance scheme limit, which is $1 million a year, right? But this does not count under that limit. So which means that if you earned a dividend or an interest income, you can take it out from shares. Or, a fixed deposit interest, for example. So there are all some of these textures to, some of the underlying. But largely, I would say the broad rule is if you have earned this money outside and brought it into India, into an NRE account, you can take it out freely. Alternately, you've earned it in India and it needs to stay in an NRO account and it's for your use in India.
Okay, so this is routing. Where does gift come into play?
So gift is a big subject. So this is a new concept that was set up a few years ago, right? Basically to rival the great financial centers of the world like Dubai, Hong Kong, Singapore. So what the government of India has done is it has set up something called GIFT, basically stands for Gujarat International Finance Tech City.
Yeah.
It is
gift
set up,
is easier.
Yeah, it is. It's set up as a free trade zone, so to say, for financial services, which means that while it is in Gujarat, India, and within the borders of the land, it is treated as an international or a foreign jurisdiction. And it has its own rules and regulations, and they have tried to make it extremely attractive from a taxation and an ease of doing business for NRIs and other foreigners as well to come into India and invest in India. Similarly, Indians can use this route to also invest internationally. So Gift City is another place that you can use, and taxation is an incredible benefit if you use the gift route, and we should talk a bit about that.
We will eventually, but so in terms of routing though?
So routing, clients can set up a multi-currency bank account in Gift City. So there are all the large banks, including ICICI, HDFC, all of these that are today present there. You can open a bank account there, and you can bring your money into a Gift City bank account. This is again fully repatriable. There are pretty much no restrictions because in a way it's not in India, right? By its, conceptually. So that becomes again very easy for clients to move money in and out. And all the large broking houses, asset management companies, mutual fund houses have set up operations there. So you can really access a very wide range of products by using the Gift City route. One is to bring money, but then also have access to investment products.
Okay, so therefore, is there anything else that somebody should know about routing money into India? If you have the option, should you opt for gift as opposed to a traditional route?
So it really depends on what you're buying and whether those options are available currently as we speak in gifts. So that's number one. Secondly, it also depends on whether you eventually do want to move back to India, in which case you may be fine using the NRE route, because then you've already established a banking relationship in India. You get to know your bankers, you start building a corpus there. So to that extent, I would say if you're unlikely to return to India, gift would be the logical choice. If you do intend to move back, then I guess it really depends. India and an NRE account may also make sense. But I think from a tax benefit perspective that investors are currently enjoying, gift may still make sense. You can eventually still bring the money to India, right? From
Interesting.
Gift. Yeah.
Moving to the second point which you made, which was repatriation, and you've already spelled out the fact that a lot of the money that you invest from outside in can be repatriated fairly easily. Is there anything else that somebody needs to bear in mind? Are there off cases that you need to pay attention to? And two, if you do decide to move back to India, when you do, is there a process for you to follow to move those monies outside of the NRE into a normal account?
So eventually, to take your second question first, the NRE accounts or a NRO account eventually will get converted to a resident India account, right? So eventually, your status, once you come back, one of the first things you do is really to fix your KYC, because you would now have a resident Indian address as opposed to an overseas address. Your bank account status needs to change. So all of those processes have to be, gone through eventually. And the same account tends to morph into the resident Indian status. So that's all easily done, via the banker. In terms of routing, I would say I think we've pretty much covered everything. Clients, of course, will also have to kind of take advice, I would say, from their advisors back home. Are there any complexities in terms of, so while we do talk about, say, preferential taxation, very often, in spite of having a double taxation avoidance treaty, because the rates of tax are different in different countries, the investor back home may still be liable, say, to some taxes. So he may decide whether he wants to route the money back, he wants to leave it in India. So all of those will come into play, because there are a lot of countries where tax rates are significantly higher than what we have for, say, capital gains in India, right? And they would need to pay that differential tax back home. So
because you speak about it from the perspective of a Dubai or the the UAE, and you say that, it's 0% there, so it's a big benefit. But the opposite is also true. You could have situations where long-term capital gains is more than 12.5%.
There certainly are many, many countries where it's much higher, in excess of 30-40%.
Wow.
Yeah. So that's something also the investor needs to keep in mind, that where does it make sense for him to hold this money? And especially when investors are planning to move back to India, it's a lot of decisions around where you want to crystallize your capital gains. Is it beneficial to do it when you're still a resident of your current country, or is it better to then change your status and then, create your capital gains? So this is tax is a complex subject. It depends on where you live and, all of that. So
the beauty of these investments, of course, is that you can pay tax whenever you do redeem, and there's nobody holding a gun to your head, hopefully, and asking you to redeem. But so we've kind of covered the tax aspect as well. Do you want to talk about the gift city angle here with regard to the tax aspect?
Sure. So there would be, I would say, 4 or 5 key parameters where there are differences between coming into rupee products in India onshore versus investing through Gift City. And I would say the big game changer is that capital gains tax, if those funds are registered as what's called a specified fund under a certain income tax regulation, is subject to 0% capital gains tax. So let's take an example of, say, a Dubai investor in this case, right? So he invests in a mutual fund through a fund of fund structure in, say, Gift City, and that fund does only one thing: it buys units of an Indian mutual fund. Now, because of the tax breaks or the tax advantage given, when an investor redeems his units in, say, Gift City, there'll be no tax on the Indian end because there's no TDS for Gift City. And Gift City has no tax, and Dubai has no tax.
Right.
So you've used a mutual fund vehicle, you've used the Gift City benefit, and the fact that you're from Dubai or Singapore, Hong Kong, these are countries where there's no capital gains tax. In effect, you've had a zero tax capital gains investment.
Wow.
Which is really, huge. So that's on the short-term and long-term capital gains taxation. The other big benefit is that in Gift City, there is no tax deducted at source. So for non-resident Indians, one of the big disadvantages is that whatever is the tax payable, which can be as high as 30% when you redeem a debt fund, it's all deducted at source.
Right.
And then if you have to claim it back, you have to go through the whole, tax process of claiming refunds.
Yeah.
Gift City, there is no TDS, which means you're then just subject to whatever is the tax in your own home country. So if it's a rate that's better than what it is in, say, India, you have this huge benefit that your money is not held back at source. Right? So that's a second huge benefit. Thirdly, there is no GST in Gift City.
Okay.
Which means that all your management fees that you are paying to managers like us do not attract that 18%, GST, right?
Okay, which is a considerable saving.
Which is a saving. And then there's also the STT, which is a transaction tax every time you buy and sell an equity share, which does not exist in Gift City.
So there are several considerable...
So there are several benefits which have been given because the government is obviously trying to promote Gift City. They are wooing actively, Indian fund managers who are based in, say, a Mauritius or a Cayman, all these traditional places to come to gift.
So one of the aspects and the reason why perhaps the government is doing this is because it wants that foreign capital to come through, right?
Absolutely.
It wants dollars to come through.
Yes.
And so therefore it's important to talk about currency as well.
Yeah.
We're speaking at a time, Shalini, when the rupee has been facing a spate of terrible weakness. And this is a sign of the times. The external scenario is uncertain.
Sure.
Tariffs and the threat of tariffs exists. And so with that context, the rupee has slid, but it also means that a foreign investor investing in India has lost out to a certain extent. Is that something to bear in mind, considering that with inflation where it is, and of course last year is an aberration, or the current scenario is an aberration, but if it hovers around that 4.5% level, at some point there is going to be rupee depreciation, so you'd have to shave that off of what you're earning, right?
Off your return. So about 3.5% has been the long-term rupee to dollar depreciation, right? And I think most international investors do keep in mind that that is going to be a leakage on the return. And in spite of that, the kind of returns that you see in India is so compelling that that still makes a lot of sense. A lot of people do ask us that why don't you hedge the currency risk, right? And the simple answer to that is that the cost of hedging is so high, and that's a fixed cost, it's not open to interpretation, is higher than actually the average depreciation of long-term depreciation. So you're taking that hit, which may be much higher than what the actual currency depreciation might be. So if we as active fund managers in India are telling our investors that you should expect 15 to 20% rupee return post fees, for an NRI investor who's looking at this depreciation, he would probably expect something like a 12 to 15% return, right? The other thing to keep in mind, Alex, is that we've already had a very sharp currency move recently, right? So we keep telling our investors who are looking to invest now that a big move is already behind you. So from a perspective of building a new portfolio, looking to
it's a good time.
Taking exposure to India now, it's potentially a very good time because we're not